pick bottoms on these markets. Very volatile at the moment, although I'm the perma bull. So I think for me on the S&P, the fact we closed above that 1.133978 is quite a bullish indication. So I'm probably going to, I might, depending where we open, I've not looked at the market prices. I'm tempted to get long on this triangle wedge back into range and then just pin my stop below here. So it'll be a swing trade because it'll be placed below the lows of 4 dailies. These are just 3 trade ideas I've got at the moment. Nearly come up sort of target around this sort of zone here, I think. Maybe the high up here at 4087. So I might potentially get long on the S&P, trying to catch a bottom and get burnt like everyone else. The DAX is just looks awful to me. A lot of people trade the DAX, but that just looks, because you see the gaps on the DAX on the real market, that just looks absolutely untradeable to me. So I'm not going to touch that. I don't know how everyone's trading the DAX at the moment. Well done if you are, because I don't see anything on the DAX other than just a horrible bit of triangle wedge in here. But yeah, that's my brilliant analysis on the markets there. Those 3. I'm looking for a long on the S&P. I'm looking to get short on cable today, just on more of a daily swing trade type of thing. That's all I've got time for at the moment. I ain't got time for scalping and 5-minute time frames because of the thing that I'm going to talk to you about today, which is our prop firm. So I will crack on with that, Simon, and see how it goes.
Sure.
Yeah, if anyone's got any questions, do let me know in the chat. GoToWebinar, glad to see it back. I'm a bit biased. I've used GoToWebinar since 2013, so pretty interesting for me. Right, okay, so yeah, I've run TradeRoom Plus since 2013, and now I own a prop firm, similar but better than the likes of FTMO and things that you may have heard of. And we call it Funded Trading Plus, so you can see where the inspiration from that came from. And that was all around us sort of developing these 4 pillars a long time ago. You know, we had the live trade room, we had the education, profitable strategies, and we had the support and mentoring in place, which is fine. You know, you get that A, B, and C, but you know, just because you have these 3 things, it doesn't mean that people who are successful at trading have access to capital and funding. So over the last year, my partners and I have developed pillar 4 in order to give talented people access to capital and funding, because you know, you earn money, you earn me money, just like normal traditional city brick and mortar prop firm setup. So it's ideal for us, and I'm managing quite a lot of successful traders at the moment who have access to capital and funding and get access ever increasing capital and funding once they pass some of our trading tests. So why do people choose to partner with funded trading firms? Well, the reason is, you know, they can make larger profits than they other ways would, because they've got more access to more capital. 0 risk on losses, as it's not your capital. Any losses you incur on the account are covered by the funded trading firm. This is psychologically quite important, because we've all been there for our own personal trading accounts where we've you know, we're really fearful of losses because it's our own money. You know, people are in positions where they need the money in order to live, and that's quite not a great deal of pressure that people can generally manage. So that we find that helps people trade. There's also the accountability element as well. Again, we've all been there of our own trading accounts where you can do what you want, and you only have yourself to sort of account to, and we all know that we all do sorts of mental tricks when that's the case. Whereas when you're trading with someone else's money, you have a degree of accountability, whether it's based on rules or having meetings with the fund managers or anything like that. So generally makes people trade a lot better. I always trade better when I'm accountable, which is one of the reasons I did the live trade room for so long. If you trade in front of people, it's hard to do stupid trades because they hold you to account to it. You can scale much faster by able to have multiple funded trading accounts as well. Now the issue with the funded trading industry is, you know, I know it back to front now, all the models inside out, all the firms, and unfortunately the majority of it is built on a loser pays for the winner model. Much like brokerage, to be fair, funded trading firms operate very similar to most brokers that just warehouse most of the flow, take most of your losses, and then occasionally have to pay out winners. So that's most of the funded trading structure that existed previously. And they put all rules in place. The more rules you put in place when people are taking funded trading evaluations, the more likely you are to fail. Failure for trading news overnight, not having a trade open long enough, not trading enough days, not trading certain markets, certain position sizing, charge you every month until you pass, charge you for data feeds, have rules that are designed to make it extremely hard to pass, have rules that are hidden deeply in the terms and conditions, so you break them accidentally, have rules on live accounts that are different to the evaluation, don't put your trades in the real market, do not actually pay you out when you're in profit, give traders too much leverage, so they blow their accounts. That's a very insidious one. People think that they need 100 to 1 leverage, but if you give them $200,000, you don't need 100 to 1 leverage because your buying power is far too large. You can happily work with 30, 20, or even 10 to 1. The more leverage you give traders, the more likely they are to blow up. Think about the ESMA review from 2017, was it? That limited leverage across Europe. That was done to stop traders blowing up as quickly, so we reflect them. And the list goes on and on, essentially. And we found that, I don't know why there's a white border there, that's offending me. We found that traders that get funded were unhappy with the providers. And as someone developing a funded trading firm, I went through pretty much every major firm out there, did all their tests, or did all the rules and things like that. And I could see the sort of same things that people were complaining about on Discord, on forums, on Facebook groups, on Trustpilot and other things like that. And that's because most of them are unfair. And we thought, surely it can't be that difficult to have a fair firm that balances sort of, stopping terrible traders from passing, but at the same time rewarded high quality traders. And the big one was the time limit. Most of these things have time limits. It's like you must make 10% in 30 days. And we all know that, to do that consistently is pretty much impossible, or would be the best investors in the history of the world. So all these insidious, sneaky little rules, time limit's been the most majorly complained about one. We were like, well, can we build something that doesn't have these? It doesn't try and catch people out. And that was sort of the challenge, if you like, approaching it from a trader's point of view rather than from a business point of view, if you like. We didn't think it was too much to ask. And like I say, after doing months of research, no funded firm actually existed that ended up being fair to the traders. The traders I spoke to from the background that Simon has spoken of, the traders that I've been working with and helping to train since 2013, they wanted a firm that had simple, transparent rules built for the long term, for swing traders and short-term traders. Not being able to hold over the weekend is another rule that a lot of firms have. Didn't have monthly charges, with a good broker, not some backwater broker that's just going to specialize in taking your money off you. We wanted to build a firm that actually wants profitable traders rather than, the old loser pays for the winner model. We want as many people to lose as possible and pay as few out as possible, which reflects a lot of brokerage. We didn't have rules that design make traders fail, and put people in the live market with real money and pay traders the profits. A lot of funded firms have gone under through I'm not going to go into details of how the back end infrastructure works, but basically just hoping that traders were going to fail, and when they got some big winners, it took them out because they didn't have the money to pay for them, so it just disappeared with everyone's money. So that's good. So we built our own, and that was around the feedback from traders we knew across the internet, have been working with for years. And then, the most important thing for us is just a case of, rules. What rules? Let's get rid of them. These are all the rules that people complain about that are either there up front or they're hidden in the terms and conditions, or they change between the evaluation and live account. Don't have maximum time limits, don't provide excess leverage, don't have minimum trading days. We've got traders who pass in one day, sometimes one trade, which is a bit scary because you want to make sure they perform live, but so be it, that's what happens. Don't have minimum holding times, don't limit trading strategies, we allow hedging, no minimum days for withdrawing profit, no minimum percentage for withdrawing profit. That's another trick. You'll see a funded firm will say, you have to wait 30 days before you can withdraw your profit. Barriers to withdraw profit is another way that minimizes profit withdrawal, whereas we have people literally passing and withdrawing in short periods of time. I mean, I try to encourage people to take the time a little bit more, but you get people who want to pass a little bit quicker, and that's fine, to be honest. That's the way they do it. Like I've got interviews with people like this guy here. It's a small thumbnail. He passed on day one and made $4,000 day one, $4,000 day two, and then withdrew some of it. Same with this Marcus, a chap from Germany as well. All these interviews, same people who do want to do things a bit more aggressively, but they're people who have managed that. I would suggest taking your time, but what do I know? We've got a scaling plan that can be achieved and activated. That's where you can increase your account, double and triple it, and quadruple it, depending on your trading quality. Once you make a certain percentage, it's not a scaling account that requires lots of heavy rules to pass. We get rid of a daily drawdown. We don't have consistency rule. We allow expert advisors. We allow news trading. News trading, shall I say, that's another sneaky little rule. If you try and trade over NFP, your account gets closed. We refund the challenge fee once 10% of the profits made in the live account. No minimum trades. We allow holding over the weekend on one of our programs. And where we do have requirements not to hold over a weekend or to use a stop loss, if that is breached, it just closes the trade, it doesn't fail the account. And most importantly, we placed live traders in the real market, so the profit's always there. So if we have someone who makes, goes long on the Nasdaq at 10 lots, 20 lots over the weekend, and the war in Ukraine comes to a welcome end, and the Nasdaq gaps up 500 points, then that profit is going to be there for them, and I hope that happens. both people, someone making a huge fortune, and obviously the war ending in Ukraine as well. So that. So we built Funded Trading Plus in order to help traders succeed and give them a fair crack at the whip of making profit. We currently, I don't know what this white line is. Anyway, we currently do 3 programs. I'm not going to talk through them all, but we keep them relatively simple. For example, people can choose what type of account size they'd like to potentially acquire on the live market. And then we just have very, very simple rules. We have an overall drawdown of 6%, an overall drawdown of 3% in order to test a trader's skill, and they have to make a 10% profit target. It's as simple as that. They are the rules as much as they go. And you can see as we scroll down, it gives you examples of the rules, and that's it. It's as simple as that. You've gone to most funded providers, you've got to read pages and pages of rules, but we want to give people a fair crack at that. This is our most popular one. This is the one that gets the highest pass rate, is this Experienced Trader Program. If you're not familiar with the prop space, appreciate some of this might be a little bit new to you, but we do have some YouTube videos and things that do go to a more in-depth explanation. We have an Advanced Trader Program, which is a 2-phase program as well. If people like traditional, if you're familiar with the prop space, the familiar 2-phase evaluation, where you have to pass 2 tests. You have to make 10% on the first test, 5% on the second, but then you do get significantly more drawdown in order to do that. And 90% of people who pass phase 1 pass phase 2, to be fair. It just sort of corroborates their skill set to consistently make money. And finally, we have a direct funding model if you just want to get straight in the market. If you're in the US or if you're not allowed to trade CFDs, this is a very popular one for you as well. Most of these direct funding models have got 50-50 profit share. We start off at 70-30, and then we end up at 90-10 once you've made a significant. The more profit people make, the more of a profit share we give people. So that's something that we do in order to sort of reward traders for sort of trading profitably, trading successfully. So that's quite an important thing for us to do, to make sure that traders are rewarded when they're doing very, very well. Excuse me. Withdrawals, big sort of question that we do get asked. How can I withdraw? When can I withdraw? Obviously, traders need to be able to trust the company and make sure they get money. And once you get a funded trading account, you can withdraw a profit of a maximum of once per week, which is generally higher than everyone else. Bank account, PayPal, or crypto as well. We offer 4 or 5 crypto payments that can be made to purchase programs and also withdraw as well. So we try and be as flexible as possible. What markets do we offer? Got forex, major and minor pairs, got indices, commodities, 250 cryptos that people can trade, which is the most cryptos out there, I think, for the broker we work with, although I generally just stick with the high caps. I don't understand the medium or low caps as much. But all the sort of regular markets that you'd wish to trade. MT4 and MT5 are our standard trading platforms. We are going to get TradingView in the next 4 to 8 weeks as well. For those who enjoy TradingView, that can be plugged directly into MT5. And we've partnered with 8cap here. This broker here, we've got exceptionally low spreads, best in the funded trading industry, very low slippage, very low swaps. Big section of markets, global license, customer service is solid, and it's also the broker we've got our personal account with as well, and that's really, really important to us. Is to trust a broker that we work with as well. And the growth of our firm has just been insane. We've had to just constantly taking on more employees at the moment. Never thought I'd have employees, but we've had to take on several new employees just to deal with the demand and make sure we keep the account creation, make sure we do our payouts in 24 hours. I think we're already, as best as I could judge, it's quite a small community, the prop space, in terms of the owners and people. I think we're already in the top 10 in terms of scale in the world after 6 months. So we're quite surprised how much support we've had, but since we've got rid of all these rules that other firms have, it's been very much welcome. So yeah, thankfully and gratefully very busy for the support from people, but at the same time being able to fund people and give out some chunky payouts of thousands, sometimes tens of thousands of dollars to aspiring traders who have not had access to the capital but have the trading skills has been very pleasurable. I must say. Always wanted to do this, just never had the route and never had the technical sort of support to do it. But we've got a technical director who's a mini genius, so it's always been a dream of mine to do this, and we finally managed to do it, and it's going exceptionally well. We offer a scaling up sort of solution with our thing. Just give me one moment. I've just closed my web page. There we go. So most scaling plans in the prop industry, and I make no apologies for always using the general industry as a reference point, because that's what I did when I designed it. So for example, the biggest firm out there, if you want to scale, you have to make 10% for 4 months in a row, and then they'll scale your account. That's just nonsense, because no one's ever going to achieve that. You can promise whatever you want if people aren't going to achieve it. Whereas ours, if you make 10%, you start off, let's say you start off on a 100K account, you make 10%. And then we'll double it to 200K, and then 400, 800, 1.6, 2.5. Got a couple of people. We've got one person on the 1.6. We have what we find is that people find there's sufficient buying power at these levels, 2 to 800K. It's like, well, I can trade the NASDAQ at 20 lots. Why do I need to trade it at 40 or 80 or 100 in this volatility? So we tend to find a lot of people just aren't bothering to scale further because they don't need it, which is interesting to see. They don't need the ego of seeing these figures in their MT4, MT5 account. Personally, I trade 100 when I do my live sessions. I just trade with a 100K account. Gives more than enough buying power for me with the markets that I trade. So. But it's all, it's about flexibility and what people want to do. So that's our scaling. Very, very simple. Make 10%, we'll double your account size. It doesn't have to be any more complicated than that, really. Instead of I should have quoted some other firms' rules, but no. I've got a trading dashboard that shows all the metrics and history that people have. So people can follow the drawdowns, have a look at their open risk and things like that. It doesn't have anything on there that's not there. Again, no other rules. But yeah, so how's it going so far? Well, pretty well. We've got a very active Discord at the moment with a few thousand people in, I think 2,000 or 3,000. I'm not sure how many is in it, but at the moment, but a really good trading community in here. This is one of the most important things for us. This is all our payout proof that people post for us once they get paid out, and you can just see paying out just plenty, just pages and pages of traders getting paid out thousands of dollars for, I can just keep scrolling up, and you'll just keep seeing more and more of these. But these I could just keep scrolling for a long time, and that's only a fraction of the people who pay out. But that's what it's about for us. Every time people are posting that payout proof, that's fantastic for us, and we've got quite a lot of funded traders. Our model is absolutely solid. There's always profit to pay people out. So you do your modeling, you do your worst case scenario, which you're unlikely to have, and if it still works in theory, the reality turns out to be much better than the worst case, as you'd expect. And with thousands of traders, tens of thousands of trades forward testing, then we know the models work, we know it's solid, we know there's always money to pay people out. So it's probably the best time to get on board with it, to be fair, right now, as we're still continuing to grow. So why us then? Well, pretty much just to go over the same sort of rules. We don't fail people for all these nonsense things here. It just, these are the things that I had to get rid of when we designed a funded trading firm. Is just, we don't fail people for rules that are designed to catch people out. We've got a good balance between testing sort of traders' abilities if they're not good traders and they're not going to be responsible with live capital and they're not going to get any. Whereas at the same time, if people are patient, sensible, good traders, then they're going to get capital. To be fair, even the ones who pass in one day who aren't necessarily what I'd describe as patient and disciplined, if we're not going to not give them an account if they pass according to the rules, so be it. We'll take that risk. That's part and parcel of the business. We have clear and simple rules. Actually want profitable traders to trade in our capital. We want people to trade overnight and hold the weekend. We have crypto traders who just trade crypto on weekends and don't trade in the weekdays because of return back to the office. We've got every sort of trader, scalpers, swing traders who take 3 months to pass a funded trading test with low position sizes. Just every type of trader we try and accommodate. And that's why we give people a limited time to pass an assessment. There's no 30 days, which is very common, trying to put pressure on you. Put people in the real market, give people a dashboard in-depth analysis, largest selection of cryptos for those who like it. People can use expert advisors if they want, providing they're not arbitraging or abusing demo environment for the evaluation. We put people on excellent broker or low spreads to allow people to easily scale up to $1 million and beyond. We let people withdraw profit weekly. And we also offer some support. If people say to me, Simon, can we have a one-on-one session to go through some trading? I say, yeah, no problem. That'll be $1,000. No, I don't really. I say, yeah, no problem. We'll find time for that. So I do have sort of one-on-one sessions with our successful traders. Sometimes we'll interview them on YouTube as well, but that's slightly separate. But you know, we want people to succeed. We want people to make consistent profits, because that's, to be completely transparent with you, the only way I'm going to make serious money from this is if we have a large group of consistently profitable traders who we take a small slice and an ever smaller slice as they get more profitable of their profits. So you know, we're completely incentivized to have people who are profitable traders in that respect, unlike the majority of the interested as well. So if anyone's interested in that, has anyone got any experience of doing any funded trading tests? Any other firms? Are people familiar with the prop space and how it works? You know, its base principle is that, you know, you pay to take an evaluation test for the account size you want. You pass that, and then given a live account, which you can withdraw profit from. That is the fundamental sort of premise of that. There's lots of futures ones in Americas which are just ruthlessly designed to make people fail. Stay away from those ones. And I'm talking from first-hand experience of trading every single one of them. The European ones are better, the CFD ones are better, which we're under the umbrella of. But again, a lot of those are designed for people to fail. So a few people in chat saying they've done certain competitors and things like that. Someone saying the time limits, no time limits. Yeah, that's the biggest amount of feedback we get is no time limits is what people really enjoy. So that is probably the most important thing that we do offer, are 0 time limits when it comes to this type of thing.
I mean, what does the test involve? What is the test, and you know, to pass the bar, as it were?
Yeah, so quite simply, if we take our one-stage evaluation test, you know, what someone does is they purchase an account. They have to make 10% on that account. So if you purchase 100,000 evaluation, you have to make 10% on that. If you do, you pass the test. Now, what you have to avoid doing is losing 6% overall and losing 3% on a daily basis. So this is where the demonstration of risk management comes in. So we want to see people be able to stay within that volatility guidelines, and then, you know, if they're able to make 10% without hitting either -3% in a day or 6% overall, then we'll be able to give them a funded account. Now, what happens on the funded account is there's a phase 1, essentially. It's not formalized or hard built into it, where they have to avoid doing this 6% and 3%. But as they make more profit, this 6% drawdown grows, because the profit then starts adding to the drawdown. And at 10% profit, we get rid of the daily drawdown as well. So what you end up then is having is just building up more and more capital, having more and more room to trade, and able to grow and snowball and sort of trade exponentially. So very simply is, can you trade on an account? Can you make 10% without losing 6% in a row on overall, or without losing 3% in a row on a daily basis? Now, you know, what I would recommend as a top tip is just to position side appropriately. You don't need to do it in a day, you don't need to do it in a week. Take your time. Risk 0.5% a trade, risk 0.25% a trade. Take your time with it. Instead of rushing, we get a lot of traders who want to rush things, and that is that sort of ends up making them fail in that respect. And that's what we want to try and avoid when it comes to prop firms. But yeah, 100K is probably the sweet spot. To be fair, if I was a customer, that's the one I would buy, if I'm perfectly honest. And then just scale it to 200K after making 10% profit. So that is our evaluation. It all just comes on MT4, as you'd expect. It says MT4 and MT5. TradingView will be welcome at the moment, but it's quite simply, you know, this is, I don't know whose account this is, probably one I was reviewing, but yeah, it's quite simply a case of just Oh, this is someone who passed. Yeah, this is a pass account I was reviewing. So this is someone who did a $200,000 account, $220,000 account, and you can see these are sorted in P&L. But this is just someone who, you know, just took lots and lots of trades, you know, using an EA, just lots and lots of trades, just adding more and more profit, just some small losses, some small winners. This is someone who trades gold exclusively, some cluster of discipline losses, and then further trades, you know, hundreds and hundreds of trades over about 30 days, and then eventually managed to take a few more, and that ended up adding up to $20,000, which was the 10%. But you can see all their position sizing because they're taking little scalps out of the market. They were never in danger of getting anywhere near 3%. They were never in danger of getting anywhere near that 6% because they just traded sensibly, little and often. This is exactly the type of person who I want to give capital to because I know they're going to be responsible for it if they trade in this way. It's someone I think we set up yesterday on a live account. This is just me logging into their account in order to assess it. So that's just, you know, it's just trading on MT4 as you'd expect. I mean, this account's dead now because it's the evaluation account, so I can't trade it. But that's an example of someone who passed using a very safe methodology where they just had a nice steadily rising equity curve rather than just sort of trying to go and doing that type of thing that we've all been there. So they're the type of traders we generally welcome a little bit more, but it all depends on what people want to do really and how they want to trade. We try and give people the freedom to express their trading ability how they see fit. We don't really want to put limits on that as well, so that's quite interesting for us.
Okay, so when you said there's no time limit, then we talked about 30 days. How do you measure the overall?
There's just simply no time limit. There's simply no time limit. People can take as long as they want. You know, most firms enforce a 30-day time limit, which is designed to pressure people thinking, oh, I need to hit my profit target before 30 days is over. I need to hit my profit target. I'm going to take bigger and risk, and that just makes people fail. It makes them repurchase accounts, and that's exactly what it's designed to do. So that was the biggest complaint we saw there out on the internet. So the first thing we did was get rid of time limits so people can take as long as they want. You know, we've had people who started in December and are still trading. We've had people passing the day and everything in between. So, you know, people can take as long as they want because we all know what life's like. You know, sometimes events get in the way and you can't trade as well as you want, or, you know, something happens, or the markets are just horrible and they don't suit your trading strategies. So rather than being pressured to trade market conditions that don't suit you, you can just sit out. You know, we've had people who trade certain market conditions and then, you know, something happens in the world and it just sends everything skew-if, for want of a better phrase. So they just sit out for a week, you know, and come back when it's a little bit better. And if you put in time pressure on people, then that becomes it takes away that option for people. And like I say, it's any design. I've been very critical and borderline cynical, but having gone through the entire industry last year and built one myself, I know exactly what these rules are designed to do. So I just want to sort of shout out in a matter-of-fact way.
Couple of questions for you, Simon. Richard, first of all, if a stop is not entered with a delay of a minute to place one, is the trade automatically taken out before one can mechanically put in the stop loss?
It depends on the program. On the experience program, there's no stop loss requirement. I haven't got the questions box, so apologies for that. So apologies for missing that. I haven't got the questions box. Yeah, no, the stop loss is not required on the experience program if you don't want to trade with a stop. The advanced does require a stop loss, but if it's really a hindrance, I'll take it off for you. You know, you can just message me and I'll take the stop loss requirement off. But in terms of how it works technically, yes, it should be placed at the point of execution. The system that detects it is scanning every 30 seconds or so. So you might get away with it, you might not. It's not a lottery you want to play with. And it's only a soft breach. It would just close the trade. It wouldn't fail you. But if you wanted to do the two-phase advanced and the stop loss was really a barrier for you, I can remove it on a sort of case-by-case basis. So that's one thing we can do.
And is there a maximum, again, this is Richard's second question, is there a maximum percentage of capital risk limitation per trade where if the trade is taken out more or less automatically?
No, I mean, you're subject to the leverage, but when you've got that much buying power, you know, for example, forex, 100,000 times 30 is your buying power. So no, your limitations of lot size and therefore, you know, risk is just limited by the leverage as it would be at any brokerage. You can trade far too big than you'd ever want to. So no, there's nothing like that. There's nothing like that in place. I mean, there are some occasional hard limits. With the broker, I think, for example, you can't trade more than 10 contracts on Bitcoin, but you'd be insane to do that anyway. So, but most of the time, there's no limitations for any sensible trader.
Okay.
Nothing hidden like that. It's literally as upfront as it is on that screen. It's as simple as that.
Kapil says, he's asking, can you scale up starting from a 10K account?
From a 12.5K, yep. We've got people doing that. So yeah, 12.5 to 25 to 50 to 100 to 200 to 400. That's perfectly possible. You can start anywhere on the scaling ladder. We've got someone who started on a 12.5. They're now on a 200, I think. I've not spoken to them for a few days, as far as I'm aware, they're still in the game. But yeah, people do choose to do that. Start off, just dip the toe into with a small account and scale up. That's perfectly possible. We try and keep everything as consistent as possible across the programs, across the evaluation and the live account. The only thing that changes on the live account is that you can get rid of this daily drawdown at 10% profit. So that gets scratched off. That's the only thing that changes, but that's for the traders. That's for the traders' benefit, really, which is really important for us. Any other questions are there, Simon?
Yes, yeah. Does the program allow trades to be left open over the weekend?
Yeah, the experience program does, yes. Experience allows you to swing trade. The advanced and the masters have a Friday close, and that's because the risk profile, to be transparent with you, I don't want live traders holding massive longs on that on indices and FX over the weekend where there's gap in. Whereas on the experience program, that's a risk we can absorb. So yes, that does. When we do the Friday close, it closes. It only closes for an hour a week. It's I believe 1700 EST, so about 9 o'clock UK. It closes for an hour, but then if you're trading crypto, the crypto markets open back up an hour after, so you can trade those all weekend. So the experience is, if you're a long-term swing trader, you want to hold over the weekend, that one's for you. If you're not bothered and you want to close over the weekend, then you may prefer one of the other programs.
Okay. If you haven't traded before, what's the best thing to do? Is this something that people who don't have any trading experience, or would you recommend they go on a course? Have you got? I know you said you give some support, some one-to-one support, but for absolute beginners, where would they go? Would you recommend that they do something?
Yeah, I mean, I think it comes back to the 4 pillars that we spoke about. I think you need to learn your profitable strategies. You need to be consistent, and then sort of acquiring capitals further down the line. I think you need to it's the old run, don't run before you can walk type thing. I mean, so that would be my recommendation for that. Just take your time, learn how to trade, and then you can leverage. Once you've got the trading skills, you can then leverage those to acquire capital. That's what we've always done with traders, although previously had to send them elsewhere. Now we can keep them in-house. So that would be my recommendation there.
Fantastic. And just a final question here from Richard on leverages. Is it the same as the UK or the EU regulated ones?
They're both the same, from what I understand. Yes, we do. We have discretion to put leverage or whatever we want. We could offer 500 to 1 if we wanted, but we don't want to do that. We've 30 to 1 FX, 20 to 1 indices, 2 to 1 on cryptos. Cryptos are not actually offered in the EU and Europe anymore, and they're banned to retail traders as a derivative, but we can still offer them because it's our professional accounts that people are trading. So yeah, we deliberately picked the leverage the same as ESMA, the ESMA review, because that was the sweet spot that the regulator found after looking at hundreds of thousands of trades, the balance. But leverage isn't an issue with buying power. If you've got a 100 or a 200k account, your buying power is absolutely massive. 30 to 1 and 20 to 1 leverage that's the same in the EU and Europe is only a problem when you've got really tiny accounts. You're trying to trade with like £1,000 or something like that. But when you've got a large account, leverage isn't an issue, and you can work it out for yourself with your lot size. It's basically your account size times your leverage divided by the instrument value divided by the contract size, and that gives you your lot size. And you'll find that being able to trade 40 lots on the S&P like we have some lunatics do is absolutely crazy. You never want to go that big.
Fantastic, absolutely.
So, we've done you a nice discount code, Simon.
So I'm just reading the quote. Okay, the UK representative margins, probably one strategy still. Yeah, Richard. I think Richard's just coming back on the UK, the regulated margins. Okay, well, fantastic. So, I mean that's it's fantastic. Yeah, discount code for round the clock trader.
Yeah, you just bang it in here on the checkout. Better work. It does. Beautiful. Yeah, there you go.
So that'll give you a discount. Everybody wants to get started. Now that's the cost of more or less the test. And
yes,
if you
yeah, that'd be the cost of the test. And then you get an email that sends you all your account details. You log in, trade, make your 10% profit, then we give you a live account. It's as simple as that. It's usually a 24-hour turnaround, usually less, depending on the time of day it passes and when our accounts team are working. But yeah, we've tried to take what is a very complex and convoluted industry and just simplify it and make it fairer. You know, a balance between not allowing reckless traders to get capital, but at the same time rewarding and backing those who are profitable and professional traders. It's you know, no more complicated than that. Exactly what I would want if I were looking for a funded firm, and that was always the ethos, because obviously I've got the trading background, not the business background, and it was a case of what would I want to see as a trader if I was doing one of these, and we just answered that question. It's no more complicated than that.
Okay, just again on the Dow 30 and Nasdaq, what would be the maximum margin that this program would entertain?
Okay, let's work it out. So you're talking about lot size, because that would help. So you'd have, 200,000. This is the calculation to do, times 20. So that's your buying power, 4 million buying power divided by the Dow. What's the Dow at the moment? 30, around it's 32,000 equals 125. So that would be your potential lot size on 4 million of buy. Divided by 10 to your contracts. So you'd be able to put 12.5 contracts there on the US 30, 12.5 lots, which is absolutely massive size. We do have a lot size calculator on our website if you want more information about that. So let me just go on to find that blog for you, which can potentially be linked if you so wish. Let me find it. There we are. So yeah, I mean, if you want to, I'll put it in chat. Who is it? Is it
this is for Richard.
Yeah, I've put it in there for you, Richard. I think I've sent it to everyone. Oh no, I haven't. I've sent it to the wrong people. You have to forward it, Simon. Right. But this works it out, and this shows you how to work it out. It shows you your maximum contract sizes and things like that. So on the S&P, you can do 93 lots on a 200k account, or 11 or 12 on a. So pretty similar to what we just worked out. Obviously, the price has changed slightly since we did this table, but it just shows you how your lot size and position sizes. It's not for any sensible trading. There's no limitation. Margin is a separate question, because the account sizes are so large. You're never going to run into margin issues in terms of being margin called and things like that. But it's just a case of trading sensibly. Even at 10 to 1, you get far too much buying power, but people wanted more, so we gave them 30 to 1 or 20 to 1, depending on the markets. But yeah, trust me, it's more than enough sizes. I mean, we had one guy, we had this chap here passing one trade. He did 10k in one trade over about 3-hour swing trade on cable. So it's more than enough in order to do that.
Is that? I mean, not being sort of facetious, but is that one trade could that not just be luck on his behalf, that he's just?
It could, but we have to. If we're gonna do a program that doesn't have time limits, then we have to absorb people who get lucky, as well as as long as the core amount of live traders are sensible and trading sensible, we can absorb the statistical extremes who are quite lucky like him, if it is luck. But at the same time, sometimes you get these people who pass in one day or very few trades and they end up making a small fortune on the live side withdraw and then probably blow up, but there's, you know, they might have spent $500 for an evaluation, but then they make 10 grand, so they're pretty happy, and you know, I'm pretty happy because I take a small slice of that. But at the same time, sometimes people come up and they blow up and they lose live capital, but that's just the nature of the beast. As long as the core volume of trade, you know, the core volume of traders are sensible, then it's no problem whatsoever. We're always going to get some statistical extremes. That's you know, the nature of the beast.
Now, I can imagine you've got, you know, all these stops, these fail safes in place, because the more people you're taking on, you must have a sort of a compliance role to play to make sure that someone's not going to lose too much of your money.
Oh, the automated system in the background is absolutely rock solid. It's constantly, you know, monitoring MetaTrader and MetaManager for the data and parameters, and sending that data to the trader's dashboard so everyone knows where they are. So yeah, if people lose too much money on the live account and breach the live account rules, then it just gets breached and terminated straight away. So it's not a manual process. It is fully automated and instantaneous. So we're not going to wake up in some horrendous position. It's been tested with thousands of traders and tens of thousands of trades. So it's a very robust system. You'd be surprised. We do have quite a few staff, but you'd be surprised how few staff we have, given the volumes of traders that we're managing and we're processing, because of just how reliable the automation is. That is a really boring way to end the presentation, but that's true.
There's the Kapil's coming on board, but it looks like, thanks Kapil. The code just to is RTCT. Just put that in as the code. I think you demonstrated that already, Simon, on the phone.
Yeah, we give you 5 as a thank you. Give you 5% off. But yeah, I mean, my advice for people, you often get advice of how to pass funded trading tests. I've passed loads of them. When I failed a few as well when trying to just take your time. There's no rush. There's no rush. We get people like, how fast can I get paid out and pass? It's like, well, you're going to fail. It's like, just take your time. You know, we did no time limits for a reason. If the markets aren't right, or a trade's not, you know, you're not feeling a trade, not necessarily, you know, uncomfortable trades are sometimes the best trades, but if you know your strategy, you know deep down you shouldn't be taking a trade, just don't do it. Just walk away, come back tomorrow. You know, we want relationships with, excuse me, I'm full of cold. I want relationships with traders that's going to last months and years. We're not looking for boom and busters who, you know, pass, fail, you know, take another test, pass, fail, pass, fail. You know, we want people who are, you know, got that long-term perspective and not just thinking in sort of minutes and days in terms of like P&L, even if they're day traders. So that would be my advice: is just take your time. The traders who stayed with us the longest are doing the same boring things that you hear all time and time again from every trading educator, you know, risking a small amount of money, being patient, planning the trades, not et cetera, et cetera. And then when you look at the data that's released by the two biggest firms in the prop space, they release a very clever limited data set, but you can draw inferences from it. The people who are getting the most withdrawals from them are the people doing the same boring things that everyone talks about, you know, managing your risk, planning your trades, not over trading, not revenge trading, all the stuff that you're going to hear lots and lots of times today, are the things that the most successful traders are doing. So there's no reinventing the wheel.
Just while you're still on, Simon, Kapil's just come back and says, sorry, this coupon is not applicable. As a problem. Is he on the right page?
It might be, unless you're on the master. We can't discount the master because we literally have risk straight away. Jump on our live chat, bottom right of the website. You'll see our live chat, and we'll get that sorted for you. It should work, although it should work because I didn't create it. If I'd created it, I'd expect it to break. But yeah, if you jump here at the bottom right, oh, there's Michael. You recognise him, don't you, Simon? Yeah, jump. And James and the other support staff. So just jump on Tidio at the bottom right here, and a human will pick it up relatively quickly, and we'll get you sorted. But that's the same for anyone. If anyone has any questions they've thought of after this presentation, or you don't think I've answered something thoroughly enough, or I've not been clear in my presentation, then please just jump onto our website, bottom right, fundedtradingplus.com, and we'll we'll do our best to answer them. Or if you even want a call, I'm not too rammed today. I've got a blood test shortly, but apart from that, I'm not too rammed with meetings today. So if you want to call,
before you gave the blood, you advised you be lightheaded before you had your biscuit.
Well, yeah, I've got vitamin D, unlike you, living in sunny Spain, I've got a vitamin D deficiency, so it's something that I'm just addressing at the moment. Yeah, I need to come and move where you do. But your vitamin D is wonderful.
I've got too much. I can give you some if you want.
Mine's at 22. It should be at 25. So I can have 3 off you. Can I get 3 off you? That'd be great.
Well, listen, Simon, you've done fantastic, and it is good to hear the progress, because you last spoke on Round the Clock Trader in February, and I know you've already getting started. You already had some success. Clearly, there's more people coming through the ranks, which is great to see, and they're enjoying it as well. It is a fresh approach from our point of view to hear you describe this. I know we've met and had some beers after these shows and so forth, and I know that you come from, are you happy for me to share that you were in the police force before?
Yeah, that's what I did. I was 19, I was like, best job in the world.
Well, I think this is where a lot of this comes from. It's solid, no nonsense, this is it. And it comes across to us as a fresh approach, and it feels very personal as well, because I know that there's James and Michael as well in the chat. So if anybody has any problem getting in touch with Sam, using these codes, or anything, you can get in touch with me, because I'm on a Skype group all the time with the chaps here. So we're all very well connected. Listen, Simon, thank you so much. Again, I hope your blood test, hope it's painfully free and quick, and we will come back to you. We've recorded this session as well, so everybody that's here, if you want to go back and watch the replay, it will be after we've finished tonight, which is we don't finish about 8 o'clock time. But
sure. Would you be kind enough to send people our Discord as well, Simon? I think that's quite useful. Yeah. That's quite useful. People, I'll send you the link. 1 second, because I know a lot of people actually want to come in and actually see the real traders and speak to them, rather than just. I put it in the go-to chat. I've also put it in the Skype chat as well. That just might be what usually people ask for our Discord, and you can come and ask questions and interact with people who are actually going through the programs who've actually passed.
That's a good idea.
Rather than just talking to someone who obviously owns a company who's got a vested interest.
No, well, I know. That's good to see all that testimony. But as you know as well, coming through the feedback that I get here at Round the Clock Trader. Fantastic. Well, listen, good luck, Simon, with the funded trading. It's really good. Do Trade Room Plus, do you still offer some of the training and the live?
Yeah, we still offer the courses and training, but because of just how outrageously busy the funded has been, I've had to, after 9 years, I've had to temporarily suspend the live trade room at the moment, just because of how crazily busy the prop firm has been. I couldn't do both at a high standard, so we'll probably bring it back at some point, but I just want to make sure this is done to the highest standard possible. So yeah, after a long time, stopped doing the live trade, but it's been interesting having a little break from trading. I'm still swing trading, but not scalping or anything like that, so it's just interesting. Like, have you seen the markets, what it's doing? I'm like, no. which is weird after being plugged into it for so long, but I'll get back to it. I'll get back to it at some point. I'm going to come to do the beach laptop thing one day.
They're very few and far between, the people that actually do that.
Yeah,
was on lookout for Kapil. He says he's applying for the master account, so that's great.
Awesome, so welcome.
Make sure he gets the help he needs to get started.
I will, yeah. If there's any issues, jump on live chat. Also, I'll make sure you understand the rules fully. You've got a video on drawdowns and things like that. I'll explain it a bit more clearly if you need anything to help you. But yeah, just don't rush. Make sure you understand everything fully.
Kapil, come back to us as well. Let us know how you get on as well. It'd be useful to hear how you progress. Between maybe now and the next Round the Clock Trader. So good luck. Fantastic. Simon Massey from Funded Trading Plus, thank you very much indeed. I'm going to take back the presenter role now, and we will wish you luck and hopefully hear from you again soon.
Yeah, thank you, Simon. Have a great day, everyone. Hope there's plenty more content for you to learn from.
Thanks again. Okay, bye-bye for now. Take care. Great to start off our day, and I can see a lot of people joining us in the last 20 minutes. We've been talking about funded trading programs with Simon Massey of a company called Funded Trading Plus, whereby if you can trade, you are able to pass a test and access larger funds to increase your returns, your trading returns. So great session there. If you missed that, you can catch up on the replay. But if you're just joining us now, welcome. This is Round the Clock Trader. This is a live full day summit with myself, Simon Campbell, and I have 10 invited guests to share their knowledge with us today, which is great because there's such a lot of ways to make money trading and investing in the markets today, but it's sometimes difficult to know where to start and what to do, and not to be distracted sometimes by a lot of the noise. Now, our next guest, Adrian Kenny, works for a company called GlobalBlock, based in London and Canada, I believe the HQ is. They are a cryptocurrency exchange, and Adrian is an enthusiast and expert in cryptocurrencies and NFTs, which you can't seem to open up the computer or newspaper these days without reading something about non-fungible tokens. They have become very popular in a very short space of time, I think almost eclipsing the cryptocurrency markets, or perhaps now, since there's been a bit of a drawback, shall we say, in cryptocurrencies over the last couple of months. So I've invited Adrian to come again and talk to us, to tell us about NFTs. What is the way to approach the NFT market as a retail investor, and how can we do it? I mean, we're not looking at this as an enthusiast's point of view. None of us are coders or technicians, but we want to learn about, does the NFT market offer us a way to make money? So I'm very pleased to say that he is here and in the room. Adrian, if I first of all just unmute you, you're self-muted at the moment. I'll make you the presenter, and we can bring you in.
Hello, can you hear me?
Hello, yes. Adrian.
Hello, how are you?
We're great, thanks. We're in. I've actually passed the presenter role over to you now, so we're looking at your desktop. I didn't do that so quickly, I'm afraid. Sorry. But
I'm not sure if you can see me, so I'll just share. There's me.
Yes, I can see you. There we go.
Let's see if I can. Hello, good to see you, Simon. Thank you very much for inviting me on. I'm just looking to share my other screen, so if I can just work out how I do that. Yes.
Sometimes you can drag the window across if it's two screens, or you can.
Yeah, maybe if I swap this around.
So just before we get started, we've got quite a few people here in the room, which is great. Good morning to you all. Welcome. Just the first question, this is predominantly a financial trading event. We're looking at a lot of forex and stocks and commodities and the indices. This NFTs though, does anybody have any experience in NFTs yet? Just to get an idea, just give us a simple yes or no or interested. It's a fascinating market, and I've invited Adrian. I'm very pleased to say that he's here to give us a little overview of what the opportunities are in the market. I'm not an artist, or I'm not a sort of a technician, but I'm interested in it because I can see that it does offer some real world benefits for having NFTs of real assets and real intellectual property. But I'm interested as well as how investors can make money from that. So
yeah, great, good. And I should imagine most people are interested from that perspective, which is always good. As much as I like pictures of monkeys, etc., it's always nice to be able to turn something like that into a little bit of cash, which is always interesting. Can you see my screen? Am I showing the correct screen now?
I can see it, yes. If it just a little wide, yes. If you're hearing and seeing Adrian and the slide, and then we can get straight into it, would be great. Fantastic. Okay. Great, super stuff.
Perfect.
So let's
Okay.
why is everyone talking about NFTs?
Indeed. So, hello. Thank you very much for the wonderful introduction, Simon. As Simon said, my name's Adrian Kenny. I work at a firm called GlobalBlock. We're a digital asset and cryptocurrency brokerage, and we're based in Mayfair in London. We've been operating since around about 2017. And our sort of bread and butter is your traditional brokerage. So we buy, sell, store, and transfer cryptocurrencies for a range of clients, from your sort of entry-level retail, but really where we make a difference is our hand-holding, service-led sort of high end of the market as well. So we sort of cater for everything in between. We have an app and we have a platform in which you can sort of trade and buy cryptocurrencies in the traditional sort of market sense. But what I'm here to talk about today is a sort of new, well, I say new, it's been around for a couple of years as well, but a different aspect to blockchain technologies and their application, and that's around NFTs, or as Simon rightly mentioned, non-fungible tokens. So I gave some of this in February, but it was a little bit long. So I've condensed it a little bit, and we're just going to give a bit of an overview so you can understand some of the sort of main concepts within NFTs. First of all, what one is, where you can buy it, how they're sort of valued, where you store them, a little bit of an overview of the market, which is pretty choppy at the moment, to say the least. How I go around looking at sort of research and due diligence around projects, what to look out for, because I'm sure sort of hacks and scams are something that you've heard about. They've made some sort of big headlines, and then a couple of examples of some good projects that you could sort of we can take a look at. So I suppose the first one is really just a brief overview of what an NFT is. So as Simon said, it's a non-fungible token, which is an interchangeable unit of data on a blockchain. Now, what that actually means is the important part of an NFT is the token. So what that token does is it associates to a real world asset or something tangible, but it also can associate to something digital. So if you put an image on the internet, store it on a file, you can create a non-fungible token which always associates your ownership to that asset, and you also own the IP and all the rights, and that's tracked on the blockchain forever, so no one can deny it, so it's yours. So what that gives you the ability to do is to buy and trade digital assets, whereas before you created an image, it went on the internet, anybody could replicate it, and no one knew what was the original, no one didn't know what the original was. This now gives provenance to digital items, so you can then sell them as originals, because we're human beings and we want either the first, or we want the scarce, or we want the sort of unique. So that's one of the things. So and again, that leads into the value of an NFT is in its uniqueness. So that's what sets its value, the fact that there isn't more than one of it. So you've got Bored Ape 357. No one else has got Bored Ape 357, only you. You've got that IP, and you can use that for a number of things. There's restaurants built up over this in the last couple of months with Bored Ape restaurants, and you get to ride their sort of their hype, so to speak. I've just included a couple of images here. Obviously, a lot of the market is driven by memes. So crypto being a bit anti-establishment. So there's the classic sort of Doge meme up there. That's a fairly prominent. In the bottom right hand corner, we have Beeple. This was the most expensive NFT ever sold by a gentleman called Beeple, who's been taking pictures of himself over a certain amount of time. He created a collage. This collage sold in Sotheby's for tens and tens and tens of millions. It's yeah, tens of millions of pounds. So the sort of scope for the price ranges are quite astronomical. So that's a little bit of an overview of what NFTs are. Before I dwelled on that a little bit more, but I think we should probably get into how you go around buying them. So for this sort of conversation, I'm going to focus mainly on Ethereum. So when a token is released, it can be released on a number of blockchains. It doesn't, for this instance, it doesn't really matter about the blockchains, but basically they're built on top of smart contracts, and different blockchains can do different things in different ways. Ethereum has a certain amount of transactions that it can provide in a certain amount of time. Other networks can do more, can do less, can do it in different ways. So there are some sort of technical aspects to what your NFT is built on, but the way that they're structured, they're pretty much the same on all networks. What would be different would be around your sort of gas and transaction fees. Oh, sorry, go back one. Would be your gas and transaction fees. But it doesn't really have a huge effect on the actual product that you're buying. It does affect its price because different networks range to get different sort of pricings and valuations. Ethereum has by far the largest volume, which has by far the largest secondary market. So from that perspective, I'm going to focus on Ethereum for this conversation. So when you buy an NFT, you will need a cryptocurrency to do so. So in this instance, I'm going to talk about the Ethereum blockchain. On top of the Ethereum blockchain is the most popular market, which is called OpenSea. Each other blockchain has its own marketplaces, so I'll be talking about OpenSea because we're talking about Ethereum. So the OpenSea marketplace, which I will just pull up here. So this is the OpenSea marketplace. Hopefully you can see this on my screen. So this is just really the biggest marketplace on the market for NFTs. So it's one of the ways in which you buy NFTs. Buying and purchasing NFTs is probably the easy bit. So this is quite a new project. It's called Goblin Town. So this launched a couple of days ago. It's already sitting at around 1.85 ETH. If we go back, you can sort of see, because it's the blockchain and all the transactions are tracked, you can see the way it's been climbing. These are the sort of average sales that have gone over the last few days. So it launched on the 22nd, and in 4 days we've gone from I can focus in there. We've gone from a mint price of 0.9. So 0.9 ETH at today's sort of market prices. So we're probably looking at around about this minted for around about $40 to $80, and it's currently sitting at around, so what's that to? So it's sitting at around $4,000. So you're talking 6 days, you've had an increase, quite a considerable increase. And the reason why I sort of highlight that is because that's what minting means. So when you mint an NFT, you'll join the project at an early stage. You'll mint one off the blockchain, which means you create that intrinsic value. So it doesn't exist. You create it. It's yours. You're the owner of it. The blockchain tells you the owner of it, and you get to mint it for a smaller price. Then when that's being part of the whitelist, then when they go onto the open market, which is OpenSea, the secondary market, and people purchase them from there, they go up in price. One of the other techniques that projects do to sort of build value in themselves as well is by creating hype around them. So they get lots of people to join their whitelist. They're all getting it at a reduced fee. They oversubscribe the whitelist by N times, sometimes 10, 12 times oversubscription to the whitelist. So that creates a huge demand for the secondary market. So once that whitelist is gone, people then sell them for a little bit more. So say you bought them for $100, you sell them for $200, you're happy with your 100%. That individual buys it for 200 and immediately flips it for 300, and the price sort of follows that way. One of the things to watch out for is around sort of gas and transaction fees. So when you have a mint going on and an NFT is released that day, lots of people will be trying to get onto the network and purchase that NFT. And what that can create is network congestion. So like I mentioned earlier on, different networks can operate at different speeds. Ethereum's transactions per second is quite restricted. considerably by the other offerings on the market. So the more congested that gets, the more expensive the gas fee becomes. So you just have to. It's another thing to be wary of. But that's essentially how you buy them, either from an exchange with a cryptocurrency, on one of the sort of networks that you've decided on, be that Ethereum or Solana, etc. But for this instance, it's Ethereum. You have to be aware of the gas fees, how in which you mint them, and sort of what the whitelist and open market, how that sort of fits in. Really, one of the sort of, this crosses into due diligence, but when you pick better projects, they will have more efficient contracts. Now, I won't go into the technical details, but a smart contract, what NFTs are built on, are bits of code that tell certain transactions or interactions with a blockchain what to do. They can't be changed. So this gives some obvious benefits from a finance perspective. So they're immutable, they're uncorruptible, and they will only follow what's written in their contract. So this has far-reaching sort of applications for across the world. But one of the reasons I mention it from an NFT perspective is when they're created on an NFT, if that contract or the code isn't efficient enough, it can clog up the network if there's not time delays, etc., etc. So how efficient that contract can be one of the ways in which you can save a little bit of money when big sort of hype projects are going to market. So one that I would sort of talk about is a project that I was in called Hate Beast. It's one of the, we actually did that through GlobalBlock. Now Hate Beast went on the market for 0.4 ETH when I bought one, and the transaction fee was 2 times what I paid for its initial mint. Now, they only had a short window to mint, so I didn't have a chance to wait for that sort of network to become less congested. I had to buy at that moment. So I had to sort of make up a decision in my head. Did I expect that my investment would go up more than my gas fee would in a short space of time, so I could flip it before I wanted to hold on to it? So that's one of the ways in which gas can sort of affect your ability to get your return on investment, and gas can become very expensive. I've minted projects for $400 or $500, and the gas fee's been closer to $1,500. So things can get very expensive very quickly. And if you think the actual asset that I would later be flipping, I'd have to make 3x just to cover my gas fees. So yeah, that sort of gives you a bit of an understanding of the gas.
Can I sort of play devil's advocate a bit? I mean, who's buying these things? Because we're not all of a sudden there's turned the world into a market of art lovers.
Indeed.
Who are
indeed. So
things.
I suppose it's a difficult one to sort of say. The mainstream NFT sort of conversation is growing daily. It's one of the reasons why you very kindly asked me to come on here and have a chat, Simon. So some of the biggest brands on the planet are entering into the NFT world, and the reason for it is because NFTs sort of take up a couple of technical aspects, and I'll sort of go over this a little bit quickly. But NFTs can fall into 3 sort of categories. You can have a simple picture, like a Bored Ape, or if I go back a couple of slides, you can have a simple picture like a Hape or a Bored Ape, which is over here on the left, the guy in the blue, and the bottom left is a Hate Beast, and up the top is a CryptoPunk. Now they are profile picture or PFPs for NFTs, but NFTs can be so much more than that. So what a huge drive for at the moment is there could be NFTs are memberships. So you buy an NFT, and then when you log into a website, that NFT authenticates that you are who you say you are, and you get some benefits from holding that NFT. So that's one of the other things. Another thing is NFTs can give you access to things. So there's people buying them because they know that they'll go up in demand, and they are the only way that you'll be able to access things. So people sell music tickets for NFTs are another thing that go up in price. But a lot of it is hyped around the metaverse, I've not decided to touch on this too much this time, but NFTs will be your gateway to the metaverse and Web3. So what metaverse and Web3 are, sort of high level. Metaverse is an interconnectable world that we'll be able to access through VR, headsets and sort of augmented reality. So think of computer games like Call of Duty, sort of Grand Theft Auto, Sims, big computer games like that, where you sort of can walk around worlds. The idea was born in the 90s from a guy called Neil Stephenson, who wrote a book called Snow Crash, and it was a dystopian sort of world of people living within a virtual world called The Road, which was one big long road, and everybody's houses sprung up on it. The metaverse as a concept is essentially mirroring that original life imitating art type conversation, and NFTs will be your gateway to those metaverses. So you have the likes of Sandbox, you may have heard of from a crypto perspective, Decentraland. Snoop Dogg bought a house in Decentraland. So those houses, so Snoop Dogg bought a house in a metaverse. That house that he bought is actually an NFT. So that's one of the reasons that this market has exploded, and because a lot of celebrities have got involved in this metaverse sort of concept. They've wanted to be part of the brands that are building the metaverse in the Web3 space, I suppose. Bored Ape are the most famous. They're currently sitting at around about 80 ETH a pop. They've been much higher. There's been a bit of a correction lately across all markets. I'm sure everybody in this call is very aware of.
I mean, but these things depend on then because celebrities are able to give these things promotion through the fact that they are celebrities and they've got all these TikTok followers or whatever it might be. They can get the excitement into this what is a finite, limited sort of token.
Very much so, and it's that exclusive club sort of persona that's been built up is what really drives the market. So there's a project that launched sort of 2 days ago, and it was rumored that Bored Ape had something to do with it, and just off the back of that rumor, it went viral, and it was pushed by a few celebrities from a crypto perspective. So one of the things now, you're automatically a social media influencer if you own an NFT of some description to the sort of crypto community. So if you own a Bored Ape, you get a form of gravitas immediately, and people sort of listen to your opinion, which is a strange world to be in, but it's the thing that's happened. So there's a lot of lucky people that paid $10, $20 for something and are now considered experts on the space, which is interesting.
Yeah. Well, you see, I mean, this is for the skeptics. We'd look at it. Sounds a bit, like Bitcoin. Was there any value, or is there any value other than what the next person coming along is willing to pay to get in on it? And that's what keeps pushing the price up, is just the next guy that wants to come in and make some money when he then sells it on.
Indeed, and I suppose the greater fool theory is never more apparent than in crypto to a certain degree, is it? It does seem a little bit like that. It's partly due to, this is, as far as I'm concerned, the first asset class entirely driven by retail. So that's from crypto all the way through to particularly in NFTs. And the price is set by the community, which makes it incredibly volatile. You're very correct, but with volatility often comes great opportunity. So the sort of the way you can mitigate that, there is a lot of nonsense in the space, and I wouldn't be alone to say that there would be 90, and this figure's quoted a lot lately around crypto, but 95% of all the projects on the market will definitely go to zero. It is definitely going to be a thing. That shouldn't put you off, because 5% is a lot of projects. That's the problem is the sheer volume of noise, and being able to sort of cut through that, and I'll touch on it in a minute.
See
The
these
ways
things
in
on
which
social media where people are saying, "Oh, you're just picking up a rock on a beach, taking a photograph of it, and turning it into an NFT, and somebody is coming along and paying $300 for it in a few hours, and that can't possibly be a solid strategy.
That's not sustainable, as you probably imagine, and it looks like that's gone. The bubble from an NFT just producing a piece of art and selling it for thousands of dollars is a much harder thing to do now, which is good. It's still possible for artists and creators to create a thing and sell it as a piece of art. But if it is a project not backed by a well-known artist or someone in the space, projects are expected to have what's called utility, or a reason for being. Initially, lots of projects just went, oh yeah, we're going to give you X, Y, and Z in the future, and they're now getting sued for not following through on their sort of marketing roadmaps. There's 2 large legal cases in the States at the minute that both teams are going to lose from all accounts, and that will help. As with everything in crypto, those of us in it, particularly that work on the sort of more regulated side of things, cannot wait for regulation. It will help an awful lot of things, and it will particularly help some of the ways in which people can sort of lose out quite quickly by people. Basically, because it's a community set project, if someone lies about what the community's expected to do, it makes it very difficult for the community to set the price at a future date. So yeah, there is a bit of that.
What about companies and stock exchange? I mean, is the stock exchange under threat from company? Why wouldn't you issue NFTs instead of shares in your company?
Logically, a lot of sort of the tokenization of shares is expanding. The market is quite considerably smaller than what I expect it to be over the next sort of 12 to 18 months. The tokenization of securities is something that's coming quite quickly. There are some fantastic firms on the market that are doing that. We have a couple of partners that tokenize businesses' securities. It's a burgeoning sort of part of crypto, and it's definitely something that I and we see getting much more popular going forward. And as you said, the sort of utility for NFTs goes far beyond your sort of PFP, which is what sets its value. There's obviously, you could use an NFT in property. A lot of property companies, physical property, are now using it to tokenize businesses. So say you had a rental property, breaking that up into smaller rental sort of agreements is a very difficult thing to do. With a smart contract and an NFT, you can divide that house up into 100 NFTs. Each person holds an NFT, holds the rights to 1/100th, and gets the rights to 1/100th of the rental yield. It all drops into a smart contract, and the computer pings it out to everybody as and when it comes in. So there are ways that they can do, and they are all built around NFTs. And also the access to find out the information for these sorts of projects. So say you wanted to buy an NFT of a house, that's normally on a Discord channel. To get into the Discord channel, you may have to buy an NFT to be part of their club. So you can sort of see how the whole ecosystem feeds into itself. But it is again around setting the price, and the community setting the price. And what that means is you really need to pick your projects carefully to make sure that they're not just one, over promising, which is a big red flag, and two, are technically able to deliver what they say they are. I could come in and say, yeah, I'm about to tokenize the Empire State Building. Technically, that's quite a difficult thing to do. I can say whatever I like. It's whether or not I can back that up. So you need to be aware that lots of people say lots of things, and in an unregulated world, they can say them and get away with them. It's your own responsibility at this stage of the market to have done your own due diligence. And I say that, I premise that with I've been caught on the other side of these. It does happen to even the most seasoned professionals, so it's something to be wary of. And I suppose the old adage always stands true, Simon. If it's too good to be true, probably is. I think a lot of people in the lunar cryptocurrency from a couple of weeks ago that have been claiming
Well, yeah, I mean,
thousands of percents in interest, and anyone in capital markets or any sort of experience in how currencies work or anything saw this and thought that doesn't sound correct. That's probably not going to last forever. And lo and behold, too good to be true was too good to be true. So yeah, that's one of the things that people really need to be.
What about the currency risk? Because if it's based on the Ethereum cryptocurrency, you've got the risk of the actual NFT going up and down in value, but then there's also the risk between the Ethereum converting that back into dollars or pounds or fiat currencies as well. Is there not a secondary?
There is. So there's two things to be wary of, really. You could cash out your Bored Ape forex today, and Ethereum goes down 10%, and it's lost 10%. I suppose that's the sort of nature of this volatile market, unfortunately. It plays its ups and downs. So unfortunately, that's another thing, another blocker to making cash really easily, I suppose.
or an opportunity, yeah.
Well, exactly that. The opportunity is there. That without that risk, it wouldn't pose the opportunity. So I would certainly agree with that.
There's something to me that feels like NFTs, because of their range, and like you say about the metaverse that's coming, and the ability to use them to break down business contracts for renting out properties and things like that. This is what makes me think that actually they're slightly different from the cryptocurrency world, whereby people have been trying to buy the cryptocurrencies. There's been a lot of very clever people making arguments for how they're going to disrupt financial markets and recreate the way we all use money and so forth. But I'm not sure that they've ever really gained that acceptance yet. Maybe it's still to come. But for me, the NFT market, I can see a lot of real world applications in intellectual property and ownership and so forth. And that's what makes me think there's something that's a little bit different with NFTs, which is quite exciting.
Very much so. And there is ultimately the thing in itself. It's a lot different to owning an NFT than it is to owning a bunch of coins or a share. It's very difficult, and I suppose this is a double-edged sword in itself, because every other person you have on your show today, I would imagine, would say take all emotion out of trading whatsoever. But it's much easier to fall in love with a picture than it is a share or a number of coins in a wallet, if that makes sense. And the double edge to that is you can become emotionally involved in something that isn't actually worth being involved in. But what it also does is it creates the community and the brand and the sort of longevity by the fact that people fall in love with an asset regardless of its cost. And it can slowly build its way back over time. And you can get back to where it is. A big problem in the market is what's called rug pulls, where people launch an NFT and then pull all the money out and disappear and don't do what they're saying they can do. There has been a huge drive over the last couple of months with people taking old NFT projects that had died, no community, everybody lost their money. They've gone back in, they've built it back up, and then members of their community have started to make their money back. They've started to build it up, create a bit more hype, create a little bit of worth. And yeah, so it's an interesting fact, because when a stock or a share or a currency sort of dies, that you have no tangible way of affecting that. You've no way of helping that out. With NFTs, because the community, you could literally go into a Discord and start marketing for them, and help provide sort of extra liquidity to your own project. Sounds like insider trading to a certain degree, but it's all part of the NFT process, I suppose.
It's fascinating. It's absolutely fascinating. What benefits does holding an NFT give you? Well, you talked about that in terms of the being able to access clubs and memberships sometimes, and indeed even ways to access new NFT launches as well. But yeah, here to store them. This has always been something that I think non-technical people shriek away from. This whole idea of wallets and cold and hot wallets and things.
Yes. So storing an NFT. It does sound a little off-putting, and again, I suppose me and Simon have discussed maybe doing these in more detail. And I think how to sort of store NFTs and how to buy NFTs could be their own hour-long sessions. But how to store NFTs, you basically need a wallet. So what you store and cold. So I'll explain what the types of wallets are. So you have cold, hot, and sort of warm storage to a certain degree. So cold is anything that's not connected to the internet. Hot is something that's connected to the internet. As you can imagine, if you want to download an NFT from a blockchain, you need to be in a hot wallet. If you don't want someone to access it, they can't hack something that's not connected to the internet. So the reason for having hot and cold is you buy it on the hot and you send it to your cold and no one can get to it. There are some other ways you can put extra security on top of your cold wallet, which is called a Nano or a Trezor, which is basically an extra lock that you put on top of that, and you need to put in a really long string of code that you've written down and don't lose, like I did with mine. And you can then access your NFTs or your blooming 3 Ethereum that's sitting on a Nano that I can't get to. Yes, so there's also, but the most popular from an NFT perspective and this Ethereum conversation is MetaMask. It's really simple to set up. I'd love to, if anybody ever wanted me to walk through how we set up a MetaMask, hopefully you can see my screen. I've got one here, but it's my wrong MetaMask. So it's literally a browser extension. You click download, it takes about 2 minutes. You have a MetaMask set up. When you come into here, you just go connect wallet, MetaMask, bang, your MetaMask collects. Outside of that, you can buy NFTs immediately. That's the crux of how you buy them, through a wallet and having the sort of currency in which you need to buy it from. And again, we work for a broker. I'm more than happy to walk through anyone on how they buy Ethereum or another sort of crypto at a later stage, but we won't go into that too much. But that's essentially how, and they all work exactly the same way. This is a Solana one, select wallet. You'd have to have a Solana wallet, which would be, just getting back to the sort of PowerPoint, would be one of your Phantoms or Trust or something along those lines, and Ledger would be there. So yeah, I've sort of lined out here MetaMask, Trust, and then Coinbase hold multiple networks. So that's one of the ways in which you store it.
You've got different wallets, and then there's exchanges like OpenSea, which is the biggest marketplace.
Yeah.
But there are others. Can these NFTs be traded between different marketplaces as well, or is it just listed on Nasdaq or the stock exchange?
In the beginning, the marketplaces were sort of blockchain focused. So OpenSea was only for Ethereum, Magic Eden was only for Solana, and that there's a plethora of other sort of blockchains and exchanges. OpenSea now crosses over quite a few. So being the market leader and by a country mile, from a sort of stats and rankings perspective, OpenSea it's a little bit later in the presentation, but it's a very long way. OpenSea now let you buy on Ethereum, Polygon, Clayton, and Solana. Solana, Polygon, and Ethereum are the 3 biggest blockchains. So all can use through your MetaMask, and all can be done on OpenSea. So you can pretty much trade the 2 biggest markets at the moment are both tradable through OpenSea and a MetaMask wallet. So if you've got a little bit of Ethereum, a MetaMask wallet, and access to the internet, you could buy NFTs in a few minutes. It's not hugely complicated. What does become complicated is making sure that you don't, and it really is making sure that you don't get scammed. That's the difficult piece. So the actual, as with anything, it's usually companies will always make it very quick, easy for you to lose your money. It's making sure you don't lose your money that's the difficult bit.
I mean, that's James just posed a question saying, how could it be regulated to avoid the Ponzi scheme similarities? Is there any movement in that direction to any kind
I'd push back on the fact that it's a Ponzi scheme. It's a Ponzi scheme is a fairly well defined criteria that is set out to scam people. That's not the purpose of this in any way. There are scam projects, undoubtedly, but there's scam companies, there's scam shell firms, there's scam stocks, there's lots of scams. As long as there's money and as long as there's people, there'll be other people that want to take it away from you without having to do any work. Unfortunately, you can't avoid that. But to say that these are flat out Ponzi schemes is not correct. You would have, and it's something that's touted in the media quite a lot, so I can understand why that would be the sentiment. But it's no more a Ponzi.
There must be movement for some sort of reg body to try to enforce some of these people, if they're offering these things out, to make sure that they come good on their promises.
Well, like the SEC are already, like I said, they're already. There are 2 lawsuits at the moment for them not following through. That looks to be more of a to equate it to our side, a trace description type act. So they are a legal entity in a business. And if you say you're going to do something as a business and then deceive people and don't do it, that's that you're going to end up in court. That is coming. Regulation's been very slow. I think our governments are a little bit to blame. Their job is to protect consumers, and they've been incredibly slow at doing this. But they are catching up. They are catching up. I think from the prospect of it being the price being set, the value being set by the community, I don't think that's going to go away, because essentially these are new brands, they are new projects. So a sort of bottom line liquidity is not going to be there. But there is a lot of VCs, large institutions that are stepping into the space. So for good or bad, there will be a bit of stability when it comes to these. And another thing that a lot of these projects do that I haven't touched on is governance. So you can set up what's called a DAO, which is a decentralized autonomous organization, and you can set that up with an NFT. So if you want to run a business, so rather than running a business as an individual or a board, you can set up a decentralized firm that everything is voted on. So you can set up a DAO. They're usually run in Discords, and they operate as a traditional business. They are legal entities, they are businesses, but they have no individual. They are a decentralized autonomous organization. The access to those and the ways in which you can vote and proceed as a company are done through holding an NFT, and the price is set in the same way that a share price can go up or down. The fundamentals in that DAO or that decentralized business is what will drive the price and keep that moving on. So that's another sort of way. There's actually this will probably change quite dramatically. So one of the co-founders of the second biggest blockchain is Ethereum, is a man called Vitalik Buterin, and weirdly, this all started, and it's why NFTs have a place. All of Ethereum started because Vitalik was an avid gamer, and they took away one of the things that he'd purchased within World of Warcraft. They took it away from him. So he bought a staff or a wand or something magical. They took it away from him, and his thought was, but I bought that and I own that. Why can't I keep that forever? So he actually built Ethereum. He's a multi-billionaire, one of the richest men in the world. He built it because World of Warcraft changed a piece of code. So he's now created a new proposition that will be coming out at the end of the year. It's called soul-bound tokens, which are actually already available within World of Warcraft and that sort of area. And what that will then do is that you can purchase that asset it's an NFT essentially, but it'd be called an SBT, and you will not be able to sell it to somebody else. So if you're from a governance perspective, as you can imagine, selling on governance rights is not always going to be fruitful for everybody, and the likes of large hedge funds could come in and buy the conversation as opposed to democratizing it. If it was a case of they couldn't be sold on, it'd be less incentivized for them to buy the market, and sort of a little bit of game theory, a little bit of other bits mixed in should change things quite considerably, particularly from a governance perspective.
Fascinating. I mean, how much of this though is, I mean, predominantly it's launched into the art market. We're all humans. There is an aspect of us, we'd like to own paintings. We've all, this world been around, buy a painting at Sotheby's, put it on the wall, that's mine. And that must account for a lot of what is driving the market. Is this idea? I know you mentioned it at the beginning, we'd like to own things, we'd like to have originals. Yes. Is that still the future, that you think the NFT will still maintain on that space?
I think the valuations in collectibles will probably balance out a little bit. They're very new, but collectibles as a thing have been a market for time immemorial. As long as we've been human beings, we've liked to collect little trinkets and shiny things, and have more shiny things than your friend has shiny things, and etc., etc. That's not new, and that's not going away. The next generation that are moving into this world are not as tactile as certainly I was, and definitely my father's generation before. The concept of having to touch and feel a thing is not a thing anymore. They're very happy to have digital lives. And if my flex when I was 15 was my pastel coloured Ben Sherman shirt and my cool trainers, and I spent my time down the youth club, if they're spending their time in a World of Warcraft sort of lobby, the flex is going to be your big shiny sword and your cool orc shoes or whatever it is. But do you get what I mean?
See, the only reason I even understand what you're talking about is because my son talks about flexing as well. So
right.
There's obviously a few years between us, and I know a little bit about this because, of course, Harry did the whole Fortnite thing. He's only 12 now, but now he's into FIFA. And I am one of these people who has converted the real money into buying magical swords and things. But he did at one point say, well, Daddy, I can sell all these skins and different characters that he's got. He said, I could sell these on a marketplace for, I don't know, several $100, several thousand, I don't know. Probably not as much as I'd spent on buying them all in the first place. But it was fascinating, and this is a year ago, so he was only 11, and starting to understand the rudimentary workings of a marketplace and trading things and collectibles. And I thought, well, that is fascinating, because there they are. I had no idea of this sort of stuff at 11 years old. So they are growing up faster, that whole generation. It may be still that our generation are scratching our heads a little bit, but there's no doubt about it that this new digital world, we're seeing new markets opening up, and it's absolutely fascinating. So it'll be interesting to track how it goes. I've interrupted you a lot, Adrian, so I apologise.
No, please. The question,
I know that you
hoping to sort of fly through. I was going to fly through and then ask you to get as many questions as possible, really, because it's such a broad subject. Yeah, I'd like to really know what it is that people want to know, I suppose, more than anything. I could focus on sort of any part of it, but like we said earlier on, there's been a bit of a correction in the market, and that's a macro view, really. There's been a lot of, I don't need to go over that. I'm sure you've got enough people today that are going to be going over the markets in general. Crypto's not come out of that unscathed in any way. We're looking at around about a 65% correction from our all-time highs a few months ago. That's had a knock-on effect on NFTs, as you would imagine. It's priced in Ethereum or Solana, so it's going to have the same effect. Ethereum is bleeding today, which is great for my NFTs. But I think the actual scope for NFTs and their ability to sort of have some world-changing technology is very apparent. There are still good projects that are making a lot of money. Like I said, there was a project called Goblin Town at the weekend. They launched at around about 80 quid. They're sitting at around about 4.5 grand 6 days later. So there is still opportunity in this market. Is there the opportunity for making 50, 60, 100 grand in a couple of days? Less opportunity for that, to be honest, but probably a good thing. But there still is scope for good projects, good art, good roadmaps, good utility, i.e. they have a plan, and you if you like the team behind it and they look like they're going to do something, the chances are that they probably will. You're basically supporting brands, new brands that can sell clothing, experience days, education. The scope is absolutely enormous. I've got NFTs that give me access to education courses on blockchain, that give me trading courses, that give me alpha. So alpha is a big thing in NFTs. So if anyone, you join alpha groups, you buy an NFT in an alpha group and it goes up, and you end up making more money off of the NFT alpha group than you do off of the information that it provides. But that's a different conversation. A friend of mine joined an alpha group. He bought an NFT for 0.25, which is about 500 quid at the time. He's in that group. He got no tips, nothing came out of it, but he sold the NFT for 2.5 ETH about a month later. So he got nothing out of the group, but he sold the NFT for
so your membership card essentially can be what the asset that, yeah, okay, it's amazing.
Exactly. And with Web3, which I sort of touched on slightly, which is the next iteration of the internet, when everybody moves over to that, when you connect your wallet, like I did a few minutes ago in here, where you connect wallet, all websites will in the next 5 or 6 years have a connect wallet option. And what that'll do is I can authenticate who I am with my wallet, with my NFT. So if I'm on I don't know, TradingView, and I want to look at I've got a subscription, I connect wallet, it connects to my NFT, it goes, right, he's got the best of the best subscription, he can see everything, and it allows me into a gated content area in which I can then sort of view everything I want to. And if at some point I decide that TradingView is not where I want to be anymore and I want to sell this off, I can sell that to someone for more or less than I paid for it, depending on how lucky I am that day.
Amazing.
Yeah.
Yat has posted a few comments which are very valid. It says gas fees are needed, yes, big security issues, there is a cost for creating NFTs, but where do you get started? So Yat,
I can't see these questions, Simon. I do apologise. How do I view them?
We don't have the questions shared on the
webinar. Right, okay,
slightly different system. So yeah, I'm presuming you're talking about where do you get started from in terms of buying NFTs or in terms of creating an NFT. If you could just let us know in the comments, maybe Adrian can explain.
Yeah, I've done both of those things today, so I can show you. If
creating
weirdly,
NFT.
I could show you how to create an NFT right now. So creating an NFT is actually incredibly easy. It takes minutes. Oh, I can't remember my MetaMask. But to create an NFT, you click create. You connect your wallet.
This is on
the sign a signature.
This is the
on OpenSea.
Yeah.
So it creates it onto the Ethereum network. So you can create or Polygon or whatever. You can create one almost immediately. You'll have a form that pops up here with about 4 different questions. It'll ask you your name, the name of the project, what you want to call this NFT, how many of them you want to create, and you drop in a JPEG or an image, and you've created an NFT. It's now sitting on your network. It's that quick.
Wow.
Now, to build an entire NFT project with a minting site on your website and things like that with a Web3 sort of thing takes a little bit more and a little bit more money, but not a huge amount of time. I could, if you had a set of images, I could create you an NFT project in under an hour.
You see, I'm looking at, I'm thinking of this as a very modern digital version of Company's House, because anybody can go onto Company's House, register a business, 1 million shares, memorandum articles, and there you go. But it's worth nothing until you can convince other people to start buying these shares on
Exactly,
marketplace.
all the fundamentals of your business and what you're looking to achieve and what you have achieved add a set of value to what you're doing. So it's exactly that, Simon. Exactly that.
Fascinating. Yeah, says Simon, can you create an NFTs for your courses? Yes, funnily enough, it's what's been running through my head, and you touched on it there. You already have access, Adrian, to trading courses for NFTs, and it is a way that, you know, in your head you're thinking, how could we be utilizing this for memberships, for access to different levels of courses and different assets and things like that. So yeah, I'll try and think of an NFT for round the clock trader. I think for sure there must be something.
Wonderful.
But I'll need someone clever to help me do it. Not looking at anybody in particular, Adrian.
I could point you towards the clever person. It probably wouldn't be me, but yeah. So here's a bit of a sort of a quick, because I know we're running out of time. So here's a little bit about why I focused on Ethereum as opposed to the other blockchains. So the other blockchains are shooting up the list. But if you look, this is the last 30 days. So I printed this yesterday. Apologies for the quality. It's blown up a little bit, but worse than it was. So you're looking at 3.5 billion, give or take a couple of 100 million. What's that between friends? As opposed to 300 million on Solana. So the difference is quite astronomical, and that's all secondary market. All of the flipping and selling of NFTs at this moment is on Ethereum. But I'll say, when we did this back on February the 24th, which is the best part of what, 3 or 4 months ago, this number was 120 million. So in a bear market, they have 3x essentially. So Solana is one to watch out for. There's a couple of really good projects on there, the likes of OK Bears, absolutely smashed it recently. I'm kicking myself over that, really. It was sitting at 20 Solana, and 20 Solana at the time was about £2,000, and I was like, that's a lot of money to pay on a bear. And I took myself out of it. It sold for 240 this morning, so yeah, it was. But there we go. But and don't get me wrong, I buy them all the time, but I always have that minute beforehand. Am I crazy buying a picture of a bear for $2,000? But then, yes, it's sort of it's a strange new world for all of us.
Think about it, I would think.
Yes.
But is it any less crazy than buying a contract in the dollar or whatever it is? It's
exactly that. Is it conceptually any crazier than a CFD, which isn't even an asset? It's a contract. Yeah, exactly that. It's yeah, very much so. So here's a couple of sort of sales volumes. So like Other Deed. So Other Deed is Bored Ape. I've mentioned that a few times. Bored Ape is the one below it, is the largest project on Ethereum. It's the really famous one with all the apes that everybody sees everywhere. They launched for around 50 quid a couple of years ago. They're now sitting at around about 90 ETH. So Ethereum's price today is around 1900, so we'll call that $2,000. So yeah, there's a fair whack of cash in each one of those, and some people have made a lot of money. Other Deed is their metaverse, so there's a big push at the moment for sort of metaverse and buildings and things like that. Other Deed's their metaverse. In the best part of a month, they've done nearly $1 billion worth of transactional volume. It's crazy numbers. It's
Big
crazy
numbers. It's big numbers. And of course, the thing that some people still can't get their head around, and me included as well, is that these pictures of monkeys and bored apes and things like that, you can take them anywhere. You can, they're freely available on Google and so forth.
I've got some of them on my presentation.
Yeah,
I've got some of them on my presentation. Yes, I would struggle though to sell them to anyone, which would be a thing.
That's the thing.
Although people do it, and I suppose there's a bit I wanted to touch on was around performing sort of research and DD. We've only got a couple of minutes left, so I won't get much time to do it. But I'd love to explore this with people again in more detail. But really, the main thing you need to do is research. So you need to have a look at their Twitter, Discord, and LinkedIn, whether or not they're legit people, like anything. It's the same as you would from an equities and stocks market. You need to understand their fundamentals. You're not just going to buy some crazy Chinese SPAC because your mate Dave told you to, and you're going to stick your whole life worth into it. So you need to make sure that these people are legitimate, that they've doxed, which means you know who they are. So a lot of these projects are anonymous. It's crypto. They don't need to tell anyone. So is that the case? If they told them, do they have a plan? So are they looking to achieve something, or are they just creating a picture of a monkey and expecting you to pay $1,000 for it? Do they have a plan? Do they have any backers? We've reached a point where VCs, BlackRock, etc., have entered the market for better or for worse. They are putting liquidity into projects and buying huge amounts. So are there any big backers? What do they then intend to do with some of that money? How are they going to do it? How to watch out for a rug pull, etc. Yeah, sorry, I'm brushing over a few of these things. I've probably run out of time a little bit for you, Simon.
It's my fault. I think I've been interrupting you a lot, but I am so interested in this, and I know that we've already had a couple of conversations about perhaps expanding this into a course that we can offer people, because it's very, very interesting, and I'm quite excited about it. I can see from the questions as well that people that are curious about it still got a bit of a journey to take.
I'd love to do is I don't know. Can I type into this box, Simon? Can I write into here?
Yeah, you can do. Yes.
GlobalBlock. If it's okay, I'd just like to put my email address in there. If anybody wants to reach out to me and have a chat about how they would go around getting into NFTs, or if anyone wants to ring me up and tell me about how much they hate NFTs and why they hate them, I'm more than happy to have that conversation as well.
Wait a minute, is that the right email address? Because you just put global.co.uk.
Oh, sorry.
Yeah, let me just.
Yeah, I'd love to. I'd be more than happy to do a call with anyone if they wanted to have a chat or ask a few questions over email. I've got a podcast coming out very soon in the next couple of weeks. Again, I'm looking to do a few more of these with Simon and making a bit of a series out of it in a few weeks as well. We're also obviously in GlobalBlock. We're more than happy to sort of help people get set up and sort of dip their toe into the market if they want to do it. But I'd love to walk people through my process for looking at projects and how I sort of and it's through doing it incorrectly. I've been rug pulled. I think I had one on here a minute ago. I've been rug pulled. You're going to laugh at me. This little boy down here at the bottom.
In my days, being rug pulled would be something probably you wouldn't mind happening to you on a Friday night. But things obviously changed, and not for the better.
It has changed a little bit, yeah. Well, I've been scammed. So this little man down in the bottom of the thing, he's a doodle ape. I paid far too much money for 3 of those, and the project scammed and disappeared and took all the money out of it. So I've learnt the hard way. I'm more than happy to help people by passing on the information on how you mitigate that. So yeah, help you not lose thousands of pounds doing.
Adrian, thanks again. It's been I've really enjoyed it again. It's good of you to give the time. I know you put some time preparing this, so we're all grateful for that. And
I got very close to the end this time, so the next one I'll probably get all the way through.
Awesome. Listen, take care. Good luck with all the NFTs that you've got.
Thank you very much. Thank you everyone for listening to me waffle. If you want to have more conversations around this, please drop me a message. I'd love to chat to you, and join me on LinkedIn. I'm always around for a chat.
Fantastic. Adrian Kenny, GlobalBlock, thank you very much.
Have a great day, everyone. Bye-bye.
Bye, Adrian. There we are. What a fascinating world it is, and thank you for joining us, Adrian Kenny from GlobalBlock. So if you want to get in touch with him on the email address, the second one I posted, which is the correct email address, or come through myself. So we are going back to more traditional trading market now. We're going to be looking more at well, it's not just forex. Ian Foster trades. His price action methodologies can be applied to more or less any market that is moving, and he'll show you how that works in just a second. Ian Foster from Beawinningtrader is our next speaker. Welcome everybody, by the way, if you're just joining us. I know we've had slow registrations. We've got slowly growing over the last couple of hours with people coming into the event, so welcome. This is the Round the Clock Trader Summit. I am Simon. I'm going to be hosting our 10 speakers today, mostly on the financial markets, the stocks and equities and forex markets. We've just had a special presentation on NFTs, though, a very exciting world of NFTs that's opening up on the back of the crypto markets. And we are about to welcome our third speaker of the day, Ian Foster, Beawinningtrader.com. So please use the chat box. Let us know anything that you're enjoying, anything that you'd like us to talk about. The speakers can, of course, talk about a wide range of subjects and comment on anything that you might be having a problem with. But let's get straight on to our next speaker, Ian Foster. You can see in front of you, by the way, at the moment, you should be able to see today's agenda here. Just to let you know where we are, 12 p.m. UK time. Price action trading strategy, anyone can follow Ian Foster. Following that, we're going to be looking at the forex trading strategies of Lakhani for Vedanta trading. Again, a currency correlation strategy with Sunil Mangwani, a short-term simple strategy with Stuart Hopkins. We're going to be much more looking at the charts this afternoon, some live analysis with Adam Harris, and finally rounding off with Charlie Burton trading at 7 p.m. So we finish by 8 p.m. this evening. So let's go across, see if we can make Ian Foster the presenter. Ian, if you're there, I'm just throwing the microphone across to you as we speak.
Hi, Simon.
Fantastic. Ian, good afternoon.
Same to you.
I can hear you and I can see you, which is great. Hello. Great. So if everybody here can just give us a little yes, okay, to say that you can hear and see Ian okay, we can get straight into it. So Ian, thanks. We've been looking at NFTs for the last hour, which is exciting.
Yes.
It makes me have to really concentrate because we're used to dealing in the more traditional markets of currencies and stocks and so forth, which is, I think, where you like to live when it comes to trading. And you developed, as it says, a simple yet powerful trading system that consistently picks winning trades after winning trade, no matter the market. It sounds very useful, something that I know that you've been using just to trade your personal account over the years. How many years is it trading? I think you've got about 20 years.
I've been trading well in excess of 30 years, Simon. I'm showing my age, but I've been also teaching and mentoring. I'm in my 24th year, so been about long. 1998, I done my first seminars. In those days, it was seminars, as you know, not webinars. But anyway.
The good old days. Well, and we've been doing some of these webinars since about 2015, I think, was when we first.
Yeah, that's correct.
And I know a lot of people, because in addition to trading the system yourself, you run it as a business, you help other people to understand how it works, and they can join a community, be a winning trader. So, and I know lots of people have taken that path and stuck with you over the years. So it's good that you're back today. I'll hand over to you, and let's get started. We'll have a look at the presentation. So we've got quite a few people here in the room, which is great, and we can take some questions as we go.
First class. Now, can everybody see? No, you can't see my screen yet, can you? You can now.
We can see your screen. Webcam optional if you want to keep it on. It's great. I think it adds something to have to be able to see. So the floor is yours, Ian.
So, well, look, as the slide says here, what I'm going to show you is a simple yet powerful trading system that consistently picks winning trade after winning trade, no matter the market. And the brief disclaimer here, everyone, we know the risks that are associated with trading. I just want to point out some of those in this disclaimer to you before we start. So I think it is self-explanatory. So let's get into the presentation. Now, excuse me, I'm a little bit croaky, so I know I have a Northern Irish accent, but I'm a little bit more croaky than I normally would be, because would you believe I started to take a touch of a sore throat last night, but I'm feeling a lot better today, but a little bit croaky. So forgive me if I have to stop and have an odd sip of water. You'll understand, I hope. So again, from a trading perspective, the first challenge of a trader is to find a methodology and a method that works. And I strongly believe that any method must consistently create accurate signals. Its timing must be good, because from a trader's perspective, we don't want much pain. Now, as a longer term investor, you can suffer pain a little bit more than you would if you're a short-term trader. And what I mean by that, that means that if your timing is not so good, the signal may turn out still to be okay, but once you would take a buy signal or a sell signal and that market then started to reverse, you then are sitting in a little bit of pain, because what are you doing? You're wanting the market to turn around and go in the direction of which you entered the trade in the first place. So if we can have a system and a method that actually helps or perfects the timing, then that means that we are, as from a trader's short-term perspective, we're not having to suffer much pain whatsoever. So also what's very, very important is having a system that you know, that lets you know rather to the exact point, the exact pip, depending on what you're trading, when you are wrong. Because the most important aspect of trading obviously is risk. Now, I don't put risk first initially, simply because you need a methodology first. Some way, whether it be tossing a coin, whether it be the method which I'm going to show you that I use today, or no matter what else it may be. Once you have that, then you have to make sure that you can control risk. And that is the difference. By controlling and managing risk, that is the difference between being successful at trading or being unsuccessful. That is basically it. So with a system, it's very important from a technical analysis perspective that you're actually using a methodology that is giving you a signal firstly, but also let you know exactly when you're wrong. Not an area where you're wrong, but exactly to the very point or pip, as I've said. And I think also what's important, because it shows the strength of the system that you're using, that it's flexible in its ability to trade no matter the instrument, or indeed no matter the time frame. You see quite a lot, and I certainly do, and I'm sure you have, those of you that are with us today, quite a lot you see that probably many emails now, because obviously we're swamped with trading systems and trading methods and this and that, but that indicates very clearly, or they say, I've got a system to trade, let's for example say the FTSE. I've got something else to trade crude oil, something else to trade gold. Well, why would that system be successful in trading gold, but not successful in trading pound dollar. There's something wrong there, fundamentally wrong. And the last point here, it must not be overcomplicated. Okay, keep it simple as possible. KISS. A little bit about me, those of you that have not come across me before. I've been trading the financial markets, as both Simon has briefly touched on the outset, since the early 1980s, and I've been teaching others to trade and mentoring others since 1998. Yes, in this business a long time, folk, seen everything, and what I do teach and what I do talk about, let me tell you, is not just textbook, but unfortunately it is about practical experiences that I have either experienced or certainly, well, experienced you'd say, but probably I wouldn't say uncharacteristically, but with undiscipline, I went and done stupid things in trading, which I think a lot of us sometimes are inclined to do. It's very much a discipline venture. So the system that I'm going to share with you is the same that I use every day myself. I'm not going to be showing you a system that I don't use. And as it says here in the slide, I have taught it to thousands of traders over the years, as you can imagine, just simply because I've been doing this for many years.
Ian, can I just
yes,
clarify that we're still looking at the slide with the title slide? Is that you haven't moved on to a different slide?
No, so I'm flicking through the slides. No.
Oh, you are. I'm still seeing the Ian Foster present title slide.
Right. Why would that be? Let us check. Let me
check. Is it
check.
just me, or is everybody still also looking at it?
Right, Simon, just go through this again with me, please. Make sure that this is.
Yeah.
Is that changing?
Okay, now, yeah, I think now it's changing.
That's sorry, great. I don't know.
No.
Maybe I hadn't clicked on. I had clicked on show my screen, but it didn't seem to be moving on. So thank you for pointing that out to me. Thank you.
We're looking
I don't think there's any point on going through those again, but there's the first challenge of a trader: to find a trading method that works, consistently creates accurate signals. Timing must be good. Let you know where to exit if it didn't move as expected. Is flexible in its ability to trade no matter the instrument or time frame, and must not be overcomplicated. That's just a brief summary of what I've been saying, and I apologize for that. Thank you again. As I said, a little bit about myself, as it says here: trading since the early 1980s and teaching and mentoring others since 1998. And the system I'm going to share with you today is the same system that I use myself, the same system that I've taught to thousands of traders over the years. So I can talk about what I have done, just this same system. For example, at the beginning of this year, January 2022, I started off with a $2,000 trading account, everyone using this system for the purposes of public trading, okay, doing live trading to the public. And we're up in excess of 500% now since using the exact same system. And again, that is not hearsay. I showed my members know this, they've seen it, we watch it growing, and I can certainly show it to anybody if they mistrust me in saying making such a statement. So my trading philosophy has been and continues to be all based on understanding price action correctly. So first and foremost, let us get that out of the way. Okay, now, but a challenge to me over my many years was always looking for ways to not only confirm the price action signals, but also keeping the trading decision process simple and trying to make it look, or trying to make it that little bit better. And this has led me to develop a unique proprietary trading tool. It's a trading tool that I called the STB Trend Trader tool. It is a visual indicator that paints the price bars red blue or green as a sign of weakness, strength, or neutrality, respectively. So again, there's no gray areas, absolutely no gray areas. So this simple, easy, and powerful system takes trading uncertainty away. You always know if there's strength or weakness in the market that you're looking at and in that particular time frame. And most importantly, everyone, there's no clutter on your charts. How many times have you seen that somebody or an email being received and you see something and there's that many different indicators on the chart, you can hardly see the price bars, whether they be candles or whether they be bars. It happens a lot. That only creates confusion. So I think, again, going back to the process, simple, easy, same thing, and powerful. And again, this works equally well no matter the market or the time frame traded. And the key to the software, because you've got the red, green, and blue bars, is that you can see a market that's went from transition or is in the process of going from transition into another trending move based on probabilities. So if you see a market that's presently trading green bars and all of a sudden it goes into blue bars, that there makes going through charts pretty simple. That is a market that catches your eye, and it's a market that makes you want to move on. So let's go through some of these charts, and this is why it's simple, folk. This is why it's simple. And on each of my next slides, I'm going to show you it on a daily chart. I'm going to show you it on a 240, 4-hour chart, a 1-hour chart, 15-minute, 5-minute chart on different instruments. Okay, so just to show you and demonstrate the flexibility of the system. So why is it simple? Because you've got blue bars. That's indicating strength. 2 little red bars in here, folk. Back into green mode, blue bars. And then look at this move up. All blue bars. Can you get much simpler? Here's the dollar yen on a 4-hour chart. Excuse me. Again, red bars. Now, of course, it just came to my attention yesterday evening when I was loading the charts that I seem to have more red bars than blue bars in the presentation today. And I think probably one of the reasons for that is a lot of instruments have been heading south, as I call it, down the page rather than up over recent times. Oh, sorry, apologize. There's always something that interferes with the presentation. I apologize. I had my phone off, but I've left my iPad on and there was something coming through. So sorry about that. So red bars, and look, first red bar up here at above 130, and the market falls 350 pips in the 4-hour chart. Swiss franc, Japanese yen. Now I'm showing these at this minute in time on forex charts. So the reason I'm showing this, it's the way the proprietary software is able to depict whether there's greater selling or buying pressures in this market and in this time frame. And once you see the red bars, folk, that there is a very clear signal you need to be starting to take an interest in this market. Now, again, I'm going to show before the end of the presentation exactly where you should enter and exactly where your protective stop should be when you initiate a trade, okay? But this is just to show the simplicity of the software. So again, you wouldn't mind taking the trades up here and running that down the page, I don't think. I think it started off at about 135 and went to 120. There was a 500 or 600 point move there, a pip move, I should say, on the dollar yen or the Swiss franc to Japanese yen. Here's the US dollar Canadian on a 15-minute chart. Now, these are all recent charts, everyone, okay? It's not something that I picked out that happened 2 months ago or yesterday. It's in the last couple of days, or certainly within the last week, because you'll be saving charts as you go along when you're trading each day. Again, 15-minute chart, moving out of green bars, folks, transition, goes into red bars. Boy, that is something I need to look at here. We've now got red bars telling me that there's more selling pressures than there are buying pressures, and that market goes down the page. Euro dollar, the 5-minute chart. What a trade, folk. What a trade. Picked a trade last week to perfection in the euro dollar. We're with 100 pips in an intraday move. Oh, just over 100 pips in one day. But the exact same way, there's the good thing about this, there's no gray areas, okay? We shouldn't be selling, we should be selling around that area, around here, or we should be selling up here. You will see exactly where we should be selling, because I'm able to even, dare I say, perfect it a little bit. You can use this totally standalone, just using the software, but I like a little bit more confirmation, as I will explain, depend on the price action trend. Okay, so I'm going to show you a little bit more. Then you say to me, Ian, you showed me all forex. What about indices? What about a commodity? I trade crude oil myself regularly, folk. Here's the Nasdaq futures, 3-minute chart. I'm going to move. 450-point move on this chart from, look, 4 to 3 in the afternoon, UK times, folk, right down to 6:30 in the evening. Red bars. Now, those of you that are very aware and looking very intently at the chart, you can see little arrows here. And I'll explain to you what those are towards the end of the presentation. Okay. This is using the NinjaTrader platform, okay, for the Nasdaq futures. And then light crude oil futures, a 60-minute chart, folk. Okay, same thing. Coming out of red bars into green transition. What do we see? The first blue bar. What is that telling me? That is telling me I should be looking at this market closer. Let's move from red into green, into transition, into sideways, and now it's gone blue. Take an interest in this market. This market has a very high probability of heading up, because now there's greater buying pressures than there are selling pressures. And again, Simon, if anybody's any questions, just let me know, and we can either answer them during or towards the end. So I hope you can see, folk, how simple and powerful the signals that the software creates are. Yes?
Gene's actually just asked, is this similar to elder candles? I haven't actually heard.
This is all done. Simon, it doesn't differentiate from the signal itself, but on each of my charts you can see, and it is on some of my presentations, I do explain, I use the open, high, low, close charts, not the candlestick charts. And the reason I do that is because I'm more interested in where the close is in relation to the low of the bar, or the close is in relation to the high of the bar, in comparison to where the close is in relation to the open. So a candlestick chart clearly shows where the close is in relation to the open, but sometimes it may not indicate that that was what we call a bullish or bearish bar based on price action. And for those of you that are not very aware of the basics of price action, something that I didn't bring into this presentation, a bearish bar, folks, so thank you for bringing this up, is a bar that closes closer to the low than it does to the high. And by having that, then it means that you've got a greater probability, if it closes closer to the low, the probabilities, which is the only thing that we can do from a trading perspective, is work on probabilities. It means that you've got a greater probability of that market breaking to the downside next before it breaks to the upside. And a bullish bar is the same. And again, giving that a little bit more depth, the longer the time frame chart you're looking at. So for example, a 1-minute chart, the same thing applies. If I'm taking a trade of a 1-minute chart on an intraday futures trade, I will not take a buy signal on a bearish bar. I would not take it, even if the next bar goes up. I will not, because my philosophy is very much you have to take a sell signal on a bearish bar, a buy signal on a bullish bar, which means the close is closer to the high than to the low. But as far as the software is concerned, it does not differentiate between open, high, low, close charts or candlestick charts in relation to giving the color of the candle or bar. And the reason for that is that it is an accumulation of the sum total of buying and selling pressures on that particular time frame over a period of time. Okay, so what, again, getting back into price action here, what very much determines whether you have a bullish scenario or a bearish scenario, even analyzing one single bar, is the close. The close is the confirmation of everything when it comes to price action. So what the software is doing simply, and the algorithm behind the scenes is working on, is all of the time analyzing whether there's more buying ticks or selling ticks within each bar. In this instance, each bar here is 60 minutes. It could be a daily chart, it could be a 1 minute chart, a 30-second chart. So therefore, if this market over a period of time has got greater and higher closes, it will then color the bars blue. If it's got lower closes over a period of time, it will color them red. So it is the sum total of buying and selling pressures. Of course, now we've got safeguards in there because we don't want 1 minute it going red and the next minute going blue. That would totally make it pretty useless. And this doesn't do this. And another point in relation to the software, as I've said many times before, is totally authentic. If we get a buy on a blue bar, on that market, the very next bar happens to tank 100 points. The bar, once it's closed, once this particular bar is closed, that will always remain blue. It will not change color. Okay, so it's authentic, totally authentic in that respect, because at that particular time, on the close of that bar, it has assessed and analyzed whether there's greater buying or selling pressures in not only that bar, but in the previous bars before it. So we will get situations that you see here where the market retraces and the bars are still blue because the sum total of buying pressures in here is greater than any selling pressures. And that is the great thing about this, which you will see now very shortly. So I hope that explains that. So you can see how simple and powerful the signals are that the software creates. However, we can make these signals even better when we take them with a confirmed pullback into either the selling or buying pressures that have already been determined. So what do I mean by that? If a blue bar appears, we're now indicating that there's strength entering that market, and therefore that market has a high probability of heading upwards. And again, the same with red bars to, as you can see down at the bottom here. But what we want to take it a little bit further, because what we want to do is we want to see how strong from a price action perspective that buying or selling pressure is. So what I've underlined here is confirmed pullback. And you might ask, what is or is not a confirmed pullback? So very briefly, let me explain. I have a set of rules based on the structure of the price bars that determines whether we have a confirmed pullback or not. And these confirmed pullbacks are what I call vertical bar trading pattern tops or bottoms. So in other words, we have a set of rules that confirms whether we have a confirmed top, which is just like your middle finger, a top in place, or holding your middle finger down towards the ground, a low in place. So other people call them swing highs and swing lows. I call them vertical bar trading pattern highs and lows. But from a simplistic perspective, we can use them or call them pullbacks. So therefore, a market starting to go down it pulls back into that downtrend. Now, let me tell you, these rules that I've talked about are not just nilly-dilly rules. They have been determined through infinite testing to create the greatest accuracy of trend confirmation. I've been using these myself for years before I even began mentoring and teaching others the rules to this system, okay? And they were used prior before that, but a lot of testing, okay? And the good thing about this, we know at the time, not after the event, when a confirmed pullback has occurred into a downtrend or uptrend. So a lower vertical bar trading pattern top equals a sell, and a higher vertical bar trading pattern bottom equals a buy. So let's look at the exact same charts that we looked at when I showed you and introduced you to the software painting the colors. And let me give you a little understanding of what the thought process is behind this. So we get blue bars here, as you see. Now, that is indicating simplistically that we have got greater buying pressures than selling pressures. But the only true way of determining whether the bulls, because remember, we're not trying to pick tops or bottoms here, folk. We're wanting to get with the herd. Okay, we want to go where the main flow is going to go. So the only way we can really understand and get to grips with those buying pressures, as per the blue bars, is when the next bout of selling comes into a market, no matter the time frame. And what we're trying to do, we're trying to measure whether the buyers are in control when it starts to retrace, in this instance, or whether the sellers are in control. Now, how do we determine that? We determine that because how we determine that is that if that market, the sellers come into that market, but they cannot push that market lower than where it had previously gone. So in other words, that market had a low down here. When this market started to retrace low there, that pullback, it's a higher pullback or a higher pullback low than this low. We've also got blue bars, folk. We've got a couple of green bars to start going blue again. We've now also got a price action giving us a higher low. And look what happens. So not only have we got price action telling us, we've got the software telling us, or you can reverse that and say, not only have we got the software telling us of the strength, we've now got price action telling us. So what this all does is this puts the probability of trading, of successful trading signals in on our side. Does it mean we're always going to be right and correct? Absolutely not, unfortunately. No. But by golly gracious, it means that we have a very good probability of being correct. If there were guarantees, folk, as you know, I wouldn't be sitting here in front of you today because I'd probably be living in some island with multi-billions of pounds or dollars or euros or whatever you want around me, okay? But nothing's 100% accurate. And there's no such thing as holy grails. But we all work, as I've said a couple of times already, in probabilities. Probabilities working on your behalf is great. So there's the exact same chart that we started off in. Let's take a look at the next one. Here's the exact same thing in the US dollar, Japanese yen, the 240-minute chart. Yes, with the red bars, folk. That's great. We've now got intention. We now know that we've got greater selling pressures in this market. But let's really test these selling pressures. Let's see how strong these selling pressures are from a price action trend perspective. And the only way we can do that is the retracement. And look at this retracement. This was still able to remain red, although this market retraced. And then when we got a pullback and a confirmed pullback based on a confirmed lower middle finger high, that high there is a lower high than any high up here. Red bars. Now we've got a double whammy. Okay, we've got a double confirmation. yes, we've got a real good probability of this market going lower. And indeed, of course, as you know, it did. 60-minute chart, exactly the same. We can go on down this chart, every high and low, but we're looking from transition. What did I say from the outset? It shows transition. Transition of green bars. Red bars appear, same thing applies. I want to see the next bout of selling. If it's going to be stronger than it was, it's going to take out these highs. If it's going to be weaker, so in other words, the sellers now are in control. We've got the red bars telling us weakness is already there. But if the sellers are truly in control, it's going to make a lower high than any high to the left, of which it did. And look where that market fell in the 60-minute chart. Same thing applies, folks. Yes, we've got a couple of green bars in here. Yes, but each high was a lower, what we call confirmed high, lower low, lower high, lower low, look, highs and lows the whole way down the page. US dollar, Canadian, 15-minute chart. This was a little bit different in as much as that the red bars started to appear pretty quickly, but what we had with green bars, a transition. And again, this market had already pulled back into already a downtrend that came out of the blue bars here up in the top left-hand corner. And the red bars had appeared, and that market went down again. Absolutely flew down the page in the space of a few hours on that day and continued into the next trading day. So again, if you're only a day trader, you're getting all this action. If you were holding it overnight on this forex pair, the dollar Canadian, you were able to hold it down. And then what happened? The market started to run out of steam, folk. And look what happened. We got green bars indicating, hold on, Ian, you've been short this market. Now is time to consider getting out. Euro dollar 5-minute chart, the exact same chart as I showed you earlier. Yes, red bars appeared here. You could say, well, hold on, Ian. Really and truly, you've missed this bit of price action up here. Weakness, that's correct. We did. There's no two ways about that. It just so happens that came in overnight in trading. But even if that was in the afternoon, excuse me, you could say that. But we wanted to make a low. I want to check to see when the buying came into this market, how strong it was going to be. It was going to be weaker than the previous buying. Again, it's going to make a retracement. It's going to make a pullback into the downtrend. Red bars appear, and thank you very much, Mr. Euro Dollar. Nasdaq futures, exactly the same, folk. Now in this chart, you can see the little red arrows here, blue arrows, red arrows. This is where red bars come in. We missed this bit of price action because I wanted further confirmation. The market retraced at a lower high, and this market went down a page. And what did I tell you? A 500-point move. Now, if you're trading standard Nasdaq futures, where each point is $20 US, that's a $10,000 move. If you're trading a micro, it's still a $1,000 move in the space of a few hours. Just using simple red bars, wait on the retracement, confirm retracement. We know exactly what our entry point is. Now, like crude oil futures, the same thing. Red bars, we come out of red into green, into blue. Wasn't just content with the blue bars. I want a confirmation that the buyers were in control in this market. I want to see where the sellers come in. Were they able to move it down to these lows again? If they were not, therefore we had an uptrend, hadn't we? Because if we have a higher low or a higher retracement, higher pullback than the previous pullback, with blue bars, we want to be long. Now, I am working on version 2 of STB Trend Trader, and it does not affect the price bar colors. But what it does do, folk, is it helps to lighten the load for the trader even further. Now, I have a little bit of a hitch because a programmer I was using has went AWOL because it happened to be a foreign programmer, not getting into where he was from, but maybe I'll let you work out that for yourself. And I've now, just about 2.5 weeks ago, 3 weeks ago, started the process of working with another programmer again. Because I have said to you, everyone, that we know not only where our exact entry is based on our rules, but also where our exact stop is. So if I am getting blue bars, which is putting me, as I've said to you, in aware mode, we've got strength coming into this market, and then I'm measuring the retracement and seeing, is that a higher low than the previous low, right? So in other words, this pullback is a stronger pullback. It's a pullback that's pretty weak. It's not as strong, I should say, as the previous lows down here. So it gives me a higher low. I'm getting, based on my rules, when I know exactly, not after the event, not up here, but I know exactly when that there is giving me a confirmed low or a confirmed pullback, and I've got a blue bar, I know exactly when I should be taking my trade. In this particular instance, you can see the blue arrows indicating that. But then you might say to me, Ian, having a methodology is one thing for trading signals, but we need to know, as I've stated to you, we need to know exactly where our risk is going to be. So our risk in each situation, everyone, no matter the time frame, if we get a signal in around here, our risk is from our entry to underneath this low. Because I want you to think about this. Why would it be underneath this low? We were taking this signal, blue bars, indicating strength. Price action indicating a higher low. If that market were only to go up a little bit, and then we're to retrace and break down through this low, is that going to continue having a higher low? It's not. It's broken through that higher low. So therefore, when I'm taking this trade, I know at the exact time that I'm going to take the trade, what my exact risk is going to be on that trade. And I can decide a couple of things. Firstly, I can decide not to take the trade because the risk's too great. Maybe this market has moved quite some distance based on a 60-minute chart. Or I could decide that I know what my risk is, and therefore I can arrange my lot size if it's forex or my contract size if it's futures, dependent on what risk I want to take on board in relation to my overall account size. So that's why we know at all times. Also, when you've got this software trading tool, it keeps you in trades longer, folk. Keeps you in blue bars longer. Otherwise, you might be getting out. Like yesterday, I was doing not a presentation. I was doing an education slot with one of my members, and we were talking about the euro dollar. The euro dollar showed quite a bit of weakness at the time yesterday, and he was talking about coming out of a trade. And I says, you know, what color are the price bars? And he says they're red. And I says, why would you be coming out of the trade? The market just went about another 25 or 30 pips lower at that particular time after it. So there's no reason. That's the advantage of having such a software trading tool. So what STB TrendTrader 2 will do automatically, instead of you having to learn this manually, folk, now it's not with me now, it will be in the future. It should have been here, say I had a glitch, but it will automatically be putting in the confirmed retracement higher lows and automatically where your stop placement should be. Look in here, as the market moves up in here. And then it means that if it does change trend, you're going to be stopped out in any remaining positions. Doesn't mean to say you cannot take some positions off as this market moves up. One more chart, pound dollar in the 1 hour chart, out of blue bars, lower high, no interest in here, folk. We're not taking a signal on a green bar or a blue bar. The market does fall. What does it do? It retraces. It pulls back into the downtrend. Red bars appeared. We knew where our entry was. Therefore, our stop's going to be there. Stop's going to be there the whole way down the page. So therefore, our software is going to pick this out automatically. So folk, I know time's going on. What like time for questions? Remember, no matter if it is forex, commodities, or shares you're trading, and no matter the style of trader you are, and what do I mean by style of trader, whether you're a very short-term trader, whether you're a medium-term trader or a long-term investor, if you're looking at shares, you can use the same methodology and the same software, okay? And it's all I have ever used for many, many years, and I can also tell you it's all you will ever need, okay? Providing you follow the signals and associated rules, the probabilities of trading success by using this system are very much in your favor. So if you would like this simple but powerful approach in generating trading signals and want to be able to use this yourself, I'm giving you the opportunity today to join my trading family. And let me just explain a little bit about what you will receive as a member. So firstly, you will get the TrendSignal software, NinjaTrader TradeStation MT4 at this minute in time. You're going to get full training on how to implement the software signals in conjunction with the confirmed price action trend. You're going to get the rules that determine when a vertical bar trading pattern high and low is in place. A little bit of learning around that, folk, okay, but by golly gracious, is it worth learning? I can honestly tell you it is. Money and risk management training, members only group training sessions, and you get free access to my daily forex box community trading room, folk, okay? Every day, every morning I'm in, and if it's not educational, it's trades I'm putting up or setting up, whatever, or reading the markets, whatever I see setting up, okay? And there's days I might not say an awful lot, but I've sometimes little is best, because those days often turn out to be the days that are just so good. Last week there was one day we put in 2 trades, and both trades turned into be over 100 pip trades on the community trading room. And again, what I do for my members, I have monthly live trading sessions. So what we do, we open up a live trading room about 11:30 in the morning, and we trade it to roughly 3:30 in the afternoon. And we do live trades. I'm trading my live trading account, the live account that I said to you that I've grown quite considerably. I trade that, not a sim, but a live trading account, using the exact same methodology that I've demonstrated to you today. No ifs, no buts. You can see it happening in front of your eyes. Again, what we offer is unlimited email support, but one of the key things here, folk, in all of this, which I think was very important to me when I was starting out learning a methodology such as this, and that was one-to-one training sessions. Not one-to-one, not 2, not 3, folk, but literally, I'm not saying some people need more than others, but the training sessions are there. And I don't think there's any member over the years can turn around and say, Ian, you didn't give me what I signed up for. Because as I like anybody making a promise to me, then I want to make sure that I'm making that. If I'm making a promise, I carry out those same actions. So this is very key. One-to-one training. You can arrange with me, Ian, can we have a session? Can we have a Zoom session? Can we have whatever kind of a session? Yes, it happened to be a Zoom session with a member I was doing. So you can say to me, sorry folk, I'm eating a hot sweet, so forgive me, don't think I'm being ignorant, okay? But just to keep this throat a little bit at ease, the total cost for the lifetime membership is 1497. And this includes the first year software license. So today, I have a special offer for round the clock trader of £200 discount. So it's at 1297, and this equates, folk, if you break it down, to £25 per week over the year. Now you were going to ask me, Ian, what is the second year software license, which includes, by the way, any updates that come out, and there will be 100% as long as I'm on this earth. Updates, STB TrendTrader 2 will be out this year. And it equates to $7.95 per year to renew that license, okay? So that brings your cost then down to £15 a week, folks. Now, just for the first time ever, and the first time I've ever offered this, I'm now given the opportunity to spread these payments over 3 months. And this equates to $432.33 per month for 3 months. And remember, as I've said here, this equates just into £25 per week. Now, remember, for non-members, if you're signing up to my daily community trading room and Forex Box, folk, it is £800 or £67, £800 per annum, or which equates into £67 per month. So you're getting that all for free. So Simon, I think, has put the link in the box. This is the website. If you were to join us, click on here, join now. When you are in there, it'll tell you what it's all about. There's what you're going to see, folk. You can either pay for it. I use PayPal as my merchant. You either can use PayPal or pay later, and you have 2 easy ways to pay. This divides it into 3 free interest-free payments of $432.33. So thank you for watching the presentation. Any questions, either email Simon or email me at ian@beawinningtrader.com. So thank you for watching. I hope you've enjoyed it, and I hope there are some questions that you want answered, or if they're not, maybe that's a good sign. Simon,
Ian,
over to you.
yes, there are 1 or 2 questions. Thanks for that. And well, I mean, we've known each other for so many times, for so many years. I know that you've got people that have come through around the Top Trader before. How long do people normally stick with the membership? Is it something that they do a year or 2 and then they go? I mean, most people, I guess, will just stay.
Well, Simon, I think, like a lot of not just in trading, but probably a lot of other instances outside trading, or business opportunities, or etc., you have got a core, you've a core person that will remain high or low. And I've got members that still come into our live trading room that have been with me for years. And then all of a sudden, you might have somebody that has just 6 or 7 or 8 months ago, and you don't hear from them for a while. Just recently, for example, it just happens to me.
With you 5 years, so there we are. That's great. Thanks, Graham.
Yeah, and just so happens an Irish guy there very recently, I've lost contact with him. And sometimes when you lose contact with somebody and you don't see them being that active, you start to worry. Think something went wrong. And all of a sudden, just there about 4 or 5 weeks ago, the guy has contacted me again. Ian, I haven't been trading for a few years. I'm getting back into it. Can we take off? Can you do some training with me? And again, we did that. So that happens, Simon, quite a lot too. But yeah.
Great. Just a couple of questions. Roy is asking, he says this is from about 20 minutes ago when we were looking at the software. He says there's still large movement within the coloured bars. Don't you still run the same risk of being stopped out of the trades? And I know this question comes up a few times. Where do you set?
No, Simon. No, you don't, because what we're going by on each and every occasion is we're dependent on where we have confirmed lower highs or higher lows if it was buy signals. So therefore, the only time you'll ever be stopped out of the trade, okay, at least on any final positions. I mean, if you started off with this with a couple of lots, if you were trading forex and you want to pull a lot, but any any remaining, you know, any left lots, I say let it run, because the whole secret, as we know, Simon, and you've heard it so many times, is let your profits run and cut your losses. And it's all right saying, yeah, work on a target, come out here. What happens in an instance just like this here, when this market starts going hundreds of pips lower, you feel pretty sick, and it's a lot harder to get into the second trade than the first trade. So if we have our stops strategically placed in underneath each confirmed low as the market moves up, therefore then any of this movement here, yes, of course, your equity is not as great there than what it is here. But remember, if you have another confirmed higher low than this, it means that you have a higher probability of making another confirmed higher high. So what you're doing is you're letting your profits run. So no, this is where the software comes into its own, Simon, in relation to keeping you into trades longer.
Okay. Is the system suited more for scalping, day trading, or end of day? Asks Yat.
It doesn't really matter, as I've said clearly. It doesn't matter the time frame that you pick. I can show you, maybe I haven't it up here. I would trade like crude oil on an 8 range chart, which is certainly scalping, right? So in other words, every 8 price movements it makes, if it goes from 106.10 to 106.18, that is one price bar. Or you can trade it on 60-minute charts or daily charts. Now, if you want to trade forex on daily charts, so be it. I personally don't. Probably 60-minute, 240-minute. I like the 60-minute chart in forex, the 240-minute. But if you want to put it on daily charts, you can. Okay. But remember, we're talking about big. You know, we're talking about catching trends, and sometimes daily charts don't make trends. Whereas if you're trading stocks, Simon, as you know, they're slower, and therefore they can move up and down, and whether they move today or whether they don't move until next week or 3 weeks time, it doesn't really matter, providing they're moving slowly but surely in that direction. I think you find forex, so it's forex, commodities, etc., are much faster moving pieces of trading, and therefore you know, I don't use it for dailies, but you can. The same equation, the same algorithm is behind the software, no matter what time frame you use it in. Exactly the same.
Okay. The last question here from Richard: Do a limited number of bars change color as price action progresses?
They will only change color from one color to another if the price action of that particular market changes. As you can see here, they don't change from in round here when there's uncertainty from red to green to red and then into blue. There's a little bit of uncertainty here, but then when you start looking at our confirmed pullbacks in here, there's no proper trade setup in here. First proper trade setup we got was here. So they don't change from A to B back to C. No, they do not. They will. They can, rather, I should, if the market's going totally sideways. Okay. But this, Simon, is where we can, this is why we use our confirmed pullbacks into either blue or red bars, because this massively helps to eliminate scenarios such as sideways movement.
Okay, great. Listen, Ian, we're out of time. The link is there in the chat box, and we will hopefully hear from you again. But it's good to see you again, and I'm glad you're.
Thank you, and thank you all for. Yep.
We'll catch up again shortly. Ian Foster from Beawinningtrader. There's the link. There's a special offer today for a discount off the indicator, and if you need to get in touch with Ian, you can do that. Do so through me. Or directly to ian@beawinningtrader.com. Great, Ian, thanks very much indeed. Take care. Speak to you soon.
Thank you very much. All the best. Thank you very much.
Okay, fantastic. We are moving along now. So thank you to Ian for that thing. Ian, you're still sharing your screen. If I can ask you to stop share the screen. How do I do that? There we are. And we're going to bring our next speaker in, who is Jay Lakhani from Vedanta Trading. Great to have Jay here. Make a panelist first, Jay. Now, welcome everybody that's here. We're halfway through our round the clock trader event. I'm Simon. It's nice to see you. I'm hosting this event today with 10 traders telling us how to make a little bit of money in the markets. And our next speaker, Jay Lakhani, Vedanta Trading. Jay, we've eaten into your time just a couple of minutes. I'm sorry about that, but let's get started. We're looking at trading mastery, a child's play. I know forex trading is where you are normally spending your time trading in the markets. I think if you're just logging in now, we should be able to, you're self-muted at the moment. But there we are, great. We can see now this slide. And you just need to unmute your microphone. Fantastic.
Hi, Simon, can you hear me?
Oh, there we are. Okay, system's working now. Great. Yes, welcome, Jay. Welcome to Round the Clock Trader. Good to have you back. And we've got a good crowd in the room today. I think quite a few people already that trade forex. Vedanta Trading is the company now, but previously you were with Bindal FX, but it is the FX markets where you are normally trading. Is that correct?
That's fantastic. Well, basically, I trade anything and everything that moves, primarily FX, but equal at the same time indices, oil, gold, and last couple of years have been looking a lot into cryptocurrencies. Yeah.
Okay. Well, I know crypto's taken a bit of a downward trend over the last month or so. Let's get straight into it if we can. I'm sorry we ran right up to the end of Ian's session there, so don't want to waste too much time. We can see your slide and we can hear you, so I'll hand over to you first of all. We can get started. If you wouldn't mind just telling us a little bit about when you started trading and a bit of your background, and then we can go into the presentation. That would be super.
Yeah, that's fantastic, Ian. I mean, basically, I've been trading for 40 years, and I've been a trading educator, mentor for the last 15 years. One of the key difference or the most important point with me is that when I'm actually teaching somebody, it's not with backdated data, it is with real live trading. And the best way one can learn is by way of watching somebody trade a real money account. So that's how I go about teaching and training anybody. As the topic of this presentation says, trading mastery is a child's play. It is a child's play if you believe in it. However, despite me telling you that it is a child's play, only about 5% of the retail traders succeed. And out of 5%, maybe just 1% do make mega bucks. 95% of them lose, I would say, 80%, which is the statistics from most broker websites, 70, 80, 85, I've even seen 90% of retail traders lose money. So in this presentation, what I'm going to talk about is why is it that retail traders lose money and how you as a trader can move on from that 95% club onto the 5%. The key point with trading mastery, a child's play is to keep your trading plan very simple. Now, for example, You can see my trading screen here. It is so simple. I have got as little garbage on that chart as possible. And as we move along during the presentation, what I shall be doing is I shall be sharing some of the real trades and the reasoning behind why I took those trades. Simplicity is often most overlooked ingredient in trading the financial markets. Now, what happens is often retail traders use complicated trading methods. And what I'll do is I shall take you through many of my own live trading examples, which I've actually, the trades I've shared in my live Telegram channel or my live trading webinars. The key point is use the key principle. And that, when you do it, there's absolutely no doubt you can, as a trader, succeed. Before we proceed, a quick risk warning. It should be understood that trading involves a high risk and you can lose a lot of money. And that is quite evident from the statistics from most broker websites. Today, what I'm going to cover is how you as a retail trader can achieve trading mastery. The most important aspect of trading is you got to have a trading plan. The trading plan must be simple. It must be based on price action. At the end of the day, it is this very simple trading system that I shall show you as we go along. And if you use those simple techniques, what the price action enables you to do is helps you to identify many trading opportunities. You see, you don't need a guru to tell you. At the end of the day, I personally believe the chart knows everything. The chart measures that fight between that fear and greed, the demand and supply. Secondly, if you've got that trading plan, you've got to follow it with discipline. You've got to have that mental fitness. Now, the trading discipline doesn't come overnight. It comes by following daily good trading habits. How you can overcome mental resistance, very important. How you can fight the fear of letting winners get into a losing trade. Self-sabotaging, how you take on a trade or go into a gambling instinct, even though you know that that trade or that entry is not consistent with your trading plan. So, in my opinion, trading is a child's play. Probably only the strategy will form maybe just 10% of your overall trading plan. The 90% is that mental fitness. If you can get the two in sync, then I tell you what, there's absolutely no way you can lose money from the financial markets. No matter if it goes up, no matter if it crashes. As earlier on Simon mentioned, the way crypto market is going, it's been crashing. But look, we as a trader, we don't give a damn whether the market's going up or the market's going down. If the market is crashing, what do? We go short, isn't it? If the market is bullish and going up, we go long. As simple as that. No rocket science. But you got to have that trading plan, follow it with discipline, and then the most important aspect is risk management. What many retail traders do is they use a very high leverage. They go into a gambling mode. They do not cut the losses. If you are able to cut the losses, if you get in the trade, of course you will have many losing trades. Nobody can say that, you know, it's easy to have like a 99% winning trade, 100%. No, that's BS. But yes, with the right discipline, with the right methodology, I tell you what, you can easily have 80 to 90% success rate. How can you achieve that? By being disciplined, pick and choose the good, low risk, high probability trade. And once you get into the trade, manage the trade, cut the losses. If the price is not doing what you expect it to do, get the hell out of it. As simple as that. What do retail traders do? They don't cut the losses, do they? What they do is they cut the winners. What majority of the retail traders do is they add to the losing positions. They cut the winners. They do not let the winners run. And again, as we move on, I shall be sharing some of my own real trades where I not only let the winners run, but when the momentum is very strong, I am adding to the winners. How many of you are able to add to the winners? Yeah. Lastly, you got to filter out BS. You see, internet is full of doomsayers. And ever since I can remember, right from the 80s crash, 1987, and that's when I started trading the financial market. 1986 is when I started. 87, we had the big crash. I remember I was working as a financial accountant at a British Airways company. In October, a couple of weeks before the crash, I packed up my job because I was making more profit from the financial markets than my work. And guess what? 2 weeks later, we had the biggest ever stock market crash. The 2008-2009 crash was nothing compared to the crash of 87. And ever since then, we have had doomsayers. The technology boom, the pandemic, or even the 2008-2009 crash, the recession, pandemic, and now we have the Russia-Ukraine war. Of course, the market does go up and down, but if we look at long term, the market does always push back. Before we go into the presentation, quite a few of you could be new to myself. My name is Lakhani, and I'm the author of Forex Mastery: A Child's Play. This is available from Amazon. And Develop a Winning Trading Attitude. This is a free ebook download. You can go over into my website, www.genius108.com, and it's a free download. And one of the things which I've been doing is I've done live trading seminars worldwide. Many here in London, New York, Canada, Australia, Mauritius, not yet Australia, hoping to do that pretty soon. Also India, Dubai, and quite many places. This year was a live trading seminar, which I'd done for Simon at Finacle Bank. I think we had a crowd of nearly about 75, and I was trading real money at that time. And that's the key, is for one to learn, is to watch somebody take a real money trade. How you can follow me? Obviously, as I mentioned, I'm doing live trading seminars. I haven't done any for the last 2.5 years, mainly because of the COVID situation, hoping to start again. And yes, definitely, Australia is one place I've not visited, and that's where I'm planning to do. But in the coming months, definitely there will be some live trading seminars here in the UK. You can follow me on YouTube. I do have lots of free tutorials or lots of videos looking at the trading system, trading plans, methodologies and often sharing my real trades. Also on my Facebook, feel free to take a quick picture of what you see on the screen. On my Facebook page here, Vedanta 108 Trading, many a times I am sharing my real trades, not showing you the profits at the end of the day, literally posting a trade, a picture of the chart, literally within 5 minutes of me taking the trade. And then, of course, as we progress throughout the day, I would actually update. Naturally, I can't share each and every one of the trades, but use that as a tutorial. Also, lots of stuff on Instagram, which is Vedanta Trader. Feel free to follow me there. As I said earlier on, trading mastery is a child's play. It is if you believe that it is a child's play. If somebody says, no, it's not a child's play, it's tough, it's very difficult because very few people win. Whatever you believe, you're right. Now, you don't need a secret. You don't need a holy grail to succeed. As I said earlier on, mental fitness and a simple price action-based trading plan. What do you see here? That's a real trade, which I've taken on one of my live trading webinars. You can easily have a damn good trading system with just an EMA, for example, a 200 period moving average. And you say, okay, as soon as the price is above that 200 period moving average, I'm looking for longs, period. And add on a couple of filters. For example, a 1, 2, 3 setup. Price crosses the EMA, and then you're looking for a pullback, a retracement, a 1, 2, 3 setup happens, and then you get a break of the 0.2 and 0.3, and you take on a trade, and off it goes. Just that very simple. You'll get right 40 to 50% of the time, right? 40 to 50% of the time you will be correct, and you can make a lot of money so long as you manage the risk. Risking 1 to achieve 3, minimum you aim for R3. So let's say you take 10 trades. 5 are losing trades. 5 times 1 is you lost 5 quid. 5 are winners. 5 times 3, you've made 15 quid. Simple math, you've made 10 quid out of those 10 trades. As simple as that. No rocket science. But what tends to happen with retail traders is they tend to overcomplicate the whole scenario. I've seen some charts like this posted, and indeed, this was actually one of the chart which one of my members had actually sent to me. Can you trade this? Absolutely no way. It is so difficult. You don't know a damn thing what's happening to the price action. There's so much of garbage. The same chart, it is this chart here. You can see below how clean it is. All you have there is the EA, the Vedanta 108 EA, giving out the trade signals and trade setups. So when I get those arrows, it basically is for me to look into my trading system, apply a couple of filters, and take on the trade. That's a nice win. That's a losing trade. I didn't get a signal here because obviously I do have lots of filters within that, and sometimes if those filters don't kick in, it doesn't take on a trade. A nice trade here. That was a losing trade. Small win here, and big win, losing trade, a nice win. You see how clean this chart is, right? All it's really doing is focusing on nothing but price action. That's it. Price action. And if you are able to do that, there's absolutely no way you can lose money. Just like as you go to an optician, that is before and after. Can you see better with after, or can you see before clearly with before? Isn't it? So easy. But what retail traders do is they are trying to find that secret. They are trying to find that holy grail. And those secret does not exist. Those holy grail does not exist. That secret lies within you, i.e. your emotions, i.e. your mental fitness, your trading methodology, your strategy, which has got to be simple, as simple you can get. The most important thing is keep it simple, right? The trading signals are generated by the EA, and you'll get the pop-ups on your desktop, or you can have it on the mobile phone. Now, you don't need to be glued to the charts all the time, whether you're scalping, swing trading. As soon as a signal is sent onto your mobile phone, you go over onto the charts, apply a few filters, take on the trade, set the stops, set the targets, and you simply move on. As simple as that. Earlier, I said filter out BS. Internet is so full of doomsayers, isn't it? These screenshots are not recent. They are from last year, okay? 8 to 9 months ago. For example, here, stocks, Bitcoin, gold is going to crash in October. I mean, I believe this was sometime in August. If you look at the stock market, September, October, November, it went up. So if anybody who did not have that mental capacity to filter out BS will have missed out. Yes, by all means, listen and take note of what's going on. But if somebody says Bitcoin's going down to zero, you don't need to believe them. Will it go down to zero? It may not. You don't know, right? All you can do is you can trade the price action. Depression is coming. Will it come? It may not. We don't know. But one day the recession will come, right? It will come. Depression will come, just as it happened in 1929. Now, whether it's going to happen in 2022 or 2039 or 2049 or 2069, by that time, many will not be around. So does that mean you stop taking action? Of course not. All you do is you focus on your trading methodology. A collapse is coming. It may come. Well, it has already started, but this was a screenshot many months ago, right? Now, because of people believing what many gurus are telling them, what they do is they don't take action. You had lots of gurus saying the market are going to crash. You had the technology bubble in the year 2000. Many didn't take any action. What's the result? They missed out on the biggest ever boom on the stock market. As simple as that. I believe a crash is a buying opportunity. Just look at the chart right from 1920s up until the recent years. Have we had many? Of course we have had many crashes. Look at that, right? It crashes all the time. I mean, that's the 87 crash, right? Look at that. I mean, that seems so insignificant, isn't it? Right? So when it crashes, it's a buying opportunity. When the market crashes, the price action gives you the clue. As I said earlier on, what does the chart measure? It measures fear and greed. demand and supply, right? For example, candle patterns. I mean, there are zillions of candle patterns. Am I going to learn each and every one of them? No, I'm not. I'm not gonna put so much of garbage into my tiny brain, right? I'm just gonna have a single-minded focus only on 2 or 3 candle patterns. For example, the railway tracks, the pin bar, right? And then apply few other filters. Always aim for confluences of indicators. So here, if you look at, that's a Bitcoin, right? I have a pin bar, a 1, 2, 3, down she goes. Again, you had the highs being broken, lack of momentum, that's a fakie, down she goes back onto the demand zone, back again to the demand zone. It had gone back up again and down again, isn't it? So the key point is yes, prices do crash all the time, as it keeps happening. This is the pandemic crash, okay? A very simple chart. No rocket science there. I have a topping formation, that long uptrend, I've had it broken, and all you really see is a series of higher highs, higher lows, higher lows, higher lows, higher lows. So when that keeps happening, all you're really looking to do is you're looking to buy, as simple as that. This is the first lower low, right? Did you have enough opportunity to have got in on this? Of course you had. You're not trying to pick the tops and the bottoms. This is right at the bottom. If anybody were following me on social media, I said, hey, this is a buying opportunity, right? And on my live trading room, this is exactly what I was telling my guys, or my members who were following me. Fill up your butts. It's time to buy. And guess what happened? Prices had nearly doubled. This is the 2008-9 recession. Many of you might have seen the movie The Big Short. Again, what do you see? Simple topping formation, a tail, a fake breakout. Bulls trying to get the market higher. It failed to take it higher. You patiently wait for a retest of that high. It doesn't happen. Now it starts creating a series of lower highs, and this baby is going down. It's a major decline, right? And this is when you go short, and as soon as you get a signal reversal, you're looking to buy. No rocket science. Again here, this is that pandemic, US 30, right? See how it crashes all the way down. Look at that big tail, right? A complete reversal, and market nearly doubled from the lows there. And there were some doomsayers there saying Wall Street, US 30 is going to go all the way down to 9,000. Yes, did it go to 9,000? It didn't. Could it have? Maybe it could have. But look, we are not in the business. Well, I'm not in the business of forecasting, right? I don't forecast as a trader. Now, I tell you what is one of the things which retail traders really love is when they are at various seminars. For example, I remember a few years ago, I was at the World Money Show at QE2 Center in London. I was on the panel, and there were several trading educators there. And one of the things which retail traders really love, and trading educators also really love to answer, is the question is where do you think the FTSE is going to be on 31st of December? Everybody had an answer, a precise figure, 5,000, 6,000, 7,000, etc., etc. I was the only one who did not give a figure. I said, I don't give a damn whether FTSE goes to 1,000 or 10,000 or 5,000. I'm only interested is in the FTSE if it moves. If it moves, I'm in the trade. If it goes up, I'm long. If it goes down, I'm short, period. I'm not at all interested in forecasting the market. I've been trading 40 years. You know what? I still cannot figure out where the market's going to be on 31st of December in that 40 years of history. Yes, maybe 1 out of 10 could get it right, but that's 1%. Key point is just simply focus on the price action. Price goes down, you go short, and as soon as you are into a demand zone, you're looking to buy. Okay, now I'm going to go through a number of real trades charts which I've actually shared in my live trading room, as well as on my Instagram page, as well as on my Facebook. Quite a few of you have already started clicking on my Facebook and Instagram, and you can see those real trades. So before I move into that, I'll just quickly mention some of the Vedanta special offers specifically for RTCT members here. If anybody is interested in the Vedanta EA, which basically is a trading signal generation, the cost of that is $1,999, and today you can get it for 50% discount, and that is the link here. The other thing which I started very recently, about 3 weeks ago, is a Telegram alert service. Now, generally, the Vedanta EA does the work for you, right? But there are quite a few members who basically, they just need that hand holding. They just need somebody to guide them. They just need somebody to filter out BS, price action. They just need somebody to tell them of the momentum. So I started the Telegram alert service. I basically work probably a couple of hours in a day, or sometimes if I'm active, maybe it could be a bit more. But those couple of hours, it's easy to make money. And you know what? I have yet to have a losing day. Yes, I've had many losing trades, but yet to have a losing day. And the cost of that is just £97 special. And the normal cost is $297 just for today. It's £97 for 12 months, which basically works out less than £2 a week. Yeah. And you can pick that up here on genius108.com, goldmembership.php. Just take a quick screenshot of these links. I think later on Simon will share it with you guys, and you can certainly visit my website, and on the drop-down menu on the courses you can see all those all those links. Yeah. Sorry, need to keep drinking water. Okay.
I'm sorry, I can't. I'm trying to copy these links straight to send, but for some reason I couldn't copy them out the chat box.
Okay. I've actually just typed it on the chat box as well, Simon.
Okay, great. Maybe I can share it from there.
Yeah. Okay. If not, I'll post it again. But have a look at on the chat window. I think I've got it there. Yeah. But some of you guys can also take a screenshot, and you can go over onto the genius108.com, and these links will be live only for the next 24 hours, okay? Because it is heavily discounted, only for the RTCT members, okay? So after 24 hours, these links will be taken out. As I say, this is the Vedanta EA, and I'm going to be sharing lots of examples, and that's the Telegram alert service, which not only gives you the alert, but also holds your hand, right? Guides you. Not just having those signals, but also guiding you with the psychology, the mental fitness, the emotions. So for example, when you're in that trade, right? You don't want to snatch the profits. I'm actually telling the guys, I said, okay, fine, take TP1, okay? and let the winners run, let the winners run. And certainly, say, supposing if I'm short in the market, I see there is a bit of coming up to a demand zone, then I would say, okay, take half of your TP2, right? And let the rest run, because I don't know what's going to happen next. Nobody knows. As I said, I've been trading 40 years. I've still not been able to get that secret and the holy grail of where the market's going to end up. All I can do is stay in the trade and trail the stops. Right. Price action, real trades, which I've basically shared. And the tips here I'm going to give to you guys is I trade price action, nothing but price action. Again, this is a trade. You'll probably see it on either my Insta or my Facebook page. I go for big targets. Okay, so there you go. Whilst I was actually talking, see here, this is an alert which I've just got from my EA. And once I get this, I just go into the chart and I apply a few filters. I then either dismiss it or I take on the trade. So that basically is a watch list. Okay, back onto the presentation. Is I'm not after small profits. I want mega profits, right? And this is an example. Take a trade. That's my stop loss. That's my TP1 target. As soon as my TP1 target is met, the trade is a free run. Okay? I'm aiming for a big, big, big move there. Retail traders don't aim for big money, right? They add to the losers, they average, they cut the winners. No, that's not the way to succeed from trading. Eliminate FOMO. You really need that patience. Again, this was a live trade taken in my live trade room in Telegram. Is as soon as I get that signal here, an up arrow, I'm really looking for either a momentum, a pullback. As soon as that happens, up I go. Straight away, a trade's taken. Patience is so important, right? Trail stops. Do not snatch the profits, right? Another fantastic example here. A short trade taken. My bindle momentum indicators are all a sea of red, which means I really need to stay in this trade for as long as possible, right? Then I'm trailing the stops, trailing the stops. I am aiming for a big win here, right? Very important. Again, example I just showed earlier on, how I use technology, right? I don't need to be glued to the screen all the time. Use the technology. Okay, you may not have the indicators or you may not have any EA, but even the MT4 hey, is so powerful. You can create simple alerts, right? And then you can go about with your day-to-day task. And this is what I really do, right? As soon as the setup comes, I take on a trade. I think this is oil, yeah? Use technology to help you, okay? Add to the winners. This is FOMC, 4th of May, okay? This is something which I was doing live broadcast all the time with my members. This was my entry here. The momentum is so strong, I'm adding. I keep adding. Every time it comes down to those ribbon, look at that, I am not at all snatching the profit, right? If the momentum is going your way, go for it, yeah? And sometimes when the momentum is really good, I'm actually looking at 10-second or 30 seconds chart, right? Again, you can use many of the softwares from MT4, which can enable you to help you with your trading. How many retail traders add to the winners? What do retail traders do? It goes up. They think, oh, it's gone up 300, 400, 600,000 pips. No, it's time for sale. It's time for buy one, get 10 free. Rubbish. If the market wants to go up, it's gonna go up, right? It's gonna go up. So this is something which I tend to help in my broadcast, in my Telegram group, as well as my live trading, is hold your hand. If the price is not doing what you expect it to do, get the hell out of it, take that small loss. If the price is going sky high and you long, stay in. Do not come out. This is the chart. The next, again, this is a trade which you can see it on my Facebook or Insta. I said to my guys, look, yesterday it went up sky high. Now it's gonna collapse. Prices go triple tops onto a supply zone. My lower time frame gave out a fantastic sell signal. I take on trades, and this was worth 1,000 pips. Now tell me, how many trading educators are going to tell you of the big move before it happens? Yeah, it's so easy with hindsight to say, hey, you should have sold here, you should have bought here. But to tell the traders live before it happens requires confidence, requires guts, right? You can easily go into my YouTube channel. There is a video of a live trading webinar I've done in Toronto, okay? I've got people coming up the stage, dancing, enjoying their pips and profits. Not many trading educators do that. Probably only 2 or 5 in 100 do that. And this is a perfect example of a real trade taken, and as soon as it is taken, shared on my Facebook page. Obviously, I won't be sharing so many trades for free, but I will share quite a few examples, right? Again, here another example of a trade taken. This was done in the live Telegram just a couple of days ago. And TP1 70 pips, TP2 running 100. I'm not taking the profit. I'm trailing the stops. Again, this is a screenshot from my Telegram group. You can see it on the Facebook. Stop of only 9 pips. Target is 90. Okay. Now, I don't put a target willy-nilly. It's based on science, and that science is price action. As simple as that. You got to have your losses small, but your targets must be big. But yeah, check this trade out on my Facebook. I posted this trade as soon as I took the trade, right? You can see it there, and that's the end result. See up here, that's my target achieved. This here was my TP1. I always break my trades in 2 parts. My TP1 up here was R3, and that is R10, right? That's the way to trade. This is a trade taken using a 10-second chart, right? 10 seconds. You'll have many people saying, hey, 1 minute is too bad. No, you can't use 5 minutes. This is 10 seconds. Don't let anybody tell you it cannot be done. Just because they cannot do it does not necessarily mean that you cannot do it as well. Yeah? Stop of 10 pips, target of 60 and 120. In this case, the target of 60 was easily achieved. Another example here, this is my Vedanta 108. At the moment, this is still on a testing mode. I'm not really selling that to the members, but working on that. Currently, I have Vedanta 108 V1, 1 minute, V5, and V15. So 3 time frames. So again here, just because somebody can't do it does not necessarily mean you can't do it. Nothing is impossible, right? When you take on a trade, detach from it completely, right? This was a live trade which I took at Finnecop Bank. Again, this was a seminar which I'd done for Simon a couple of years ago. Had a a really large, big group, about 75 or so, overcrowded. People were standing right at the back, some were even on the staircase. As soon as I took the trade, I moved on. I was taking question and answers. I was looking at other charts. Guys who were in the seminar, they were more worried about my trade, about my money. He says, Jay, you have taken this trade. Why are you not watching it? I said, I don't need to watch it. I only need to watch the chart when I am ready to take the trade. As soon as the trade's taken, I set the stops, I set the targets, and I forget it. How many retail traders are able to detach and move on? Very few. They are glued to the chart, right? No, you don't need to do that. So can you imagine those 70 odd members, those traders who are worried about my money? Can you imagine how they would react with their money? Yeah. Market is always right. Never argue with the market. Can it go down to zero? Yes, it can. Can Bitcoin go down to zero? Yes, it can. Who are we to argue with the market? That's the oil crash. Look, these are the signals which my EA gave out. Okay, did it go down to zero? It damn well did go down to the zero, didn't it? Yeah. So basically, that is how I work at Vedanta. Again, just a quick recap. The Vedanta special offers for today: trade signal generation, the EA 50% discount. That's the link. That's the Telegram service. All those chats which you saw, right, were either from my previous broadcast, which is specifically were only for the members. The Telegram service I just started only this month. Tell you what, ever since I stopped Bindle FX, again, the indicator Bindle FX, it's available from bindlefx.com. That's being run by my son a couple of years ago. I used to appear very regularly on Simon's webinars, and I said, look, I've had enough. Now I need to take a break, and I want to go around the world. And guess what? As soon as I hand over Bindle FX to my son Bhavesh, you had pandemic. I haven't traveled for 30 months. I was getting bored. I was getting lonely. My trading had suffered. And that's when I started the EA and got the mind ticking again. Started the Telegram alert service. I tell you what, ever since I started that, my own trading has literally gone sky high, right? So when I'm actually sharing my experiences, when I'm showing somebody what to do, when to do, how to do, I'm getting better and better at my job, right? So these are the special offer links. So do take a screenshot, and I'm sure Simon's gonna share it with you. And that's so that's the end of my presentation. If there are any questions, I'm quite happy to take.
Thank you very much indeed.
Sorry, Simon.
Yeah, I'm just saying thank you very much. I can't believe that photograph. I recognize that in the Fineco. That was the Fineco seminar in November 2019, when the world felt like a very different place, of course.
Yeah, I think Simon, you missed that, because I think it was me and who was it? I think one of the other.
You're right. Adam Harris was there.
Harris. That's right. Yes, I believe you were still in Spain. I think you were ill or something like that.
Yes, I actually got to the airport. I made it to the gate, but my knee was in such a bad. I didn't realize actually I'd been walking around with a broken knee for 3 or 4 weeks by then. So I tried my best. In the event, I'm very glad that you were there with Adam and Massey run the seminar well in my absence. But yeah, that wasn't. My knee's getting sore just talking about it again. So there we are. We have got a few questions. I've posted these links now. They are in the chat box Congratulations, by the way, on starting up the Vedanta trading. Of course, the pandemic did take us all by surprise, but it's good to see. And I do hear other speakers agreeing with that same sentiment, that actually a lot of educators get asked, oh, why do you bother doing the webinars when you can just trade? But in fact, there is a relationship between talking to other people. There's a social side there. It reinforces that you're doing the right thing because you're teaching other people at the same time, and it does. And I've heard this before from other people as well, that it can help their own trading to keep disciplined as they go along. So these links are all trade. There's the Gold membership, there's the FX Live, and of course just the website as well. Len's asking, how long are these offers available? Is it a 24-hour offer that you put these?
That's right. As you can see, it's heavily discounted. For example, £2 a week for those Telegram alerts is nothing. On top of that, £97. If on the first month, look, if we are not able to give you 97 pips in a month, you can request for a money back guarantee. Forget 97 pips in a month. Most often we get 97 pips in a day. As you can see, this was a live Telegram signal I'd given out this morning on GBP JPY. That's the entry, that's the exits. Profit bank 40 pips. Thank you very much. I think the other trade which I'd given out today was gold again. I mean, that was worth 40 pips. Only 2 alerts I'd given out. Generally, I only tend to work a couple of hours, 3 hours or so a day. Keeps me busy. But yeah, those specials offer only valid for the next 24 hours. And those links will not be valid after 24 hours. Yeah.
What chart software package do you need for the EA? Is there anything else we need?
No, you don't need any software packages. Basically, just a blank screen, and the EA will basically give you the alerts. So, for example, here, these are some of the alerts we just gave out, and as soon as those alerts come in, basically that's sort of like a watch list, right? And then you apply a couple of filters, and I've got a training manual which enables you to apply those filters. You take on the trades at the stops target and move on. And this is some also like I guide you on my Telegram group as well.
I see it. And Len is just asking, is the EA purchase, you might have mentioned this, but is it a lifetime purchase, or are there any additional costs or upgrades? And would you provide any assistance with installation?
Right. This special offer here, it basically is a 12-month license. For this one, I've got an extra bonus of 24 months. So basically, as soon as you sign up, you send us your MT4 account number. We program the code onto the EA. We send the thing back to you. And then you have to renew it every year or every 2 years. And the renewal is obviously, you don't have to pay the 2,000 again. It's a very small renewal fee. Currently, that's set at £199.
Okay. And one final question, does it include the Bindal indicator?
No, it doesn't include the Bindal indicator. For that, you can, I mean, I use it to help me have a visual, but you could go on to bindalfx.com, and yeah, that's what my son Bhavesh is doing. He tends to run daily webinars, as well as one-to-one mentoring and so on.
Fantastic. Okay, great. Well, if anybody else has got any questions, just you can contact Jay through myself or through the website, the genius108.com. And thank you, Jay, for coming back. It's been good to hear your voice again, and I'm glad that the trading's all going well. Life returning to normal. Everything's order is returned to the galaxy, as they say. So that's good news. I think the cost of the EA, I think that was, can you remind me what the cost of the EA
That's, The actual cost is 1,999, but just for today, it's discounted to 997, and instead of 1 year, you get 2 years.
So you get so you get twice as much for half the cost.
That's right.
Yeah. Wow. Okay. There we go. Fantastic. Jay Lakhani, thank you very much indeed for joining us. Vedanta Trading. I will take back the presenter from you now. I'm going to move along. We have Sunil Mangwani waiting to come up. So thank you very much, Jay. Take care.
Thank you, Simon. Thank you, everyone. God bless. Happy trading. Goodbye.
Fantastic, Jay Lakhani, Vedanta Trading. Very good. Now we are moving on through our round-the-clock trader event today. Been on the webcam. Oh, there we are. Good to have you here. We've got quite a few familiar names that have been on this event before. Good to have you back. Quite a few people that are here for the first time. So good to have you here. Don't be afraid to use the chat box to ask any questions you have on trading. Tell us what you are trading. Tell us what you like to trade or would like to learn about. The more information you can give us on the chat box, the more things that you would like to get out of an event like this. What is it that you are hoping to achieve? The more you can tell us, the more we can help you. So please don't be afraid to tap in some questions into that chat box. How to gain an edge trading currency correlations is our next presentation. Sunil Mangwani from forex123.com. Let me see if Sunil is logged in at the moment. He is, which is great. Let's go across and make you the presenter. Sunil, you should be able to accept the role of presenter now and share your screen.
Hey, hi, Simon. Can you hear me?
I can hear you. That's great, Sunil. Good afternoon, or good evening.
Good evening from here. Good to be back. How are you doing?
I'm very well. Sunil was in London at our live in-person IX show just almost 3 weeks, almost 4 weeks ago. 4 weeks ago tomorrow, 29th
Right.
of April. Time travels quickly.
Oh, yeah.
Great to hear you, boy. And it was really good to see you in person at the show. And I know you've got some other online seminars coming up soon as well. But if you could share your screen so that now we're not looking at my agenda screen. There will be a on the control panel. Fantastic. That's great. Wow, that's great. It's so good to be back using GoToWebinar, I have to say.
Oh, yeah.
Our last platform was a little bit hit and miss, wasn't it? It did everything. It did everything, but just not quite as slickly, as seamlessly as the GoTo.
No, that's true. That's true. Yeah.
You get what you pay for. Great. Currency correlations and currency relative strength is the title of your presentation today. Again, you've been in the markets a long time. By way of introduction, everybody that's not come across you've got a big footprint online on social media and YouTube and so forth. And I know even some of our other presenters have mentored with you themselves over the years. So that's quite a claim to fame. Maybe you could just tell us a little bit, Sunil, about your background and how you sort of came into trading, and then we can sort of dive into the slides and get started.
Yeah. Okay. Hi, everybody. I've been trading now 20 years, a little more than 20 years in trading. Got into it not quite by accident, but I was in a different business. I came across I was doing some online work, came across currency trading, took a liking to it, mainly because the currency markets, which is still my strength today. Technical analysis courses that I prepare, I design courses, I design technical systems which apply to any market. We have diversified into different markets, but the currency market remains my core strength. One of the biggest advantages of currency markets is technical analysis on the charts. What you see is what you get. Yes, fundamental factors do matter, but technical analysis comes first. Just as an example, compared to, let's say, the equity markets or maybe even the commodities, where you would look at fundamentals for buying and selling some equities, government policies, company performance, P ratios, stuff like that. Technical analysis would take a kind of a secondary stage or secondary confirmation. In forex, technical analysis comes first, because technical analysis works on the charts. It works by supply and demand. There's a reason behind the banks who are trading, the professionals who are trading it. And we've done a couple of presentations on the working of the currency markets, which in fact I'm doing one more, which I'll go over in some time. But what you see on the charts is what you get. And if you follow technical analysis correctly, and I have a signatory 3M's concept, which is called the money, mind, and method. Applying the correct principles of risk management, your mind factor, and the method correctly will ensure success in the market. I've been in this market long enough to know what mistakes the traders make. I started like this, to be very honest. It took me almost 3-4 years maybe to become reasonably successful. And I call it reasonable because it took me some time to become consistently successful. When we are looking at trading, we are looking to make a living from this if you want to do it full time. So you have to have a consistent income. You cannot have a hit and miss kind of a approach where you make 20% of your account in 1 month and next month you lose 50% of your account. That's not trading, that's gambling. If you want to get into currency trading or trading of any kind, you must understand the market. You must get into the risk management policies. You must understand the mind factor. And then you look at your technical analysis, which actually takes a very small part of your presentation. But going through it, like I said, 20 years I've been here. I have coached a number of traders. I conduct personal mentorship programs. Pre-COVID, of course, I used to conduct a lot of workshops around the globe. I spent a lot of time in the US with another company, but I spent about 4 years over there doing courses. I love doing personal courses, meeting people, which incidentally, I am coming back to London, Simon, again in the month of July for a course. But as a background, let me just tell you one very important thing. After I became successful, I used to be in London. I used to conduct a lot of courses in London, take part in a lot of expos. Somewhere I came across one particular trader, and through him, I got to trade with the banks, specifically with the Bank of America. And that changed my complete outlook on trading, because now I was on the other side and I saw what the professionals do in the currency markets to take out the stops of retail traders. And this is what I base my technical analysis on, is how professionals have the capacity to move the markets, to stop the retail traders, and what are the different points that you can gain. Currency correlations, currency's relative strength today is just one of the factors which, even though a lot of traders are aware of, they don't really look into it. So let's get into it. All right, should I start off with my presentation? Hello?
Hello, yes, we can see we're looking at still looking at your screen.
Okay. All right, folks, now let's just start off with some basic stuff on the currency markets. Now, Forex is a unique market. First of all, it trades 24/7, 5 days a week. It doesn't have a central exchange. There is no one particular exchange. It's a global market. Another different factor is that we are trading two financial instruments at the same time. So you have two financial instruments that are traded against each other, as compared to trading any single instrument, any other market. You're trading equities, commodities, futures, anything, you're trading a single instrument. Currency is the only market where you trade two different instruments, and you can take advantage of this unique fact and get a trading edge to get high probability trades. So there are a lot of currency strength indicators, currency correlations, charts freely available. As a resource, if you do a search on it, there are effective ones available, but you must know how to use it properly. Simple example. as a currency strength. If a particular currency, let's say the USD, is showing strength, you may look to buy this currency against a weaker currency, so you have movement in the currency pair. But if the USD is showing strength, it could be overbought. I mean, it could have been strengthening for a long time, could be ready for a retracement, and it could get you into trouble. You take a buy and price could turn against you. So these are the pitfalls that you should look at, and this is exactly what we are going to get into. So as I said, forex is the only market where two instruments are traded simultaneously. Now, a strength of a currency is measured vis-a-vis any other currency. And these are reflected as pairs in the forex market. And the two financial instruments, the two currencies of the pair, are traded against each other. Let's take the GBP, for example. I mean, since most of you are based out of London here, since I'm there, the GBP will have a different strength as compared to the euro. It'll have a different value as compared to the USD. It'll have a different value as compared to the JPY. So one currency will have different strengths or weaknesses vis-a-vis different currencies. So what you can do is take advantage of this unique fact. In forex, we can trade the majors and we can even trade cross pairs. So you can select what currency is going to move. Now this becomes a good basis. You should not, rather, I won't say cannot, you should not, just open up the charts and let's say I want to trade the Euro USD today. The Euro USD may not have a movement on that particular day or that particular week for that matter. And if you're just going to get after it, you're going to lose trading opportunities. So how do you decide what currency has a probability of good movement? That's where your relative strengths and correlations come into. So let's start off looking at it. There are two effective ways of using this concept. The first is your currency correlations. Now, since two currencies are paired, they do have a correlation between them. And as I said, currency correlation charts are very freely available. They can be an excellent resource. Now, I put on one currency correlation chart by a website called Metastock.net. I put on the link over here. It's an excellent resource. I have nothing to do with this, to be honest. I use it. It's a free resource. They've got some excellent resources over there, and it's real time. You can register for free, right? We'll have a look at those correlation charts over here. But one important factor to remember is correlations differ on different time frames for every currency. Now, this chart that I'm going to show will show the correlations on the daily chart. But if you look at correlations, let's say on a 4-hour chart, it would be different. If you look at a correlation between currencies on a 15-minute chart, that would be different because you have different movements on different time frames, different trends on different time frames. And a general thumb rule is that correlations are more effective on higher term time frames. Very specific to the currency markets is a simple fact that who is trading the currency markets? It's the banks who are known as the market makers. They are the ones who trade the markets more. They are the professionals, and they would tend to trade on larger term time frames. They are not interested in trading on a 5-minute and 15-minute time frame. So obviously, this is where the big money is, on higher term time frames, where the correlations and these factors of relative strength that we are going to talk about work much better on higher term time frames. Now, simple correlations, I'm sure from those of you who are trading currencies, who are familiar with the markets, a simple correlation fact is, if you are aware of this, that the two currency pairs, the Euro USD and USD CHF, move in opposite directions of each other. So if the Euro USD is going to go up, the USD CHF will tend to go down. So obviously, this is one of the first basic things that we learn, is that if you are going long on the Euro USD, you should not go long on the USD CHF because it's going to move in the opposite direction. So that's just one of the things, but there are different correlations between all the currency majors and the cross pairs. So this is a correlation chart, which I've taken from Metaf. And as you can see over here, this is on the daily time frame. We do have currency correlations also on the 4 hours, on the hourly, on the 15 minutes. I've just taken it on the daily time frame. So you can go, the link is over there, you can have a look at it. So this has got currency factors to it. Numbers. Green numbers signify a positive correlation, red shaded ones signify a negative correlation. Obviously, we are looking at values which are very, very high. So as an example, let's take this first one. I've marked this left-hand top corner one, the GBP JPY and the Euro JPY. Now this has a correlation of factor of 92. Now another correlation, basic correlation that we all know about is the yen pairs. The Japanese yen is always the second part of any currency. It's never the base, it is always the second part. So all the yen pairs tend to move in the same direction. Now this, of course, has got GBP JPY, Euro JPY has got a factor of 92. But if you look at any other yen pair, they will also have a higher, stronger correlation. So obviously, if you're looking to, so both the GBP and the Euro, they are both paired with the JPY, which is always the second part. You pair the JPY with any currency, the JPY will be the second part of the pair, never the first one. That's the designation of the currency markets. So these two currencies, GBP JPY, Euro JPY, would tend to move in the same direction. Now, since it's got a very high correlation factor of 92, if you're in a buy on the Euro JPY, you obviously should not take a sell on the GBP JPY, since both of them would move in the same direction. Now, of course, I keep getting this question, and it's quite funny, but every time somebody asks me this thing, okay, so let's take both the currency pairs, let's take a buy on both the currency pairs. So if you profit on both of them. Fair enough, you will. But the downside is that if you take a loss, if you have a losing trade, you're going to lose both the trades. And some parts of risk management which come to the fore as a trader, which I always advocate, is your risk management is one of the most crucial factors. As long as you control your risks and see that your losses are small, your account has a much better chance of growing. So knowing these correlations keeps you out of currency pairs. You can't just trade any currency pairs, you have to look at correlations. So this is an example of a positive correlation. Let's take an example of a negative correlation. Now, what I have marked over here, if you can see, it's in between. Now, most people would not look at these two currency pairs as a kind of a correlation. So AUD JPY and GBP AUD, would you really, correlate these two currency pairs in any way? Not really. But they do have a very strong negative correlation of 90. Which simply means that if the AUD JPY is going to go up, is expected to go up, the GBP AUD is expected to go down. Now, these correlations do change. And let's be clear about one thing. Nothing works 100% of the time. It's not necessary that these factors will happen, but it gives you an edge. So you can take advantage of the strong negative correlation between two currency pairs. So taking into account this negative factor of 90 between AUD JPY and GBP AUD, doesn't it makes common sense, because the AUD in the first pair is the first part is the base, and in the second currency pair is the second part, it's not the base. So obviously it would have an inverse correlation. So if you're looking for a bullish setup on AUD JPY, then on the same time frame, this is important. Let's say I'm looking at a bullish setup on the AUD JPY, let's say on the daily time frame. I would just check the GBP AUD chart and see if there is a bearish setup over there. Now, if there is, it just reinforces my bullish setup over here. If there isn't, it does not stop me from taking the trade on the AUD JPY, but this is something which I always advocate. It would change your trade management part of it. Trade management, very crucial part of your trading. It's very easy to get into a trade. It's not easy to get out of a trade. And your profits come when you manage your trades correctly. And taking this a little further, Let's say that I'm looking for a bullish setup on AUD JPY. Let's say that there was a similar bearish setup on the same time frame on GBP AUD. Then my trade management on the AUD JPY is I would tend to let the trade run. If it reaches my target number 1, I would expect it to go to target number 2, which I do have already set up. So I would try and take off some small positions, move my stop, ride this pair to milk it out of all possible moves, because I've got a secondary confirmation to it. On the other hand, I'm looking for a bullish setup on the AUD JPY, and there is no bearish setup on the GBP AUD. But I come across the bullish setup on the AUD JPY. It fulfills all my conditions. It will not stop me from taking my trade. The only difference is if and when, I'm saying if and when price reaches my first target on the bullish trade, I would probably tend to get out of the trade, not tend to let it drive. Take my profits, get out, because somewhere something else is not confirming. So let's get out of the trade. Let's take the money and get out. It might just turn against you. So these factors will influence your trade management, will influence the way you trade. So what we are looking for factors which give you an edge. All right, so these are the correlations that we looked at. Now, the second part, I'm just going over it. I'm not going to take too much time. It's a very short presentation, but short and sweet is what I would call it as. Second is the relative strength between currencies. Now, this does become very important. Let's have some, look at some simple facts on the pairing of currencies. So if you have the first currency of the pair, let's say Euro USD, is gaining strength, and the second currency of the pair, so if the Euro is gaining strength and the USD is weakening, this particular currency pair, the Euro USD, will have a strong movement to the upside, and vice versa. You have a strong movement to the downside if the first currency is weakening, the second currency is strengthening. Now, there may be situations, and there are situations, when both the currencies that you are looking to trade of the pair are strengthening at the same time or maybe weakening at the same time, then this currency pair would not move much. It would be range bound. And you've seen these situations where currencies tend to go into a range bound situation. As a trader, what do I want? I want a movement in a currency. I want a good trend. That's where I make my money, right? I buy somewhere, I sell it. When it goes to a higher price, I would probably go the other way around, but I want movement. And this is one of the good ways of determining which currency pair should I select to trade today or this week by looking at the relative strengths over here. So like I said, let's take the currency pair Euro USD. So if the Euro USD is currently in an uptrend, if you tend to look at the currency strengths, it would indicate that the euro is gaining strength versus the USD, or it could be the other way around, that the USD is weakening against the euro. Could be either of the two. So the strength of the uptrend would depend on how strong is the euro or how weak is the USD. Right? So when we are looking at a pair, each currency has got a separate factor to it. Each currency has got a separate strength, a separate weakness. And that's how we gain an edge. That's how we look at, okay, this is a currency which has a possibility of moving. And like I said, if both the euro and the USD are gaining strength at the same time or weakening at the same time, this currency pair would be range bound and you would not expect any trending movements. So you should not be looking to trade this currency pair at this particular time, till the time one of the currencies of the pair starts exhibiting some kind of strength or weakness, as the case may be. Now, knowing this, there are different indicators, resources available, right? So as a trader, if we need volatility and movement, we should look to trade a currency pair which will exhibit these. So you should choose select a currency pair which will probably offer a higher probability of movement by comparing the relative strength of the two currencies. So like the correlation charts that we went over, there are a lot of free resources available to compare the relative strength. But again, we must know how to use them effectively. Let's get into two very simple things which are available for free. Again, if you do a Google search on it, and pretty effective. So first is something called a currency slope strength. Now, let me just go over the chart. So this is what a currency slope strength looks like. So each of the lines in the lower window are of each different currency. The majors, if you look at it, we have 7 majors over here, right? If you look at the currency pairs, you have the majors paired against each other. You have cross pairs of each of these 7 individual currencies paired against the other currency. That's where your majors and your cross pairs come in. So this is what a currency slope strength looks like. Once again, if you do a search on, this is not my indicator, to be honest. It's online for a MetaTrader. You can do a search on MT4 currency slope strength, and you'll probably get it as a free download. So how does this work? What does this do? So this is designed to measure the strength of currencies individually and compares the strength of each currency separately relative to all others. So if you, okay, I'm going to go over the charts. So the different ways of using this, again, if you do a download on this, it comes along with the rules that this is what you look for a crossover over here, look for when it starts moving from the midline upwards, etc., etc. Very different ways of using it and pretty effective. But what I find the simplest way of looking or using this is look for oversold and overbought situations on the currency lines that we have. So when you have two currency lines, which are extreme opposites of each other, these two would tend to revert back to the mean, which is a standard basis of technical analysis. And this would indicate a directional move in the currency pair. So let's take an example, what I've plotted over here. I mean, you may not be able to see, it's a little small over here, but just as a point, this is my, I'll be giving you my email address. Anybody of you who wants the presentation, you can contact Simon or you can contact me and I'll send it across to you, not a problem. So you can study it more effectively. As you can see over here, what we did have was this marked over here was the AUD currency strength, and down at the bottom is the JPY, and this is the daily AUD JPY currency pair on the daily time frame. So if the AUD is extremely overbought and the JPY is extremely oversold, they would tend to revert back to the mean, and this is what happened, that price did come down after some time. Now this is where you need to use it properly, that for some time price did go up. You would have expected the AUD JPY to revert back or go down immediately, but there are different factors we have to take into consideration. But eventually this currency pair did move down. That's because the JPY in this case was extremely oversold. And when you have readings like these extremely oversold readings, there's a high possibility that it tends to revert back to the midline, to the zero line. So this is one example. The same thing, same currency slope strength on a different currency pair on the New Zealand USD daily. As you can see, I have marked it over here. This was the New Zealand, and this was the USD, and this was the New Zealand. So in this case, the USD was very strongly overbought, and the New Zealand was pretty much comparatively oversold. So you would tend both of them to revert to the mean. So you would expect the New Zealand to go up, USD to go down, which means the New Zealand USD pair should be going up, which it did. And in this case, it did. Now, like I said, it is effective if you look at it, even if you just go back and you look at the current. Let me see if I can have right? Let's have a look at extreme of this extreme and this extreme. Now from the colors I see again is the JPY, and I think this one is the USD again. If I plot the USD JPY going up, USD coming down, so you would have the USD JPY probably turning to the downside over here, right? Again, you look at other extremes over here, like this extreme versus this extreme. This is again the New Zealand, and the blue one is the euro. So you would have the euro New Zealand, which would tend to move over here. Keep in mind that this is just an effective tool, and on higher term time frames works much better on higher term time frames, right? So this is one very effective way of using it, choosing what currency pair is expected to move. Once again, try to use it on higher term time frames. If you go on the 15 minutes or the 5 minutes, there's too much of noise over there, and it would probably be not as effective. 4 hours and dailies are very effective. 1 hour to a certain extent, yes, it would work. Right, so as I said, there's a good resource to have. You can always fall back, choose a currency pair that you want to trade with. Now, another indicator available is a currency strength meter. So once again, what it does is it calculates the strength of the currency pairs on different time frames. Again, now this is on a daily time frame. If I use this, let's say on the 1 hour, the currency strength of each currency would be different. So here you can see I put down the CAD CHF. What you can read down the two extreme lower values. You have the CAD CHF and the USD CHF, extremely negative strong values. And obviously you can see the CAD CHF has been in a downtrend on a daily time frame. So obviously if it's been down there, it'll show as a weak currency. But this currency strength meter has a drawback. Now, if you look at this, let's take the same thing, the USD CHF. The USD CHF has an extreme negative reading of 954 in this case, which is the weakest of all the currency pairs which are listed in the currency strength meter. Now, the simple fact is, if the USD CHF is extremely weak, I put on the chart of the USD CHF. Obviously, it has been in a downtrend for a very long time, so it is extremely weak. But there could be a disadvantage that if it is in an extremely strong negative value, it could just be in an oversold situation. Now, looking at the value, a trader would say, okay, let's sell this. Let's take a sell position. Let's keep short on this one. But due to the extremely oversold condition, it could just tend to retrace up and it would stop out your short position. So this is something you have to be careful of. What you should do ideally in such a case is you have a setup somewhere. Let's say my way of looking at it is I would first look at the currency slope strength, decide on, what are the currency pair that I should be looking at. Then I would look at the charts. I would look to see if there is a setup that I have. I'm more of a pattern trader, to be honest, and unless and until I don't see a pattern, I would not want to get into a trade. Let's say I see a pattern, I would come down to the currency strength meter, and let's say on the USD CHF, if I see a bullish pattern and I see that there is an extremely negative reading, it would reinforce it that yes, this has got completely oversold and the possibility of it retracing is high, so my pattern might work. Or if my currency strength meter of the currency indicates a mid value somewhere, it's still good enough. At least I know that there is some strength left in it. So it has to be a combination of various things. The whole point of doing this presentation was, one, you should understand the correlations between currencies, what currency pairs should be traded, what currency pairs should not be traded, once you are trading or selecting one currency. Should understand which currency pairs correlate to that or go against that. Second, what currency pair should I select? let's say randomly, I just open up my charts, I look at my currencies, and I see a setup on one particular currency. I would always look at the currency slope strength to see if both the pairs of these currencies are giving some extreme value somewhere. Will there be some movement? If both the pairs are kind of in the mid-range, they're range bound, I would kind of let this trade remain. Said, okay, we are not doing anything about it. Let's look at something which will give me strength. And once I have identified a pair which gives me a relatively higher probability, I would check the currency strength meter also. So take advantage of these unique features, but use the resources as a means of confirmation to support your trading analysis. Don't just use them that, okay, this is it, and I'm going to buy because this says so. Trading is an amalgamation, as I said, of different factors. And the more knowledge you have about how the market works, what are factors which will give you an edge, how do you use these factors, etc., will definitely give you an edge. Now, there is one more. It remains outside the scope of this for the simple reason that we don't have the time, but there are currency indexes available. Again, you can find them on metaf.net. Probably some other time, if Simon, of course, Simon will always have these webinars, and next time we are here, of course, I'm going to be here. I would probably do one entire webinar on currency indexes, because like the US dollar index, you have currency indexes of every currencies available. The Euro index, the GBP index, the CAD index. Using those definitely gives you an edge. I do use them very frequently, and they work much better than the currency slope strengths that we are looking at, than these currency strength meters. But once again, it's how to do it properly, and we'll come over it next time. We'll definitely do it. But this is what I do in my trading: look at different factors, give the traders an edge. What are the values which will give me an edge over the market? All right, so that brings us to the end of this presentation. Like I said, short and sweet. Anybody who wants this, you can send me an email. Couple of points. I am organizing one of my free one-day webinars 2 days down the line on Saturday, 28th May. It is on the GMT, same time, GMT time, 2 p.m. Deciphering technical analysis. And I would honestly suggest anybody who's interested in trading, please do come and attend. It's a free webinar. My intention is only to make the traders aware. What I will be going over is what makes the forex market works, who's on the other side of your trade, how do these professionals move price, what are the factors that they use to trap the real traders. So technical analysis, looking at it, how do we look behind the charts to see what's really going on? Please do join us. I would love to see you over there if you want knowledge, and I can honestly assure you it'll be well worth your time. It's free. In any case, I'm not charging you anything, right? Come over. And I am holding a London workshop. The date has been decided for 16th of July. It's a Saturday. It's going to be a one-day workshop on one particular technique, trading the class A divergence using advanced Fibonacci ratios. This is my mainstay of technical analysis. This is a technique that I use primarily. And you'll understand why I use this if and when you do come to my free webinar, because the way professionals trap the retail traders, it creates a divergence. And if you are in line with what the professionals are doing, obviously you have a much better chance of succeeding. I always say you're riding on the coattails of the professionals, and you can get some excellent trades. And this is a unique workshop being held after a very long time post-COVID. It was great. I mean, being at the ixinvestor show with Simon, it was great meeting everybody. I love meeting people, talking to them. Please feel free to find out more. For any further information, visit my website. All my events are listed over there. This is my email address, sunil@fibforex123.com. Please feel free to send me an email anytime Any question you have, I always respond back. You want to have a look at what I do, you can follow me on the social media. I have a pretty decent presence on Twitter, on LinkedIn. I have my own YouTube channel where we have a lot of YouTube videos. Feel free to get in touch with me anytime. Well, that's about it. And it was a pleasure being over here. I do hope that you picked up something of knowledge over here. Please feel free to contact me anytime you want. Thank you so much, guys. Anybody has any questions, let me know.
Thank you, Sunil. Yes, thank you very much. There's a currency correlation website that you mentioned, I think, earlier in the presentation. Could you remind us of that, what that website was?
I'll put up a slide of that. So there you go. It's called mataf.net. If you go to mataf.net, if you go to the forex tool section part of it, you'll find the correlation charts. You'll also find the currency indexes over there. There are a couple of other good resources on currencies available there.
Okay, just typing that in. Fantastic. Okay, well, listen, thank you very much indeed. You bring us up to about almost 20. Does anybody have any questions for Sunil at the moment? We'll stay on the line. If not, I think we can probably take the opportunity for a short break since we've finished a little bit early, which is great. Sunil, do get in touch with me. Let me know a bit more about the webinars and the seminar, and I'd like to send something out to the whole list when you have it ready. But thanks for joining again. It's great to hear your voice, and thank you for coming on. If we've got any more questions, I'll pass them across to you, but I'll take the presenter role back in the meantime, so that we're going to take the advantage of a quick break before we have Stuart starting in 20 minutes.
Great.
Okay, many thanks again. And please put up the link for the Saturday webinar. What is that?
Ivan.
What is that?
I'll put across the link for the webinar, the free webinar on this coming Saturday, and also for the workshop.
If they go to your website, will they find it at FIP4X123?
It's there. It's there. It's listed there.
Yep. You'll be able to find it from the homepage. Great.
Yeah.
Okay. Thank you, Sunil. Many thanks indeed.
Yeah. Thank you. Great being here again. Right. Bye.
We are going to take a very short break. We've got about 20 minutes before we come back for Stuart Hopkins at TrendSignal. So it is 2:39 at the moment. Let's take a short break. We'll meet back here in about 15 minutes if we can. Okay, fantastic. So that is now 5 to 3 p.m. We're back. Hope you had a good break, cup of coffee, cup of tea, run around the block. We still have 5 fabulous presenters lining up to teach you some trading skills today. Our next speaker, Stuart Hopkins from TrendSignal. Some of you that are here will know that I send email promotions for TrendSignal on a regular basis. They've been around for years. I've known the company for years, and they provide some great education and community for traders as well to learn strategies and to get ahead with the trading. So lots of good stuff there, and I'm pleased that Stuart Hopkins is here today to tell us a little bit more about what they're doing over at TrendSignal at the moment. I know there's been lots of new classes, lots of new material. Everything is being developed, and on the back of that, there's been a lot of exciting cryptocurrency trading masterclasses as well. So lots going on there. Stuart's here in just a minute or two to take us through that. We are welcoming Adam Harris at 4 p.m. He's going to be doing some live market analysis for us. Many of you will know that I work with Adam on the Fineco webinar workshops as well. So he's going to be giving us some live trades at 4 p.m. 5 p.m. Thiru Nagappan from Massey Markets, again another trading educating company. Thiru's been around for a long time, no stranger to round the clock trader, so we'll look forward to seeing him at 5. We're crossing over to the USA in 6 p.m. our time for Bobby Hillier at the Metastock. Metastock, of course, very big platform in the US. Lots of tools for traders and that. So finding a trading strategy that works for you. Bobby will be joining us at 6 p.m. for that. Back in the UK for Charlie Burton at 7 p.m. our final speaker. Interview with Charlie, how and why he trades. A little bit of news about the new business that he set up, Charlie Burton Trading. Of course, Charlie you will know ex of Easy Trader until the end of last year, where he ended Easy Trader and then restarted his own business called Charlie Burton Trading. And we've got some news for you about that as well. So stay tuned if you can with us through to the end of the show at 8 p.m. Anyway, coming right back to today, 3 p.m. Stuart Hopkins from TrendSignal, and I think Stuart is here in the room, which is fabulous. Let's go across. We'll make Stuart the presenter and switch the microphones on, and we should be able to get started in just a couple of minutes. So, Stuart, if you can hear me.
Afternoon, everyone. Welcome.
Hello there.
Simon.
Good afternoon.
Yes.
How are you?
Yes, lovely. Thank you. Thank you for having us here.
Oh, always a pleasure. Always a pleasure. I can see you're no stranger to the GoToWebinar platform. Straight in there.
No.
The screen share.
A seasoned user. Yes.
Oh,
okay.
great.
Just a quick check. Can everyone see my screen? It says TrendSignal Dynamic Trader Trading Strategy.
I'm looking at it and I can hear. So if everybody just give a little yes in the chat box to let us know that you can hear and see. Okay, before we get started, that would be terrific. Now I actually have the questions box here, so I'll repost the questions for you, or might just sort of jump in and see if we've got a question. But what are we going to be looking at today? I mean, we work with TrendSignal now for many years, telling people about the webinars that you do and the education that you do. What's new this year? What have you been focusing on?
Well, as you mentioned, there's a number of new things that we've been introducing, things like cryptos, etc. Our faster-paced end-of-day trading, rather than we call it a D1 accelerator. It's end of day, but it's a much faster pace, typically only in those trades 1 to 3 days. But today, what I'd like to look at is something that we call Dynamic Trader. Now, we've been running Dynamic Trader for quite a while, and it's all about intraday trading. And the reason we wanted to to bring this up really is that a lot of traders come into trading and they come straight into intraday trading, and they can have a really bad experience very quickly because unlike larger time frames where you're going to be limited to the number of trades, as we know, intraday trading, hey, you could be doing 10, 20, 30 trades in a day, and if you don't know what you're doing, then it can be a serious downside to that. So what I'd like to do is just really present what we do, just a couple of slides, and then I want to go on to some live charts. Now, I can't guarantee there's going to be any trades coming up, and equally I can't guarantee there's going to be any winning trades coming up, but we will have a look at it, and we can drag the charts back to see what's come up today, and how we take those trades, how we identify them, and also then how we manage those trades during the day as well. And just to let everyone know, when we go through this, you have the opportunity just to register for our workshops that we do every week, and we do 7 workshops every week, and you will be able to register for those. And in those workshops, they're between 1 and 2 hours long, depending which one it is. We are calling, managing, and exiting live in front of everyone intraday trades. So register for it. If you like what you see now, register for it. Come along. It is free. Come along, and hopefully you'll pick up some tips and ideas on how to manage it then. So let me start.
In the chat box, that's the long link that I've just put in the chat box now. So if you want to go ahead and that'll take you through. It's actually a special offer, I think, that you've put together for us, which is fantastic, Stuart. Really appreciate that.
It's 2 weeks. Yeah, 2 weeks completely free access. You know, just come along. There's a whole. I'll show you when the times later. But first of all, let's just work our way through. And the first thing really I want to really to show you is just a little bit about the performance of what I'm going to show you and what you'll see in the workshops has produced. And I think that's important because you need to know whether or not you want to spend your time coming along to them. Because if it's of no interest or the performance is not what you want, then there's no point. So first of all, I want to just go through a couple of facts, and these 3 points might help you. So number one, when we're trading our intraday trades, typically there's going to be between 6 and 10 trades in a day. Now, we'd like to win every day, but let me tell you, we don't. Typically, we will win around about 3 out of 4 days. So, and I'd like to say it was nice and equally spaced like that. Every 3 out of 4 days we win, and the 4th day you lose. It would be lovely, wouldn't it? But that's not reality in trading, and we all know that. We might have a run of losing days and then a nice run of winning days. An important fact about it is that there's never been a losing month using these strategies. We've never had a losing month. So, point number 2, our average winning day is approximately twice as big as our average losing day. And if you put those stats together, those 2 points, it produces a really powerful strategy and a method of intraday trading. And you might be wondering, well, why is he talking about days, not trades? I'll tell you why. I'm actually not really interested in individual trades because we're getting about 6 to 10 trades in a day. And if one of those trades matters to you, then you've got a problem. You are risking too much. So what we will be doing is not just managing the individual trades, we're managing the day, we're managing the month. Because at the end of the day, come the end of the day or the end of the week, if you think I can remember those individual trades, think again, I can't. But what I will remember is, am I up for that month? Am I up for that day? They're the important things, because there is only one measure of success in trading. It isn't how good our reward to risk ratio is. It isn't how good our win rate is. The single measure of success is your bank balance positive, and is it moving in the right direction? It really is that brutal. Okay. Now, point number 3, this is an example, and it's based on our traders. Okay, so the average typical risk that one of our traders would take on one of our intraday trades is 1.5%. So they're risking a very small percentage of their account on any individual trade. And our average stop, so this is looking at the DAX. Our average stop for the DAX is 20 pips. Now, some days it may be 30 or 40 points. Other days, the average might be 10 or 15 points. It will just depend upon how much price action is happening in those individual days. And the next bit down here, I think might shock you. Based on those numbers, if you were to average 10 points per day, 1.5%, typical stop 20 pips, that would produce around about a 500% return per year. Does that surprise anyone? Who was thinking that if they're doing intraday trading, they're going to have to get 50, 100, 200, 500 pips in a day? It's going to be stressful. It's going to be a nightmare. That is the norm for most people. But if you're doing it correctly and you understand the value, then all of a sudden, all that stress of trying to get those numbers disappears. All we need to do is to manage those trades over a day, and by achieving these numbers, that's what happens. Who's shocked by that? Who is shocked? Let me know if you are. Write in if you are. I expect there's a lot of people shocked.
Yeah, definitely one or two people. Yeah, definitely shocked.
Yes, yeah, absolutely, yeah. And remember, I'm saying, yeah, I'm saying 10 pips per day, not per trade, per day. That's it. Okay. Let me show you a breakdown. And remember, this is all background, so you can judge whether you want to come to these workshops or not. And we're going to have a look at some of these trades as soon as we finish these slides. There's only a couple of slides, so don't worry. I won't be on them for long. So the left-hand chart, that's the DAX. We like to trade two particular markets, the DAX and the Dow. Reason is, lots of good movement, small spreads. And you can see here, this is a chart of the capital of the returns per month since, well, about 4 years actually, not far off 4 years, just a little under there, just a little under. And that's averaged around about 30%, using a 1.5% risk per trade. You can see that is May at the moment, up until last Friday, which was around about 16.6%. Underperforming a bit on the underperforming this month a little bit, mainly because that this month the stops, our emergency stops in those trades, which we base our stake sizing on, they've been much larger this month because of all the volatility that's going on. And then you can see over on the right hand side the Dow. So the DAX we trade 8 till 11 and then 1:30 till 4:30, and the Dow is then traded just on the evening session, the US afternoon session, 6 till 9, and you can see there over that one period, over that one session, we're averaging about 22% on there. And again, any questions you've got, you feel free to fire away. For one thing for sure, it is not a linear return. You can see we have smallish ones, we have average ones, and we have substantial ones in there. What will come up each month will come up. Now, how do we trade this? What are we actually trading? Well, we're trading a 2-minute chart. It's a very short-term chart. And everything we do about with the way we trade this and what those stats are based on is basically maths. That's all. It's just maths. We are trading probabilities, and we translate those probabilities into a number of indicators that I'll show you in a moment. We use a standardized rules-based entry. Every single one of us, once you know the rules, every single one of us and every one of our traders can take exactly the same trade with exactly the same emergency stop, and that emergency stop is there to protect our account. Small stops, average stop on the DAX is around about 20 pips. On the Dow, it's just under 50 pips. Short trade duration, we'll be in these trades for, it can vary from a couple of minutes to maybe an hour. But what we definitely do not do is carry trades overnight. So it's short trade duration, no overnight carrying of these trades. And you know what that means? Getting rid of some of that, the dreaded finance charging, isn't it? So that's good. Low risk per trade, as you just saw, typically, most of our traders typically trading around about 1.5% per trade. You can trade lower, you can trade higher, it depends what your preference is. The next point is important. We only ever in one trade or no trades at any one time. There is no multiple trades open. So managing that trade then becomes much, much easier. Our focus is on a single trade. That is it. And once we're in it, we're not going to take our eyes off it. That's it. And then we've got the ability to trade partial sections of the day. This is really important, because do you want trading to control your life? I definitely don't. So what this means is that we monitor, you can see that you saw those 3 periods, the morning, the afternoon, the evening. It doesn't matter what one we're trading. We get a really good distribution of profits through all of them, Monday to Friday. And sometimes, and there's some big surprises in there, actually. You might be thinking, oh, Friday afternoon, Friday evening, that's no good. Think again, it's a great period for these trades. And then we have our live workshops. And this is what you're going to be invited to. That's what the link is. And really, that's what this session is all about, really, is giving you access to those workshops, that free access to the workshops for you just to come along and take part in them. They form 2 parts. First of all, we have our training come trading workshops. And these are the workshops that we do to those very specific rules in real time. And then we've got our development workshops, and these are used to enhance skills. So just let me quickly run through the 2 different types here, but just in a little bit more detail, just so you understand them, because this is what you're going to come along to take part in. So the 2 different types, that the training come trading workshops. There are 5 of these per week, and they're 2 hours long. And in these workshops, they are all the trades we take. They will be strictly rules-based entries. All right, and we'll go through the rules in a moment. And we will call, manage, and exit trades live in front of you. If you want to copy them, you can. That's up to you. But there are 3 different presenters, myself plus 2 others, Mike in Ireland and Keith in Florida. We all have slightly different exit strategies. So you'll see a range of methods of exiting and managing these trades. And like I say, it is brutal, because it's brutal for the presenters, not for those who are attending, because we will call, as I say, manage and exit them live in front of you. There is no, but I would have done this, or I may have done that. It's either happening or it's not. It is truly live. And then we have the second part, which is the development workshops. Now there's 2 of these per week, 1 hour each. And this is where not everyone just wants to follow a rule. Some people like that easier lifestyle, but there are many other opportunities on these charts. And what we do is that we teach techniques to interpret that chart movement. And then what we do then is we translate that into additional trades. Okay, there's about 6 different techniques that we use. And what you'll find is that some of those techniques you won't use, and others that you take a shine to, and you like them, and they're profitable for you, and that's fine. There are certain ones I prefer, and others I just don't touch, really. So this is the live workshop schedule. Monday, so anything in black, that's the 2-hour sessions where we're calling those live trades to those rules. You'll see there's one every day. So we have a Monday afternoon, that's primarily the DAX and the Dow. Tuesday evening, which is primarily the Dow, but we will also look at the Nasdaq as well on there. Wednesday, primarily the Dow, Wednesday evening, and again, some Nasdaq in there as well. Thursday morning, the DAX. I'll tend to do the Thursday morning one. And then Friday afternoon, that will be a mixture of the DAX and the Dow in there as well. And then we've got our 2 development sessions. So the Wednesday, 12:30 to 1:30, we'll go through the theoretical parts of the techniques that we're going to use and then apply it to some of those charts. And then on a Thursday morning is a really interesting one because it's a very interactive one. So everyone on the workshop can contribute, and we will be going through not just trades that have come up that morning, but we'll also be going through not trades that I've done or I've spotted, but the ones that our traders have been doing. Whether they be good, bad, or not, we'll have a look at them and we'll study them. So it's a really interactive one, and people tend to love that one because it is so interactive. It gives everyone that opportunity to get involved in them. And by the way, on all of these sessions, anyone can be involved in any of them. There's an open chat log there where you can type in any questions, anything that you want to look at, any questions at all. So everyone okay with that? That this is the workshop schedule, and that is the link that you've got there. Sign up to it, come along, have a view, and have a try of it. Any questions on any of that?
No, at the moment, no. That's great, Stuart. There's quite a busy.
All right,
this is every week, is it?
It's every week, yeah, yes, Simon. So this will be available, so you have access to this for 2 weeks. So there's a lot of hours there, isn't there? There's
it's a busy. I know you've got quite
about
a big
24
team.
hours altogether. Over.
These sessions get recorded as well, though, so people can't attend live.
Yes, they're recorded as well. That's not a problem. Yeah, they're all recorded, and like I say, they really are done live. When you're in these, we're calling those trades absolutely live. So there is no hiding behind anything, and it's something you won't often see people doing this live. Okay, so there'll be three different presenters, so you'll get a nice selection of different people as well. Okay, just in case you get bored with my Welsh tones. All right, then, good.
Never.
I feel much better now.
That's great. Well, that link to the chat box, people, to if you want to go across, take up that offer.
Okay, good. So let's have a look at some trades. Like I say, I can't make one happen, but we'll go through some rules now because there's been plenty of trades today. In fact, the last trade that happened on the Dow was actually at 1432. So we'll go through the rules of it. Now I've got 2 charts up here. This is a setup I like to have where I've got the DAX on the left-hand side, the Dow on the right-hand side, and I suppose a little bit. The reason for that is a little bit to do with what your last presenter was talking about those correlations. Like when I'm going into a trade, I really do like to see them both go in the same way. I don't want one going one way and one going the other way. So it's a little bit tied up with some of that correlation that the last presenter was talking about. So let's open up the Dow because there was a trade on here. There's nothing on there at the moment, but I want to go through the rules of of the standard trades that we would be looking at in most of those workshops. Now, first thing I'm going to mention to you is this. If you trade, and if I trade, what I want to happen, what I wish for, what I hope for, it is simply not going to work. I might as well just give my money to charity and do something useful with my time. No one cares what I want out of these charts. Unless your pockets are deep enough to change the movements of these markets, then that is pointless. It is absolutely pointless trading that way. So that bias, if you have a bias that you want it to go up or want it to go down, honestly, put it in the bin because it is of no use to us, absolutely zero. What we're going to be trading is we're going to be trading maths and probabilities, okay? So basically, if you're trading, you need evidence to support your decision whether you're going long or short, all right? Whatever you do not trade on what you're hoping and wishing for, because honestly, it will be a disaster. So what are we looking for? So the first thing we're looking for, and I'll just run through the last trade that's happened. We've got a number of features on this chart. We've got the candles through the chart. They're 2-minute candles. We have what we call our vector averages. That's these two green and red alternating lines. And they're to do with identifying trends. Green, it's up, red, it's down. We've then got a blue and orange line that goes through the middle. Again, that's a longer term trend. It's laid through the middle of the chart on here for easy viewing. And blue is up, and again, orange is down on here. We have what we call our price envelopes. The price envelope 1, that's this black channel. Price envelope 2, purple channel. Price envelope 3, then is that outer blue channel. And then we have what we call our emergency stop arrows on the chart here. They will mark, they will help us in the direction of taking our standard trades and also where to place an emergency stop. So let's just follow through what happens. So here we go. First thing we need to happen is that we need to hit, the price needs to hit this arrow, and we're then going to get an arrow flip. So you can see here on the edge of my chart, the arrow flips. And we're going to look at 5 rules to line up to give us a high probability trade. And remember, it's just about probabilities. Everything we're doing is maths. The probability will be in our favor. It doesn't mean to say every one of them will win. It means to say the probability of success is then high enough for us to take that trade. If it doesn't meet these 5 conditions, then the probability is too low. And what is absolutely vital about that, it is not my opinion. It is based on the statistical evidence of it. Okay. So number 1, arrow. Needs to have hit it and flipped up, and we can now start looking for a long trade. Number 2, candle position. Now this arrow is inside price envelope 3, which means we've got to get above price envelope 2 here. We need to either open or close above it. So we didn't open above it, but we did close above it. There. That's number 2. Number 3, vector averages. We need both vector averages to have changed to green. And you can see here, they have. And we're always going to be looking to the left-hand side of the closed candle. So left-hand side of this one, when it closes, they're both green. So that's first 3 points. Once those 3 are in alignment, we can then look for the next 2. Now the next one is something we call the R ratio. And if you come across to the left-hand side of the chart, over in this data panel here, the second number up, you see where it says R ratio? And there's a number next to it. Now the R ratio is in green there. If the number was negative, it would be in red. So I'll put my cursor back on that candle, put it back on there, and you can see it's in green and the number says 97.8. If that number was negative, then that would be it. We would not take that trade. End of story. We would wait for the next one. But in this case, it's positive, so that's good. So that's number 4. Number 5, the trend, the longer term trend. So the longer term trend is given by this orange and blue line. Look immediately to the left, and it is blue for up. Now, because the arrow's inside price envelope 3, we can only trade with the trend. If that arrow was outside, then it's perfectly acceptable then to trade against the trend. But it is the only time that we will ever trade against the trend is if that arrow is outside. And in fact, 90% of our profits are actually with this longer term trend on this chart. ones against it tend to be a little bit tougher, with less movement often. So candle closes, we meet all 5 points, and that then is our entry. It's on the back of a whopping great candle. It's about a 65 pip candle up there, but that is our entry. It is telling us something really simple, that the probability is that this price will now move upwards. It's that simple. And then off it goes. And it hasn't actually stopped since. It's still going at the moment. So at the moment, that trade is up about, wow, up about 230 pips at the moment. So yes, an absolute whopper. And I happen to have picked an afternoon where it's just flying in one direction. It's typical, isn't it? I was hoping for an afternoon where we got lots of rotations going on. But hey, if you're in it, I'm sure you're happy with it. Okay. Any questions on that? Any questions about what I just did? 5 points.
It's fantastic, sure. Are these rules all written down somewhere? I mean, is this somewhere?
Absolutely, yes. So when these are all on the website documentation. They are in written documentation. They're in video format. When everyone comes along, I'm not going to try and teach everyone the rules today. I just want to demonstrate it. And then when you come along to the workshops, we will be going through these numerous times during the workshop on trades that are happening live in front of us. Because one of the important things that happens on these trades is that it doesn't all of a sudden happen and you think, oh, there's a trade. We actually know things are happening. So if you go back to this one here, when we hit the arrow here, we know it's going to flip. We already know it's going to happen. So it happens here. We even know where the next candle is going to open. We know that the vector averages are already green. We know most of this stuff before the arrow, before the next candle even opens. And we knew there was not going to be a trade on the open of the next candle because those conditions were not going to be met. And then once that new candle opens, if you come up to the top, the very top left-hand corner of the chart, you see where it says bar closes in blah, blah, blah seconds. So even when the arrow flips, the new candle opens, we're then timing down when the trade is actually going to happen. So even when this one closed all the way up here, we knew there was going to be a trade long before that. And we would have had our trading platform open, we'd have put our stop level in, our stake size in, and when the candle closes, it is of no surprise at all, and we just press buy, and we're done. And not many times is there in trading you can say that you already know what's going to happen before it happens. And for most of our entries, that's exactly what happens. We know there's going to be an entry because we watch it developing in front of our eyes. We watch it developing live. Now, sometimes there'll be the occasional one that's a borderline case, and you literally then, right, it goes right to the wire before you know whether it's triggered or it hasn't. But you can still have your information in your trading platform, and if it does, well, you press it, and if it doesn't, you don't. Okay, so that's the process we use.
So Gary's asking what trading platform is required. I notice this is
so this is for your trading platform. You can use any trading platform you like, but the signals are very specific to us, and they're on. We overlay these on a trading platform called Charting Center. So they're really accommodating for us, and you can see there's a little. We've even got them to put a little nodule up on the top here, menu, with all sorts of various functions in here for us. Yeah, very accommodating for us. To be fair to them, we get them to do a lot of work for us.
That's really good. So this comes. Obviously, if you became part of the TrendSignal family, you would have access to this.
Oh, absolutely, yes.
Yeah.
The platform, and if I were to click on workspaces, all the various whatever you're using, whether it's dynamic trader, end of day strategies, cryptos, shares, whatever strategies that you use. This is specifically our intraday one for dynamic trader, it's called. So let's have a look at a couple of others. There's still nothing happened on this one. It's still up here. But let's have a look. If I put it back down, we can have a look at an example of some others. Some DAX. My favorite one, to tell you the truth, is the DAX. I like the DAX because it's calmer than the Dow. But there's some interesting ones on here. Some nice interesting ones. Even though there's a bank holiday in a number of European countries, obviously we've still got pricing. And what I want to show you is an example of a trade here. So you can see we've had the drop down. We pull back up, and I'm just going to go through that process again. We hit the arrow, it flips. So now this time the arrow is outside price envelope 3. So number 1 arrow, number 2 candle position, because it's outside, then we've just got to open or close below price envelope 1. It does. So that's in alignment. So this is on the open of the candle. We then need to look at the color of the vector averages. Now, because we're looking at the open of the candle, step back 1, look at the color of the vector averages. They're confirmed red. So that's great. That's number 3. Then number 4, once those 3 in alignment, and sometimes it will happen as soon as the arrow flips like this. Other times you might have to wait for 3, 4, 5, 6, 7 arrows. It will be the first point all of those are in alignment. Now, first 3 in alignment on here. Let's then look at the fourth one. Go back. If I put my cursor there, look at the R ratio. Look at the number. I'll just bring my cursor over just so you can. This is the R ratio where my cursor is. I'll put my cursor back on the candle. It's negative. And so it would be a trade that we wouldn't want to take if we had a negative R ratio. Okay. And what the R ratio does, I won't go through what it's made up of, but it forms a particular function for us. And let me tell you what that is. It's not to get us to make more money. It's actually quite the opposite. If we ignored the R ratio, then we would actually make a higher return. The reason we use the R ratio is to smooth out our equity curve. That is the magic of the R ratio. It takes out a number of poorly performing trades. Now, we also miss some great trades with it, hence why it produces a higher return if you ignore it. But the most important thing to me is not how much I've made, but how smooth that journey is getting there. I want a nice smooth equity curve, because often when traders first start trading, and even a long way further down the line, it's very easy to get obsessed with just the return. How much have we made today? This sort of thing. How much did we lose today? But if you can smooth out that equity curve, what it means is that you'll have so much confidence in what you're doing, then you'll be able to move off minimum stake sizes, and you'll be able to start ramping up your stake sizing on these trades. But if you have a very volatile account, then guess what? You're only ever going to stay on a demo account or minimum stake sizes forever, because you never know when the next big losing day or trade is going to hit you. And that's the problem then. So really the golden egg of trading is a smoother equity curve as you can. Because if you can achieve that, then what it means is you can ramp up your stake size into anything you like without fear. In fact, if someone said to me, I'll just guarantee you 1 pip a day, 1 point a day, what more would you need? It's then just a function of ramping up your stake sizing, isn't it? It's as simple as that. It's an extreme case. Definitely nothing comes with a guarantee in trading. But do you see what I mean by that? So we're using it to smooth out that equity curve to get as smooth a flow as possible. What I don't want is to be hundreds of pips up one day, hundreds of pips up down the next day, and back and forth. For one thing, it's no good for my account and bringing up stake sizes. And another thing, it's definitely no good for my heart. That's for sure. I want a stress-free trade in life, not having to worry about, am I going to be hit by a great big losing trade or day or week or even month? Definitely don't want any of that. So as smooth as you can, keep that stake size nice and small and reasonable, and then control what we're doing. And another way that we do that, another way that we achieve those returns that you've seen on there, is that I'm not really interested in any of these individual trades. What I'm interested in is the sum of those trades over that day. And then what we can do is that we can manipulate our daily results by where we exit those trades, because we already know what averaging 10 pips a trade, 10 pips per day will do. So we can manipulate our exiting to give us some nice, some reasonable results most days. Now, like you saw, we'll lose 1 in 4 days, but by controlling it in that way, by controlling the trades as a group of trades, that is how our average losing day is only half the size of our average winning day. And it's a really good trick to use. So you can use it, really on any trading where you have a fair number of trades. But who finds it difficult to manage individual trades? That you may not have the knowledge of what's affecting the euro US dollar, or the pound against the New Zealand dollar, or the euro New Zealand dollar. It doesn't matter what it is. We may not have the in-depth knowledge to know what's actually controlling those and which one should be going where and what's coming up and what's been up. But by managing a group of trades and then achieving a result for that group of trades, it becomes far less stressful and actually easier to cut losing trades, because you're balancing it out against ones that are more profitable, and it really produces a nice smooth capital return. So if you do have difficulty running individual trades, and let's be fair, most of us do, it's a very difficult thing. It is a really difficult thing to run individual trades for a long distance and get the most out of them. It is an extremely difficult thing. So, as I say, try it. Try and manage your trades as a group of trades with the aim that group to be positive. And what you'll find is that you will do that far easier. And also, when you do have a losing period, that group, you'll be able to minimize the loss on that group of trades. And ultimately, smooth out that capital flow. So let's have a look at some of the other trades that have come up. In fact, what we'll do, let's just have a quick look back. We'll have a look at one of the development type trades that we look at. So in the development parts of the workshop, what you'll find is that we go through, we leave behind the rules that we've just talked about. And what we do then is we look at the charts, and we're going to interpret what's happening on the charts. Okay, so quite different. We're going to take the movements that are happening and then just translate them into, right, what is most likely to happen from here? Is it going to go up? Is it going to go down? What is the most probable? And then with a structure around it, then look to have either a long or a short trade. So if we were to look at, for instance, the Dow, if I open up the Dow, I'll come back a little bit. One of the key bits that we look at is chart patterns. And if you're looking at one of these short-term markets, now remember, we're only looking at a 2-minute chart. Everything we're doing on here is really local. It's not looking at, right, where are we going to be next month, and where do we come from last month, and are we identifying a move for 1,000 pips? Absolutely not. It's very local. Our stops are very small, so relatively small moves give really excellent percentage returns. And if you look at this, what happens on here, we have this strong move up. You can see the green vector averages. We pull back, both vector averages go back to red. You see that pullback, moves up, and it fails to make any new highs. Just fails. We then get this engulfing candle that happens here at 12:54, pushes down, engulfs not just the previous candle, but a whole load of others. The vector averages change back to red, and which is showing us that trend is coming back down, and then that supporting evidence for a short trade at this point is that failure to make any higher highs. It's made a lower high, and that then gives us that good opportunity on this short-term chart to then take a short trade. Stop, pretty small. We've got a stop from our close of candle here, 32,333. The stop will be at the highest point achieved on this recent move up. So it will be 32,356. So 23 pips is our stop. And bang, on the very next candle, you can see the very next candle drops down 23 pips. Pretty much the same as the stop on there. And that's within 2 minutes. Within 2 minutes, it's achieved a one-to-one trade. And if we're risking, for example, 1%, let's just say 1% on that trade, then you'd have made 1% in 2 minutes.
Stuart, what about volume? Dan's asking about volume. Is that something you take into consideration in your trading, or?
Not really. We're not. It's very technical based on here. When we're doing the development stuff, there's a whole load of different factors that we'll bring in, down to fundamentals, technical, lots of different bits and pieces. With volume, you know, if you find that it's useful for you, that's fine. But it's not a major player for us in here. You know, at the end of the day, the DAX, the Dow, I mean, these are very, very liquid markets. Very. And unless there's something coming up, something big coming up, where your volume is going to be reducing down, waiting in anticipation of what's coming, then for most of the time, it's not an issue. Absolutely not an issue. Question, I see the question, what about 1 hour and 4 hour? This is very specific intraday trading on a short-term 2 minute. Very specific to, you can apply it to a 5 minute as well. Signals are available on a 5 minute, but they're not applicable really on a 1 hour and a 4 hour. We use some different techniques on a 4 hour. We don't really look at a 1 hour, but 4 hours and above, we will. So that was the Dow there. Let's have a little look at what other ones we've had. I'm just looking at another chart. There's nothing really on there at the moment. There's no trades on there. It's typical, isn't it? It's absolutely typical. So this is the Dow. Let's just, I'll tell you what I'll do. I'll just drag it back to last night. So we can just go back. Oops, let's make sure I don't go back too far. I haven't gone back far enough yet. And you'll see it's exactly the same process. It doesn't matter when or what. It's exactly the same. And yeah, we can apply this to different markets as well. It doesn't have to be the DAX or the Dow. We'll use the Nasdaq. Some people like the FTSE. FTSE is obviously only half the size of the DAX, so your stops are much smaller on there, and equally the movements are much smaller as well. Yeah, you can apply it to commodities. You can apply it to currency pairs. But the important thing is that if you are applying it to other markets, just make sure that they're nice free-flowing markets. You don't want to be trading something that's got not a lot of movement in, and also spread is an important part of it. You don't want to be trading something where you've got to move 40 points just to break even on it. So that's why we like the DAX and the Dow and the Nasdaq as well, that they've got great movements, and those spreads, the cost associated with it is really, really small. So that's nice as well. What is the win rate? What is the win rate if you have? Do you know what? This is really interesting. What is the win rate on this if we have a one-to-one trade? So a lot of people get tied up. They get absolutely tied in knots with win rates and reward to risk ratios. Your win rate or your reward to risk ratio, honestly, I kid you not, they're not important. We will have traders where they're absolutely obsessed that the trade has to be a 2-to-1 reward to risk ratio, or others, they must have an 80% win rate. They are absolutely meaningless on their own unless you combine them both together. And that is the important bit. You have to combine them both together to have any meaning about them. And that's why in that first slide I showed you that point 1 was in effect our daily win rate, 3 out of 4 days, 75% of days win. And then the next bit was in effect our daily win rate, in that our losers are only half the size of our winners. So in effect our daily reward to risk ratio was 2-to-1, and it's only when you combine those together that it actually means anything. So don't get tied up and say, oh, I only ever take 2-to-1 trades, or I must have an 80% win rate. It really doesn't matter. There are traders who may only have a 40% win rate, but their winners are big, and so it outbalances those losers, and they're in a winning position. For other traders, they may have a very poor reward to risk ratio, but they win 80% of their trades. Whatever side it is of that 1-to-1 and 50%, it doesn't matter as long as the end result is that it's profitable for you. Where it gets difficult, extremely difficult, is that if you go too far either side. So if you're only looking, if you're looking for a reward to risk ratios of 5, 10 to 1, then the chances are you're going to get very, very few winners like that. And what happens is that you then become very despondent when you have a mass of losers, and then you stop trading, and you know what happens then? Then that one big winner comes in. So it has to be practical. And being out on the extremes of reward to risk ratios or win rates makes everything become far too difficult. So you just need to come in on that scale, and whether it's a lower than a 1-to-1 reward to risk ratio, but it has a good win rate, or whether it has a greater than 1-to-1 reward risk ratio, but it's lower than 50%. It doesn't matter as long as the end result produces money. Just don't go out into the extremes because there's no hope then. That is then far too difficult and stressful. And this is a great. I love this. Someone says, I would want that consistency of balance, 1.25 to 1, 1.5 to 1, but a win rate above 75%. That is my sweet spot. Honestly, just listen to what I'm going to say now. No one cares. Okay, these markets do not care. What we want, no one, there is only one measure of success. You may want those, but if you do not, if they're not achievable and you just lose money, then there's no point in chasing them. You must trade what is profitable, not what you want. I know what I want. I want what you just said, 1.5 to 1 and a 75% win rate. And yeah, but often those things may not be practical on a trade by trade basis. It may be as a bigger picture, but not on an individual trade basis. There is only one measure of success. If you're doing that and you're not profitable consistently, then start looking at what you're doing again. Audience question, but with high risk reward and low win rates, the equity curve, as you mentioned, is not very smooth. Absolutely. You know, I don't want to be out there. I personally do not want a low win rate and a very high reward to risk ratio. So I want consistency. So and again, that's why I will trade my trades as a group of trades. I will trade these intraday trades as a group. And that's why you saw I did not mention what the win rate is on individual trades or risk rewards on individual trades, because it really doesn't matter. What I want to know is, right, what's the result for today? I've had, for example, 10 trades. What's my end result? What I don't want to be saying, and I want that to be positive and that I'm happy. What I don't want is to say, yeah, I had 10 trades, 9 winners. It was fantastic. I had 9 winners, but guess what? My loser wiped out everything. That's no good, is it? It might be good to be able to go down the pub and say I had 90% win rate and just hope no one asks, did you make any money? So yeah, I want it nice and smooth. And it's exactly the same for the opposite way around. You go for home runs, 20 in the win rate. Yeah, look, yeah, whatever suits us is fine. But remember, there is only one measure of success. Trading is brutal in that way, that there is only one measure of success. So let's have a look at another one. Let's see what else have we got on here. So let's just go through those rules again. Really simple. So we come down. I don't know quite what happens here. Look, let's have a look. I don't even know what time this is. So this would have been the Dow at 1652 on the 25th, yesterday. So we hit the arrow flips. We're outside price envelope 1 here. So we've got the arrow. So now candle position, we need to get above, outside price envelope 3, we need to get above price envelope 1. So we wait. But look what happens. The arrow now comes inside price envelope 1 price envelope 3 before we get above price envelope 1. So now we've got to wait until we get above number 2. And the reason that is because we need to generate that momentum in there. So we're getting closer. We don't get above there. Look, it starts turning back down, and then there's no trade. We hit the arrow, flips the other way. So this time, arrow's outside price envelope 3 is pointing down, so we're looking for a short. So number 1 arrow, number 2 candle position, it opens below price envelope 1. Step back, vector averages were confirmed as red. Once they hit those 3 in alignment, we can then look for the R ratio. R ratio is positive. In fact, it's very positive. It's 90. So we haven't got to worry about that being negative. And because the arrow is outside, it's the only time that we'll ever trade against the trend, okay, when we're using these rules. So there we go. Entry there, and then down it comes. The arrow is the emergency stop. So when we initially place this trade, our risk, let's for instance, we're risking 1%. Yeah, it can be 1%, 1.5%, 2%, whatever you choose. Then that will be the equivalent then of, let's say, we're risking 1%. That will be 1% risk to that emergency stop arrow. And the arrow really is, as it says, an emergency stop. It means that if that goes wrong, straight away we've got our cutoff point to protect our account. It's really important. It's very rare that it actually hits the arrow as soon as we enter, and then look what happens. The emergency stop is then reducing down with every candle that it moves. And the way that we will manage this trade is that as it moves into profit, we will then move our stop down. And I'll tend to be fairly aggressive with it. So once we're into profit, I will tend to bring that stop much closer than the stop arrow, protecting my profits. So as it moves down, we'll be protecting as it comes down. And let's say by the time we're down here, we've got, let's say it's down at this point here, and we'll have moved our stop down to maybe at the bottom of this candle here. And then as it comes back up, hits our stop, and because we've locked in that profit, then we can never lose on it. No, they're not. Those arrows are not what you put on there. No, absolutely. S&P, yeah, we don't really trade the S&P on the 2-minute. The reason is that the costs associated with the S&P are significantly larger than the Dow or the Nasdaq, for that matter. So in effect, we're just wasting our money paying out commissions to brokers. They love it, of course, but we don't like that. We come around, hit the arrow, flips, and then we go through the same process. We're inside, so we've got to get above price envelope 2. That candle does. I've no idea what's coming, by the way. We'll have a look on here now. So candle position, vector average is confirmed green. R ratio is positive, but look at the long-term trend. It's still downwards, it's orange, and so it's no trade. We won't take that trade. And again, it's just down to the maths. The probability is that if you look at these types of trades as a group, they simply don't perform. As an individual trade, we may look in a moment and it might have gone up or it might have gone down. I've no idea. But as an individual trade, it doesn't matter. It's all about the group of trades. And as it happens, look, it goes backwards. So hopefully that's been useful. We've had a really good discussion on some of those things like reward to risk ratios, win rates, getting a balance on our trading. So yeah, please come along to the workshops. As I say, I know they're completely free. Come along. Set aside a bit of time. If you can't attend, there'll be some recordings as well, and hopefully you'll enjoy it.
Fantastic. And yeah, thank you, Stuart, for that. The link is in the chat box there, folks, for getting onto these workshops. A 14-day special pass for Round the Clock Trader attendees. So please make use of that if you can. Yeah, thanks to Dan Lilly for your comments there. Of course, we will look at the S&P on the next session with Adam Harris. So if you stay with us, Adam's coming in to look at some live markets, doing some analysis as well. Rob says, to achieve the returns of the standard trades, how long do I need to be scalping each day? I don't know if that's something you can respond to, Stuart. Just in the last.
Yeah, sorry, who was that? Rob, is it? Rob, yeah. I'm not sure who asked the question then, but yeah, we're not really scalping. Scalping is really, you're in and out like a yo-yo, literally, often for seconds at a time. So we're not really doing that. Some of these trades might, you might be in them for up to an hour. It's like that last Dow trade you saw that just went on and on and on. So it's different to that. But typically, the results you saw there on the Dow, for instance, that's only based on an evening session, and we average around about 22%. and I'm going to say this just based on the standard trades, not any other type of trades that you'll see as well next week if you come along as well.
Yeah.
So, yeah.
I think what comes out as well is that you stick to a system, you stick to a disciplined system. You don't go chasing different trades and different time strategies.
Absolutely, Simon. Yeah, we are. Yeah. It is very, very controlled. So to give you an example, I did this morning's workshop, 2 hours. I would guess how many trades we had? None.
That
doesn't often happen. That doesn't often happen. But you know, we were not tempted to chase something that wasn't there. If it's not there and it's not a high probability, we're not doing it. This is our hard-earned money. There is no way we're giving it to a broker.
I hear it all the time. Just find what suits and stick to it, and yes. Don't be tempted to trade everything or all markets and all strategies. Listen, Stuart, thank you so much for that. It's been great to have you actually on the webinar. Really enjoyed it. Hopefully we can do it again soon. But we'll let you go just now, and good luck with the trading. Thanks for joining us.
Thank you very much. And hopefully see everyone next week. Bye then.
See you soon. Okay, sorry we didn't have time for just these last few questions. I will repost them so that Stuart, if he's still there, he can type in a reply. Okay, so we're moving straight on to our next speaker. Really pleased Adam Harris is here. Adam, as you know, is someone that I've worked with for many, many years. He's a full-time trader, and he also consults with many of the big brokers around the world, helping their clients to increase their earnings. Now, the session Adam's doing today is no slides. This is just a pure look at the markets, and I've asked Adam if he can also, as well as oh hi Adam, as well as looking at the markets, give us an insight into what is probably the key factor in making money, which is the psychology. What sort of hurdles, mindset things that will hold you back, or that you can be aware of that might be able to help you improve to let some of these trades run longer. So Adam, hi, how are you?
I'm good. How are you doing?
I'm great, thank you. It's nice to be back on the GoToWebinar platform.
I noticed that. I noticed that you're back on that. Yeah, so good old GoTo.
It costs a lot more money, but it's been faultless all day. We run, and the attendance is higher, and everybody seems to be hearing and seeing without refreshing browsers and all this sort of nonsense. So that's been. We've had some great speakers as well.
Yeah, and handing over between speakers is easy, and I know the draw tools, so that's all good.
So we are in 4 p.m. now, and I know you're just going to look at some live charts for us. We've got some quite active people in the room. Dan's been asking about the S&P 500. We're talking about some various software. We do have some US. I think we have some US people in the room, which is great. So hi to you guys. Thanks for joining us. Of course, some familiar names that have been on the round the clock trader before, so welcome back to them. Adam, let me hand over to you and let's get started. Have a look at the markets. Tell us what's happening.
Cool. All right, so if I look this way, I'm looking at my second screen. So this is my primary screen, and there's the camera. So if I'm looking over there, it's because I'm looking at your questions, which I've got. So I've got the chat, and if there's any other questions, I think, let me just check. Are we not using? Okay, so it's just the chat thing. If you have any things, just type them in, and I'll keep an eye on them.
Yeah, I'll repost the questions here. But Dan's asking about the long and short term ES. I'm not 100% sure, Dan, what you mean by ES.
Okay, no, that's fine. Well, if you mean in terms of the US, the S&P 500 and the Dow. Yeah, no, I'm with you. Futures. Okay, cool. So hi everyone. You may not don't know necessarily who I am. This could be one of your first, day of webinars. You're interested in learning how to trade. So yeah, Simon told you a little bit about me, and I heard the tail end of the last speaker as well. So you've obviously no doubt had the best thing with Simon is obviously exposure to a variety of different traders. And so very quickly, there's so much that I want to jam pack into this 1 hour that I hope will actually potentially answer questions to your satisfaction. And here's something that I would say is that to me, and it has been my experience, and I trade, you know, my client funds with it, and I trade my own capital with it. And to me, trading should be logical and rational and evidence-based, not gut feel, not wishy-washy. It should be crystal clear cut. So if you are feeling that some of the things you've been told today don't really add up or make sense to you, I would really encourage you to investigate them further. You know, you get different traders who do things differently. And so with that in mind, there is, if you're interested, it's not a sales pitch at all. You can find my channel. I would recommend that you do this on YouTube and subscribe to this. There's a weekly market analysis across all the markets. I include indices, currencies, commodities, futures, and you know, cryptos as well. So there's a sense of that. Now, and the reason I do that is because I used to do it for the ICE commentary, which was watched by 30,000 people in the US. So it's one of the top exchanges in the world, and I've done stuff for the Chicago Mercantile Exchange. And so I really like doing it. So nobody else seems to do anything like that. So I produce that these days. Now, so what I want to do here is quickly talk to you about trading lifestyle. So I'm going to jump through a whole lot of different things. We're going to have a look at the markets. I'm going to try to answer some questions about trading lifestyle versus investing as well. So very quickly, I'm usually up in the morning, especially in summer, it's a lot easier, but I'm usually at my desk somewhere around 6 in the morning. So here you can see the different sessions as obviously as the, you know, as the planet rotates, we have these different sessions. And usually I think with, if you're doing day trading, so in answer to your questions that might come, I don't trade less than lower than the 15 minutes. So almost all of my trades are taken on the 15-minute for day trades, possibly on the 1 hour or 4 hour if a setup occurs on those time frames. 15 minutes is more than sufficient. So even the previous speaker mentioned that there's a cost ratio. So your cost is obviously potentially your spread, or if you're trading futures, it's a contract cost. But traditionally with CFDs or spread betting, it's a cost, kind of, it's a ratio of this many pips for this many pips as a part of your position. And so as you go down to the lower time frames, 1 minute and so on, you really need tighter and tighter costs, specifically because at some point then it becomes, you know, you've got a 5 pip candle and your spread is, you know, maybe 1.5 pips. So before you know, once you've added your buffer and your stop loss and entry and the spread, you're like 15 pips, you know, on a 5 or 6 pip candle. So it's a factor. Whereas on the 15-minute, I usually find there's that sweet spot between the ratio of very nice competitive spreads and kind of my target 3 to 1. So also, this period in our lives is probably one of the best times to learn how to trade. There's more knowledge out there. There's more markets. The markets have become more liquid. Costs have come right down. The technology has improved. When I got started, I used to pay £200-300 a month for my charting package separately, which was ixinvestor. And education was okay. There was some value in it. Depends on where you went. So my point is that I think these days we've got a lot of choice. Now, so just to kick off, in terms of day trading, I'm usually looking ideally to get my first few trades if I can in the first part of that session. So this period here, which will be from around about 6 o'clock, 6:30 onwards to 9:30. I don't have to start at 6:30. I can start at 7. I'm just usually awake at that time. I'm at my desk. So if I hit and so there were other questions about reward to risk ratio, win frequency. So win frequency is how often your strategy wins. Win ratio is what is your kind of, win frequency is how often it wins. Win ratio is how much you win versus how much you lose. Okay, your reward to risk ratio. So here's the thing, right? Unlike the previous speaker, I think it matters. I really do think it matters. My approach here is to have a strategy that works on average about 60% of the time, that has a 3 to 1 minimum reward to risk approach. Okay, so the idea being that obviously that you're going to have losing trades, but you really want your winning trades to compensate for that. I've also going to talk a little bit about trading psychology as it builds into it. So trading psychology, how you feel and your self-confidence, and obviously your performance on the back of your self-confidence is all tied together. It's completely joined at the hips and tied together. And of course that impacts your results. And then your results subsequently, it's a cycle. Then it impacts how you feel and so on and so forth. Really our goal is a journey, and it is a journey. It can take you a couple of years to learn to become zen, to become self-aware, to learn to kind of keep your emotions sort of in check, or to not allow your emotions to get out of hand and to override your behavior and the way you engage in the market. So here's something I want you to think about. It's my opinion. Obviously, everything I'm going to express today is my opinion. It's not financial advice. This is trading discourse. It's been my experience. I think I'm very lucky. I think I've been trained and worked with some of the best traders in the world. Is that, in my opinion, trading psychology initially is there because you need it. It's a component of trading, but it's really important in the beginning because you're having to deal with finances and money and your hopes and aspirations and all these different things, and of course your emotions are tied into it. Okay, so that's very big, but obviously the goal is to get to a point where you're not thinking about the money and you're focusing on the game. And when I say game, I mean the sport, and it is a sport. Trading is a sport. You can win, you can lose, you can have winning streaks, you can have losing streaks. The better you sleep, the better you eat, the better you train, the more you practice, the more you sweat in training, the less you bleed in battle. It's a sport. And if you take that philosophy to it, you'll actually be in a healthier state of mind. So people who suffer with it a lot are people who are like who work in the financial industry, such as accountants, because for them, 1 + 1 = 2. Like there's fixed rules and things obey those rules. And so they assume, because they're in the financial services industry, when they get into trading, which doesn't work that way, which is organic, that it's going to follow those rules, and it doesn't, and they usually spaz out. And spaz out, sorry, is just a South African expression meaning just freak out. So, okay, so this is something I do. Now, here's the thing. If my first trade is a winner, so my first trade hits a 3-to-1, I can actually stop at that point. To give you some perspective, if we make, because my risk is never exceeds 1% per trade, it's often 0.5% down to even 0.1% per trade. And the reason I do this is because when I'm managing large amounts of money, I kind of 1%, if I have 2 or 3 losers and I'm 3 or 4% down, psychologically, I get outside of my comfort spot. So what I'm really doing when I'm risk managing is protecting future Adam. This is something I want you to think about. I'm not protecting me, but protecting the future version of yourself, who you don't want them to wake up the next day with a hangover because you've caused it today. You didn't have to do that. This is all it is. It's complete causal and complete consequence linked. So I'm protecting future Adam. So I know that future Adam might trade less well if he's 3 or 4% down. The pressure will be greater and he'll be distracted by the fact that he's down. But if you're down 1% over about 7 trades, it's not going to bother him. And you can recover relatively quickly that way. So always, for me, it's always about, okay, how am I feeling now? How have I performed today based off the next trade setup? How strong do I feel about it? And then how much risk or how much trade size I'll then attach to it, or trade risk I'll attach to it. So if my first trade is a winner, and to give you some perspective on this, if I could bank 0.3% per day over 22 every day over 22 working days, that would compound through to about 6% a month, which compounds through to 100% a year. So the reason I'm telling you this is to tell you to kind of calm down, trying to do big numbers. You can't force the market to give you what isn't there. Some days the market is happening. It's like weather conditions. Some days it's sunny, some days it's not. And you can't force it to do that. So if you just kind of calm down, realize that if you could just kind of steady, you actually would be amazed at how quickly with compounding you get where you want to go. So if my first trade is a winner, I can stop at that point. I can take a second trade, and remember, every single trade I take, the assumption is that it meets the criteria for my strategy. Just for the purposes of this discussion, the assumption is that it meets the criteria of my strategy. So I'm not taking something because I'm revenge trading or because I'm being petty or because I'm trying to get something out of the market. If I take a second trade setup and it's a winner, great. If it's a loser, I'm still up 2-to-1 for the day, and I could still take a third one. I think at that point, if I have a third loser, I should kind of quit on that basis, take a breather perhaps, or ask myself, am I trading the same market? Why am I trading it? Am I trading for different reasons? Just kind of always constantly keeping myself in check. Because the thing with the market is you can never trust it. It is like a tiger. You can never trust the market to be kind to you. That's why you manage your risk. And so you use a stop loss, because the stop loss exists in this universe. Its sole purpose is to protect your existing capital, not just from the market, but from you, from both things, because we are both the biggest dangers to the account. And a take profit exists, its sole purpose is to grow your account. Okay, so your stop loss as a way of capturing profit is a plan B. A trailing stop loss is a plan B. There should always be a plan A, and you can go broke not taking profits. So we're not investors. It's not a passive activity of, well, the market's going to go up, I'll get value at some point in the future. We are traders. We only care what is happening today and this week. 6 months from now, I don't know what gold will be doing, but if it's trending, I'll be trading it in that direction. If it's going up or down, I'll be buying or selling in line with what it's doing. If it's not going anywhere, I won't be touching it. And so that's the point, is traders only really have to care about today. So the fundamentals don't matter. They really don't. What matters is there a rate hike? Are we going to hear about a rate hike tonight? Is FOMC going to move the dollar? Is everything on edge? Is everything overextended? Could there be, is the market a bit twitchy at the moment, and therefore there could be wild swings for the next few hours? But fundamentally, it's irrelevant to traders, because whatever's happening 3 months from now, I'll be trading that. Whatever's happening 6 months from now, a year from now, I'll be trading that. And so it's important to understand that, because it took me a whole year to trust price action, to just trust that the charts were telling me that I could trust what the price action was telling me, and to not obsess about the fundamentals and how the news and all that is going to impact the markets. So on the other hand, if I have my first trade as a losing trade, here's where it gets interesting. If on average 4 out of 10 trades are going to be losing trades, 6 trades will be winning trades, statistically, and I have a 60% chance of winning every trade I take, just slightly better than 50-50, it kind of is worth my while to take a second trade if my first one's a loser, because the second one, the odds should increase as I trade more, that I make more money. So the second one should, if it's a winner, fine. If it's down, then again, question: are the market conditions funny today? Is it a Friday afternoon? Everyone's tired. Everyone's going home. Is it a Monday? Mondays can be a bit funny. Something like that. Just checking: am I missing something? And then potentially take a third one. If I'm done for the third one, and then I'm done. The second session usually kicks off when the US overlaps. So it's usually this period until about 6. We can be done by about 6. If you get a really strong trend, it'll just keep going for most of the day. But these are really the kind of key sessions here, where most of this is done for day trading. Then again, at 10 o'clock, all the brokers and computers around the world close and reopen all open positions, so they can capture the daily candle, which widens the spread from about 5 to 10 p.m. UK time until about 10:15 UK time. So you don't want to be placing orders around that time. You want to wait until after 10:15 if you're going to be trading the daily chart. So if you're looking for swing trading, for example, you want to do that. So then you're looking for setups, then I would place those orders after that period of time. Or if I was an early riser, or if I was up 4 o'clock in the morning, I could probably do it until about 6 p.m. But basically, I'm looking to place those positions overnight. So to look at it from a different perspective, through this meeting, we've got London, we've got New York, and just to really quickly kind of wrap this up. So I'm usually at my desk, as I said, somewhere around this period, looking for my first batch of trades until about here, then waiting for the US Open, which occurs at about here for my second batch, if that's the case. Sometimes non-trading stuff impacts me. I've got to take the dogs for a walk, or I've got to meet a client, or I have to do something. So I might only do the morning session, or I might only do the afternoon session. Then for the end of day stuff on the daily chart, potentially I'd either do it from here until anywhere, as late as kind of, if I woke up early in the morning, most mornings, then it would be somewhere here. So end of day stuff on the daily chart, those orders can be placed here. And the intraday stuff, just trying to scribble to fill that area, intraday stuff is mostly during these 2 periods. If I hit it in the morning, you can be done. So I think here's the thing: if you're trading 50 trades a day or 20 trades a day every day, it's too much. It's insane. It's not right. Something's wrong. If you're doing 2 to 5 trades per week, that's great. If you're trading maybe 2 to 5 trades per day, if the setups are there, that's great. If you're doing more than that, you might be scalping, but scalping is just not really a productive way to go. And I think there's a lot of misnomers. People think that professional traders trade the news and they do scalping, and I don't really know any successful traders who do that. Not met any. Okay, let me have a look at the questions while we go through to our next stuff. Let's have a look at the markets. So the platform I'm going to use now, I use NT4, I use everything, NinjaTrader, blah, 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 but I'm using Pro Real Time here. I really like it. Very nice setup. So I've got different layouts that I can just have a look at. Let's look at these ones. Long, short term, and E is fantastic. Good. There's a comment here that says, wow, but I don't know what that's attached to. Play to fight another day is my mentality. Never lose big. Absolutely. Detachment is key like golf. Here's the thing, that and that may be the case, but for me, I can't completely detach. It's a practice. It's a practice. You know, when you're somebody, you'll know people who can drill for the nerve and they can get your nerve, even if you weren't irritated by them at the start. It can, you know, this person could rile you up. The market can do the same thing to you. It can get to the nerve. So for me, it's quite difficult to stay completely objective. I think it's acceptable to have emotions. What is not acceptable, in fact, I think it's healthier. It's healthier to have emotions. What's not acceptable is allowing the emotions to impact my behavior, which changes the way in which I make decisions and the way in which why I'm getting into the market and why I'm getting out. Am I getting out because I'm scared? Am I getting in because I'm angry? That's really the case. You need to be cognizant of what's driving your decision. And actually at all times, it's really interesting, and I've typically left the book inside, but I didn't know this, but Bruce Lee wrote a book when he hurt his back. He wrote this book and he was trying to put all this wisdom stuff into it. And it's very complicated, and even the English is very kind of, for me, very convoluted. But basically the point of what he was trying to say is that you need to just be focusing on the reality of the situation rather than feeling about it. You need to have a plan. What are you going to do when things happen, and just execute along those lines. And it doesn't mean that emotion will not be present, or fear won't be present, or danger won't be present. Is that those are irrelevant to what your actions are. And so you need to make actions. You need to have a plan on actions and then just execute the actions. So revenge trading, absolutely. 5-minute chart, please. Okay, cool. So very quickly, the dollar has been quite strong. We've got a monthly over here. I've got a weekly up here and daily over here. And it's been very overextended, and it's possible now. It's possible that if this closes on Tuesday next week as a big bearish rejection candle, we could see price coming back down quite a bit, which means we get a weakening US dollar. We're not there yet. All it has to do, excuse me, is go up for a couple of days, go up, and we'll have a different, and then we'll have a different picture. Then we'll have the dollar breaking out of this range, and then we're very much more likely to see some big moves happening in the markets. Okay, so the reason I bring this up as well, euro dollar is sitting at the bottom of its range on the monthly, and this is very strong bullish. You can see the charts. I'm just checking. You can see my charts. Bullish candle, which could mean that we're going to work our way back up to the top of the range. If we break out of these ranges, now one of the things that could be driving that is rate hikes. So rate hikes, we used to have higher interest rates going back to 2010, 2011, 2012, and that actually created a lot of movement in the currency markets between the different central banks called the carry trade. So it used to do that. So in a way, currency markets could become better to trade if we get different currency interest rate differences between the Australian bank, central bank, you know, the Bank of Australia, and then a Bank of Japan, and the Royal Bank of Australia, I beg your pardon, and the Royal Bank of New Zealand, and then, you know, if we get different ones like that, we could start to see some bigger trends start to flow, where the bigger institutions are borrowing from one and putting in. We get these really nice trends that could return. So the currency markets could become really great, but they've been, you know, they kind of can be a little bit hit and miss. The other thing that I wanted to mention here is, so just be aware of that we are potentially, if we break out of this range, it'll be different. It'll be something we haven't had in about 10 years, but it could be a good thing, not a bad thing. We could see a stronger US dollar. We could see a few other things happening. I'm not really seeing a run to gold. So very quickly, I said I'd have a look at the market. I'm not seeing a run to gold. If you are not seeing correlation, excuse me, let me just take this call and postpone it. Hi, mate, sorry, I'm just speaking at an event for half an hour. Can I call you after?
No worries, I'll give you a call at 5.
Okay, cool. All right, cheers.
Bye.
So if, for example, somebody says to you, well, you know, you can't have a strong dollar and a strong stock market, or gold is always a safe haven thing. If you are not seeing it with your own eyes, then it's not happening. So markets can be correlated, they can be inversely correlated, they can be temporarily correlated, and they can break correlation. You can have a strong US dollar, you can have gold can be in demand, and you can have a strong stock market, and you can have a strong euro at the same time. All of that is possible. So just those are kind of urban myths that people are like, no, this is how the market kind of works. If you're not seeing it with your own eyes, then it's not really happening. So gold is not currently behaving as though there is a safe haven or fear or panic. And another reason is part of big institutions will tend to accrue gold in their portfolios. And then if the rates go up and they have to offload stuff, they offload gold. So gold can drop even in a fear-driven environment, just as an example. The next thing I want to talk about here is if we go through and have a look at crude oils. Crude oils has got a really beautiful breakout that it looks like it's kicking off now. This is just a fantastic little breakout. This is going to work its way up to, at the very least, targeting 120 on light crude. On Brent crude, I'm comfortable it's going to head up to 126. So that's, I'm in those trades now. Very nice flat level breakout today, like a no-brainer. Why do I say that? We've got a nice uptrend on the monthly, uptrend on the weekly, uptrend on the daily, flat level breakout, and the MACD is nice and bullish. So these indicators are really good. Used correctly, if used correctly, they're a good indicator of sentiment. So those are looking really nice. If we have a look at the indices, so the indices and say cryptos, and I realize, guys, I'm throwing a ton of stuff at you. I realize that, but so there's an abundance of knowledge I'm trying to kind of hand over. You asked me for my take on the S&P 500 futures. Yep, there we go. No, it was just someone else saying wow, and I don't know what that was attached to. So let me give the longer term, and then we'll go on to the shorter term, bigger picture here. So principally, we have within the, and this is really important to understand, that if you look at say a monthly, if we look at the monthly chart is really good for giving you perspective. If you don't appreciate that, if you're like, well, I trade the 15 minutes and I trade the 5 minute, and you think the monthly doesn't matter, the monthly matters. So here we go. We've had, if you look at the history of it, and you look at the angle, the way at which the market has moved, okay, it's actually accelerated. We used to have 6 or 7 months up, 2, 3 down, 4 or 5 up. We used to have this kind of breathing out, breathing in, and then, kind of, we haven't had that recently. We've had quite a bit of movement, and as a consequence, then we also had COVID, which is this period here. And you can see then we had another big move, and it's not just that. The angle of the market has started to accelerate, kind of going parabolic, so it's much more aggressive. And so really, a lot of this is just a consequence of the market not having had a breather. The markets, I would say, going back to 2016, have been moving for longer periods without having a break. They never used to do that, and I mean never, going back 100 years or 70 or 80 years. And so the consequence seems to be you have a big move and then you have a bit of a sideways period or a bigger correction. And the market can have a sideways period or it can have a correction. Both of those qualify as a kind of letting off steam. It's like put on a bit of weight because it's been eating too much and it's got to shed a bit of that stuff. So point being, we are in an area where it is potentially feasible that the market could recover and we could start returning back up to the highs. And we would look back in a couple of years and go, oh, it was just one of these periods. It was just 2, 3, 4 months of letting off some steam after a big move up and then principally carrying on. So I'm just explaining that if that is the case in a couple of months, that is really all it's going to be. The rate hikes are an important component. A lot of big institutions have been coining it because they borrow money, stimulus cash at little to no interest and put it in the stock market. So imagine if you can borrow 500 million or $1 billion and put it in and then make 18, 20, 25% on the stock market. And of course, everyone gets a fat paycheck, and so everyone's doing really well. But when the interest rates go up, when there are rate hikes, they start to extricate themselves from those positions, and that does often cause a bit of a panic. So just understand that what are the bigger cogs that really drive the system. So it is possible that this is where we are going to turn. What we need to be doing, and this applies, by the way, to all the other ones. So if we look at the S&P, it's going to be the same thing. The chart to watch is really going to be the weekly chart, and I'll explain why very quickly. I'm doing okay for time. I've got 30 minutes left, and I've got some recommended reading books. I'll list them right at the end. I'll give you some recommended reading books that I think are very good. So one of the things I'd like you to observe is that generally speaking, this is a weekly chart. These are 50, 20, and 10, just simple moving averages. Nothing, no voodoo, no magic. Generally, price is operating above that 50 moving average. Then there's a period, where it comes back below that and recovers. But for the most part, when the market is kind of relatively, now it's kind of bullish again, it's generally above the 50 period moving average. So that's why I'm saying I would keep an eye on the 50 period moving average here, because it's fair to say that once price goes back up above that, we are probably going to resume going back up to the highs. Not in 100% of cases, but probably in about 95% of cases. That's going to be the thing. The alternative, or in addition to that, is to see a higher low, higher high. So in other words, to actually physically see the weekly chart go into a higher low, high high. So that means that hypothetically, the 50 could do this and go like that. The weekly could do this, produce it and go up. So both of those have now occurred. We've got an uptrend on the weekly and we're above the 50. Once you see both of those, or once I see both of those, then I'm like, we're going back up to the old highs. And then we're going to resume. And it's actually going to be faster for me to be able to conclude that by watching the weekly than anything else. The next thing, alternatively, the next thing is simply if we just break above this level, if we just go straight up here, then we're clearly going to be out of that. For now, the real question is, are we going to come back up here and carry on down? Are we going to do this and carry on down? If we do, ladies and gents, it's also reasonable to expect that the next move will be bigger. That'll be more panic. More panic. So this is the last ditch attempt before we have a really big move to the downside. And I'm not going to assume that's going to be the case until I see it. The market must prove to you what it is doing, always. Don't assume that you know what it's going to do, because that's what gets people into trouble. Don't try to force the market or try to reconcile what the market is doing into what you think it should be doing. It's a much better, much healthier approach to be watching what it's doing and going, okay, if it does this, then it's probably going to do that. Whereas if it does this, it's probably going to do that. And then adjusting accordingly. So these are the key kind of areas where I'll be looking for. It's a weekly chart, so there's no rush. There's no rush. Whether we are in this, we're going to be in it for the next few months either way. And the reason we know this is because you'll notice here, if I look at it, often we get a couple of red bars and we get a nice green candle, whether it's a doji, indecision candle, spinning top, and then we take off. We get a couple of red bars, green bar, it takes off, red bar, green bar, takes off, red bars, green bar, takes off, and so on. So I have to get a green bar, which could be May. I'd be amazed if we closed much higher. If it closed up as a bullish candle here, that would be fantastic. But a green candle here, which could be either May if we really finish a lot higher, or June at the earliest, would be an indication to me that we might be turning around. So we are in this for anywhere for 2 to 8 weeks minimum before we really know whether we're going to go further down or turn around. So there's no immediate rush. And so that's what I'm going to be watching on that. Now, cryptos are very much tied to that. So you look at this, is very cool. The market is desperately trying to turn around. Okay, I'm just going to mark it with a little thing over here. We've got a little label. The market is trying to turn around. We've got a lot of spikes coming in. So the market does this thing. The market has a lot of energy on the way down. Then it starts doing, let's do it differently. That's not well drawn. Big move down, aggressive, shallow retracements, deep moves. Then it does a deeper retracement and it does a shallower move. So in other words, the difference between that low and that low is not so bad. Deeper retracement and then maybe a shallower move. And while it's doing that, the MACD is trending down and then starts trending up. So that starts going bullish because it's detected that the market itself has lost momentum here compared to there. And that's what's happening here. This could very well be the bottom. It could be. People don't know why the market's doing what it's doing. Anyone who tells you that is lying. Or at least a very few people know what the cogs are that drive the markets. But a lot of analysts just talk crap. So, and they get paid very well to do it. So here you can see it's putting on the brakes. Lots of equal lows. It's desperately trying to break that, which would break this downtrend. When the daily trend is broken, all that means initially is that the weekly is retracing. So remember, you've got extension, retracement, extension, retracement. The safest thing to assume that the very first thing that's happening is a weekly retracement. And we're going to see that's going to happen now. It's going to go back up to this level, back up to this level. Then the question becomes, is it a shift or is it just a retracement before we carry on down? And so, as I said, what I need to see is high lows, high highs, and a break above the 50 to go, okay, it's a shift. It's not just coming back to test it. If by the end of one of the coming weeks, we get a bearish rejection candle, a strong red candle, I'm looking for a good example of a bearish rejection candle, but with a nice wick like this even. If I get that at one of these levels here, especially there, over here probably, which would be June, then that could be an indication the market's going to carry on down. And it's going to accelerate. The reason it's going to accelerate is because there are stages over here, for example, where we went in the 2009 financial crisis, where at first it couldn't go any higher, then it tested the lows, then it failed to go higher, then it created a fresh low. At that point, all the big institutions are like, okay, I got to start offloading stuff off my portfolio. I've got to start getting out of that. By that time, all the amateurs have got into the market and going like, I'm losing money, but they're now staying in. And then there's a last ditch push up before the market when it breaks that low. If it breaks that low, by that time, the institutions have usually, and the pros have usually extricated themselves as much as possible, and the market just gains weight, and then you get the fear, and it's in the media, and it's drama, and so on. So that's what I'm looking for there. The NASDAQ right now is currently very weak. Part of that is probably simply because the tech stocks of all the markets in the world, the tech stocks have had the best, the most insane amounts of growth, the smallest dip during COVID, and the most amount of growth. They are the fattest. They are the fattest. Therefore, they deserve and very much need to shed weight. But if we look at it from a bigger perspective, what is the fib retracement level from here? If I just do it from COVID to the high, okay, we're coming into the 50 fib region, so 50% back. And remember, it can be back up within 4 or 5 months. So by the end of the year, we could be back up there. I'm not saying we are, I'm saying that it is possible. So again, a nice bullish candle here would be a good sign that it's going to recover, and this area is feasible. Finally, what I wanted to just do this before I go into the tighter details on the ES stuff that you were asking about is, let's talk about cryptos quickly. Cryptos are desperately trying to stay kind of above their levels. They joined at the hips with they're joined at the hips with equities. It's very simple. Big institutions, eventually someone's going, I've got enough Apple, I've got enough Microsoft, what else can you give me? What else can I put my money into? And eventually the institutions are going, well, there's this new stuff called cryptos. And so there's a big thing that happened really here where cryptos went. This was an initial kind of bubble where a few people, Elon Musk and a few other people got into it. Suddenly it's become very much a household name. That was the very first bubble, but now it's like making a comeback. And then this is where it starts to garner institutional interest. And so they started adding crypto products to their portfolios, and they've got big paychecks, they've got deep pockets, so they start buying, and of course, cryptos really start to climb. So cryptos are ranging at the moment, they're not trending. Okay, so it's stuck, there's the top of the range, there's the bottom of the range at this point in time. My expectation is that for now, if it is ranging, this level is gonna hold, which means that we'll head up from here back up to the top at the very least, if it is in a range. And there's evidence to support the idea that it is in a range. If it's not, obviously it'll just fall out and close below that. But again, if equities have a boost, we should see cryptos also have a boost. And so I'm just gonna have a look at that. Okay, but there are some amazing trends, guys, on currency pairs. Some of the currencies are trending beautifully. A lot of the CAD pairs are looking nice and bullish. On their charts, they're looking very keen on changing direction. So let me go and do some more detailed analysis on lower time frames. Let's go and have a look. Aussie yen, for example, there's a setup I'm waiting for on the 4 hour. It's a flat level breakout to the downside. Okay, it's a nice downtrend on the daily. This MACD looks really nice, starting to dip a little bit lower, and I'm looking for a flat level breakout to the downside. And that'll just be a 3-to-1. If I can get a tighter entry on the lower time frame. So as a beginner trader, your technical skills are crap. Excuse my language, but there's no other way to put it. They're junk. It's like hieroglyphics to you. You need to, it's like learning a foreign language or learning to play a musical instrument. You've got to practice. There's some teaching involved, some practice, and then you eventually start to acquire a feeling for it. And then obviously over time, it just becomes second nature. You can do it blindfolded. So your goal, I would think, is, as a trader, is to progress to having less junk on your charts. So as soon as I see someone with 50 different things on their charts, I'm not convinced they're a profitable trader. I'm not, because like it's insane. How can you drive your car with 50 things on your windscreen? So the purest stuff obviously in the chart is price action. It's not, don't be intimidated by it. It's not rocket science. It's just that people only get to it later on because they start with all this other stuff on the chart, and eventually because they're scared of it. So you want to strip away stuff. The purest form of trading is simply candlesticks with horizontal levels. So fundamental traders have price levels, and we can see that. We can see gold at $2,000 and gold at $1,800 an ounce. We can see those price levels show up in where they're popular. And so the market simply moves when it breaks to one level down to the next level. It's not that complicated. But sometimes it goes in a very choppy fashion like it is now, and other times it's in a very smooth fashion. And so we want to take advantage of it when it's trending well. So well-behaved trends, guys, are way better and way more profitable to trade than junk. And it's important to understand when a market is junk and you shouldn't be touching it. Like you shouldn't be trading this now. There's nothing to trade now. But if I look at, you know, right now there's not a lot going on here. That's trying to turn around. Let's look at pound CAD. Pound CAD. I'm just trying to find a chart that's got some good trends on it right now. What were the other ones? Your Aussie's starting to trend up to the upside. Sort of break out of this consolidation, starting to climb a little bit. Let's have a look at, I mean, the S&P is also, today's been good. There's a really nice trend. So I'll be focusing on markets and timeframes that have really good trends, and we're bullish on these. So here I'm bullish on these to head to the upside. And that was the question that came in, was what do I think of this? And so I was looking at the Dow and the S&P. If we go through and have a look at the futures, it's just the futures market. If we carry those off, blah, 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 let's see RJ, and then let's go and have a look at these. So we've got, where's my ticker? Here we go. Then you can see the ticker. Okay, this one here, mini S&P futures. And so you can see how nice it's kind of trending at the moment. Looking pretty good. And it's starting to form those nice cycles. You'll notice as price is going up, the MACD is trending higher. That's a good thing. It's nice bullish momentum. It's going higher here, it's going higher here. Fantastic. It's trending higher here, it's trending higher here. That is like everything now is just saying go north. The question is how is it going to react when it gets up to these old highs? Can I get past that or not? But that's where it's going. And then again, understanding the rhythm. So as traders, guys, we are catching fish every day. We go out there, we could get 3 small fish, we could catch 1 big fish, a small fish. We could catch a big fish and then we could give it back by accident. You know, we could lose the rod. You know, we could. There's a whole lot of things that can happen. But our goal every day is to extract money from the market before it takes it from us. So any day, if you get 1.5 to 1, if your target was 3 to 1, but the market went 2 to 1, and you managed to update your stop loss or take some profits, you're winning. That's what trading is. And again, it worries me. I hear, look, there are different ways of trading the markets, but to me, my one always seems to make sense. Look for a strong trend, and then, you know, look for a good entry, and then take some profits, and then get out the trade, and then assess if the trend is still intact, and if it is, look for another entry, and then keep going. But that way you can trade for a living, because what you're trying to do here is trade with as a secondary source of income or as a primary source of income, and it should make sense. Everything that I've told you here is evidence-based, logical, rational. Market moves from one price level to another. That's what I'm looking for it to do. So, and those are the different markets. That oil's been a fantastic market to trade. It doesn't matter what you're trading. If you think it matters what you're trading, what I mean by that is, let me clarify that. I'm sorry, I need to clarify things. That's like saying profit ratios don't mean anything. That's rubbish. Profit ratios mean everything. Your win ratio does mean something. You need data. In order to stay sane when you take 100 trades, you need to know, okay, I might lose 40 out of 60 trades, but my 60 trades will make me 2 to 1 or 3 to 1 or 4 to 1 or 5 to 1. You need to know that. You need to rely on your system. So you need data. So yes, you need to know what your win ratio is, obviously. But however, there is an argument to be made that the outcome of a trade doesn't matter. Let me explain where that comes from. We should not obsess about the outcome of the trade if our system works. So if we know our system works, then we should not reward ourselves if it's a winning trade or punish ourselves if it's a losing trade. That's what I mean. The outcome of the trade should merely confirm that the system is working, and it's never a single trade. Guys, one trade cannot define you or your potential as a trader ongoing. Trading is honestly like learning like a foreign language or musical instrument. Practice will get you there, and understanding it will get you there. It will. It's a learnable skill. But the outcome of the trade on its own is really insignificant. You know, the outcome of 10 trades or 20 trades is worth something, the data that you can get from it. But what that saying means is that we should do our best to qualify the trade setup, that it should be a very good trade setup, a pattern. It's a really good pattern, high probability of outcome. We manage our risk, we manage the trade to completion, and that's really what we focus on. We don't focus on whether it was a winner or a loser. If we do everything else right, it will most of the time be a winning trade, or we'll make a better way to think of it is make some money from it. Because when we say winning trade, we just assume all trades are 3 to 1, and that isn't really the case. So let's have a look at these things. Question. Where do I see volatility? Okay, so the beauty is the concept of rate hikes is already now known. It's already known, meaning the most afraid the market was are we going to get rate hikes? And if we are, how many and how bad? And we've already had a couple, and it's now going around the world. So now the idea of it, basically everyone's already adjusted to the bad news. So I'm actually seeing volatility drop. The markets are starting to calm down now. And now what they're starting to do is now they kind of know what's going to happen roughly in the near future. So they're now just trying to navigate it. So we're already starting to see a bit of the impact of that already. Inflation's probably going to stabilize, but not come down. I think it'll just stabilize. And then, you know, the rate hikes will just become calmer. In other words, the worst point was the first 1 or 2, because that was really to put the brakes on. We've got out of control. So volatility is not too much of a thing. So I'm 40, I can't believe I'm going to say this, I'm embarrassed. I'm 47 years old. This is my second career. So I started learning how to trade when I was 34, and I really, yeah, and so it was the second career, but what are you going to do? And I love it. I love it way more than the film business that I used to be in. And yeah, I did 2 years. I did a couple of years in the city as well as a prop trader and as a city trader as well. So good. I love it. Love it. So the other thing I wanted to show you here, if there's something you want me to have a look at, go for it. But I also want to do this. I want to show you something here. So I'm going to move across and just bring this over here. This. So just to kind of get you to think about stuff as well. So trader psychology. The better your technical analysis skills, the better your skills, the less psychology you need. Why? Well, because the better your skills, the more confident you are, the calmer you are, the better your performance is. Therefore, the less rehabilitation you need to give yourself to help yourself, to soothe yourself, and the less help you need. So just understand that the better your skills, which will happen over time, which will improve with practice, the less psychology you need. Psychology is a great thing to go, well, we don't know why the markets do what they do. You know, like that's rubbish. The markets will tend to give clear signals as to what they intend to do. They really will. It's rare that they do something surprising out of nowhere. We might, for example, go, okay, there's FOMC on Wednesday, and then the market has a reaction. We'll go, okay, well, we knew the market could have a reaction because there was FOMC, and it did, fine. But it's really important that you understand that in the beginning, trader psychology is there to help you really try to manage yourself. It tries to help you deal with stressful situations. Well, because you don't really know what you're doing. When you have a losing trade, you don't know if you took a good trade and it was a losing trade. It could have been a bad trade. It could have been a good trade that was just one of your losing trades. You have no idea. You have no feedback. You're on your own. You're stuck in an echo chamber. And so trader psychology is important because it helps you, all right, okay, this is what I do, and it helps you deal with stressful situations. When we as human beings and animals and everything when we go through bad situations, we need therapy, we need psychology. Generally, when our life is relatively good, we don't need it. So the better your technical skills, the less trader psychology is required to help you find out like what's going on. So it's a journey, guys. And I promise you this, most people that I've met in my entire life, 99.9%, there's more right with you than is wrong with you. Just remember that. We can all have bad days, we can all have bad habits, we can do bad things, we can make mistakes, we can be bad people sometimes, but for the most part, there's more right with us than is wrong with us. And especially if we try to fix that stuff, it's a journey. So don't let that stuff bring you down. Don't lick your wounds and pick at your wounds and make it, because you're not going to progress. Focus on improving your skills. The higher time frames, understand that price action communicates everything to you. It really does. If you don't trust it, then that is something you're going to have to learn to do as a practice thing. You've got 4 choices with every trade you take. Take the trade, 1% risk, deal with the outcome, learn from it, okay? Was it a good setup? Did I manage the trade properly? Don't take the trade. try and learn from it. But you learn something from situations which happen to you, where your skin is in the game, where it's your money. You learn more from that than if it's a story that happens to someone else. Sometimes we do, but most of the time we have to go through stuff ourselves. So we have to go through a real money loss to learn the lesson. Those are your first two choices. Your third choice, demo trade it. If you see a setup, you could have a live account, but you see a setup you're not sure about, or you've had 2 losing trades. You're like, I don't think I want another losing trade today. So you demo trade it. You can still learn from the experience. You are still practicing placing orders, because that's also a skill you got to develop, not making fat finger mistakes and calculating the risk and doing all those different things. Sure. And your fourth option is take the trade for real, but don't risk 1% on it. Risk 0.1%. If it was up to me and I could set the rules, I wouldn't let a new trader risk more than 0.1% for their first 100 trades. You know why? They'd be better traders, because they wouldn't be thinking about the money. They'd be thinking about the trades. You're so impatient to get to making the money that it's the hare and the tortoise, that you run ahead and then you have to come back 2 years down the line and go, I still haven't got anywhere. What am I doing wrong? I'm like, well, we need to go back to the basics because you skipped the basics. And so if you have the patience, is a massive thing. If you have the patience and the discipline to do, let's even say 50 trades on one strategy, mastering that strategy with 0.1%, you'll get further along than somebody else who tries any other way. And if your goal is to be consistently profitable within 1 year, which is feasible, then that's the only way to get there, is to do 100 trades, fixed strategy, 0.1%, because trading with real money and fake money is a layer of psychological experience we have to build as well. Golf is a fantastic analogy, right? Not everyone's played golf. Golfing, right? If your grip isn't right, a tiny little thing, you slice. You have to, everyone looks at the ball beginning and they follow the ball and then it goes everywhere. You've got to look straight through the ball and not follow the ball as you swing through it. Nobody knows that if nobody tells you that. And you've got your short game and your long game, and the weather can play a factor and so on and so forth. You've got to practice and practice and practice. You need a coach. You need all those things. Golf is a great analogy. And if you lose it, you're done for the day. If you cannot contain your emotions, your game will go to crap. I've never been in a bad place and had my game go well. It doesn't work that way. For trading, ladies and gentlemen, you need to be in an okay place, not a great place, but you just can't be in a bad place. You can't be upset. If you stubbed your toe, or you had an argument with your significant other, or you're mad at your dog or your cat, you can't trade well. Or you have to learn how to, okay, I'm going to put my crap in a little box. I'm going to put it over there for an hour and I'll get back to that. But for trading, I'm not going to let that get in my way. And then at the end of the day, you can go, okay, and you can deal with it. But and that takes practice, guys. Practice. It doesn't just happen once. It's not. Please understand that nothing ever happens just for anyone really easily. It's hard. It's practice. So I wanted to show you this because I want you to think about this. So let's just say I've got. And this does apply. Everyone's like, well, this is very vague, and it does. Let's just say that I have a strategy, and for argument's sake, it's a 3-to-1. Why do we go with 3-to-1? Why 1%? 3-to-1 because the market the market requires energy. So it'll move like this, like this, but the average big move it does is 3-to-1. The average. That's the average biggest move it'll do. It'll do lots of 1-to-1s, lots of 1-to-1 small moves. It'll do fewer 2-to-1s and even fewer 3-to-1s. Beyond that, it becomes random. Like you might get 1 4-to-1 out of 10 trades. Not enough to apply as a daily strategy. So 3-to-1 is the maximum reward to risk that we can expect. So if somebody doesn't understand what I'm talking about here, if that's a candlestick and that's my entry and that's my stop loss, I'm looking for 3 times. That is my average target. Okay. For the average person, someone will say to you, oh, well, if you have a strategy and it has 1 winner and 9 losers, but the reward is worth it. Most people just want to have a secondary source of income from trading. We're not looking to be superstars. We just want a way to trade the markets most days and make money. Am I wrong? Or is that not what most people want? So stop talking about things like, oh, well, you need this inverse reward to risk and all these different things. Take a strategy where you get regular wins. They don't have to be massive. They just shouldn't be small. Okay, so meaning 3 to 1 with a 6 out of 10 success rate. That's it. They exist. They're out there. Do that. So let's just say I'm risking 1% per trade on a 3 to 1. Where does the 1% come from? The 1% started with poker. I'm keeping an eye on the time, by the way. We've got 5 minutes left. Professional poker players. You can be an amazing poker player. You have an amazing hand, and you can still lose. Why? Because the person opposite to you has a better hand. It's not just how you play the game, it's also the hands, it's all kinds of things. And there's a bit of luck involved. Okay? So you can't risk too much of your poker playing kitty on each hand, because if you happen to have a losing streak, first time you have a bad hand, second time he or she outplays you, third time you're just a bit spooked so you don't play well, and then before you know it, you've wiped out most of your kitty, and now you have a good hand and you've got no money to put in, you can't make it back. So they worked out if they kept their portion small enough, they could survive a losing streak, and it keeps you calm because now you're not under pressure, you're not bleeding money. Small losses, you're like, it's fine. So you are protecting your future headspace. Don't put yourself into a situation where you want to fight the market. So don't do that. Don't screw yourself over. So 1% or less turns out to be the most amazing thing. If you go above that, it's called risk of ruin. As soon as you go above 1%, the chances that if you hit a losing streak that you will do enough damage to your account that you could take forever to get back up to break even. And therefore you're stressed and you're not going to play well. It's just not worth your while. So 1% is that sweet spot or less than that. And so 3 to 1, 1%, that's where it comes from. So here's what happens. You take the strategy and you go, okay, Adam, I did what you told me to. I took 8 trades. 2 of them hit 3 to 1. My account is a 10K account. Make the numbers nice and round. And I'm down 2% and I've been punched in the gut 8 times. Like, this strategy doesn't work. So now you want to change strategies because you have no clue what you did right or wrong. And you had 2 full wins. You could have had one of those, could have made money, it was a bad trade. And one of those could have been a great trade. So here I come along and I take the same trades, let's say for example, but I also institute a rule. So every time I'm up 1% in profit, I take half the profit off. That's it. So just partial profits. So all of a sudden I have 3 trades where I don't make much. I make a little bit of 0.5% off each of those trades. And I have a couple of trades where I don't lose money. I make my 1%, but then I get to break even, then I get stopped out. So I don't make money, but I don't lose money. But look at the difference. I didn't make any more full wins than you or than the newbie trader, but I'm up 4.5%. And think about my headspace. My headspace is, well, I can do that again. I can get better. I can definitely do this again. And so I'm trying to impose upon you the importance. First of all, how would this impact your psychology? Would you feel I can get up and do this again? Would you be going, oh, now I've got to change the strategy? Everything changes just on trade management. Just on trade management, just managing it, just taking some money off. Sometimes taking money off could take a trade that was going to go really bad, break even. So trade management is really important, and it changes the psychology. It changes how you then subsequently look back and read the process. It's really important, and somebody who can perform like this can manage $1 million. They'll get a job in the city kind of thing, and that's not the goal. It's not what you want. You really don't want that, but that is the point. Is trade management is an important part of doing that and taking partial profits. Okay, I also said I'd give you some recommended reading, and you've got your last few seconds to ask me any questions if you want. Simon, do you need me to keep going, or do you want me to wrap up? Is the next speaker ready?
Adam, that has been just a fantastic hour. Thank you very much indeed. If we could wrap up in 2 minutes, please. I think Bobby's here, so.
Cool. Okay, here we go. So recommended reading. So trading in the zone and the disciplined trader. Trading in the zone will show you, Mark Douglas unfortunately tragically passed away a few years ago. He was about to give us some mentoring at Trade with Precision, which would have been amazing. But he wrote this book that if you read it, you'll understand it's amazing, because all the things that you think you're suffering alone, because we are both individual, but not all our experiences are unique to us. We have universal experiences, especially in trading. We've almost all have exactly the same experiences, but at different times. And so Trading in the Zone talks you through that, and it makes you self-aware. If you then are interested in mastering yourself, self-awareness, disciplined trader is the next level, and there's some amazing stuff in there dealing with things like PTSD and amazing, incredible things that help you track your thinking. This one is incredible. Thinking in Bets is phenomenal. So some of these you can do as an audiobook. I did that as an audiobook, which I can listen to in a couple of hours. This one, everybody should do this. It should just be required reading. Just everybody in life, everybody should do it, but in trading especially. It's not only interesting, but it'll teach you to think about probabilities and how to make good decisions with very little information. It's a life changer. Jack G. Schwager, he's got a new one now called Unknown Market Wizards, which also is an audiobook as well. Also will teach you that, you know, you're not that different from other people who want to learn how to do this. It isn't that people can't learn how to do this, it's that most people get poor training. Some people don't get any training at all. Some people have bad experiences that kill their potential before they even go any further. And that probably sorts out 90% of people, okay? So, and the complete turtle trade is just interesting because if you've ever heard of the movie Trading Places with Eddie Murphy and Dan Aykroyd, it was inspired by the original story of the turtle trader where these two guys took people from all walks of life and gave them a system, a set of rules, strategy, and they traded and made money. And then we've got Naked Forex, which is price action. That's a magic book. So you've got Steve Nissen's Japanese candlesticks. You've got Al Brooks's stuff. I prefer this. I would just say if you had to start with a single book, that's the one. Reminiscences of a Stock Operator, which is like almost 100 years old. This guy made money in the 1929 stock crash. Why would I read that? It's interesting. It's very much a Great Gatsby feel, but also it's a true story. And you realize that people haven't changed. The markets haven't changed, people haven't changed. And if you don't believe that, so you read the book. An Intelligent Investor by Benjamin Graham, who was Warren Buffett's university lecturer and basically has inspired Warren Buffett, got him all the skills that he had. And he, that's the one I always think everybody should read. So those are my, you know, there's probably 50 great books, but I would start with those, and that's it. So, cool. Looking at any comments, any questions? No? There we go. Okay. No other questions, ladies and gents. Did you find it instructive? I know it's a lot of stuff. Did you find it useful?
Superb. There we are.
Okay.
Dan's been our most vocal. Loving all the comments, Dan. It's been great. Superb. Never plays poker. Obviously uses Metastock now. We've got Bobby from Metastock coming. I think Metastock were promoting this event for us, which was great.
There's so many great platforms, and the platform doesn't, like, the platform doesn't, simpler is better. You know, simple price action, just decent data, but it isn't these days. It's not crucial to success. It was 10 years ago. You had to have really good data and really good pricing. It's not. These days, most brokers have got very competitive pricing, and most platforms, the data is really good. I'm talking about mainstream instruments. So how many different markets should we be looking at? Look, there's 29 currency pairs, 6 or 7 indices, commodities, anywhere from 3 to 10 commodities, which includes metals and lumber and orange juice and crude oils. And then you've got some equities. And then if you want to add cryptos to that, not an unlimited amount. I mean, there's thousands out there. But if you said to me, Adam, what is the minimum requirements? It's like 60 charts. It's not a lot. It's very manageable.
Great. Well, Dan, thank you so much. And Adam, even, thank you so much. Indeed, I think that's been one of your best talks, I think, that you've done for a while.
Can I get a thank you? If you can give me a copy of this, I'll repost on YouTube, by the way.
I will, because
and on LinkedIn and everywhere if you do that. Cool.
You put a lot into that presentation. Lots of great stuff. Adam Harris, London City Trader on YouTube, Trade on Markets on other social media as well. So thanks very much again.
Thank you, guys. Have a good. Thanks, Simon. Thanks for inviting me, and take care.
Always. Great. We are going to go over to Thiru Nagappan now at Massey Markets. Our next speaker, 3 price tips for consistent performance. Thiru is the founder of Massey Markets, and we're live on your screen now. Thiru, are you there?
Yes, Simon, can you hear me okay?
I can't. Sorry, we're a couple of minutes late coming over to you. My mistake. And but great to have you here. Thank you. We can see your screen. Everybody at home, you should be looking now at the Master of the Markets slide, and this is Thiru Nagappan.
Nice to hear your voice again, Simon. It's been quite a while. We must catch up offline.
We must do. Well, we missed you at the live event just last month, but it was great fun. So hopefully
Yes,
we can
yeah, just the calendar. I mean, we were away in Tenerife, so that's why we couldn't. But definitely the next one, we should definitely talk on that one.
I would always choose Tenerife. Yeah. Well, it's great to have you. You're here to tell us about the three tips for consistent performance. I know at Master of the Markets you do a wide range of courses and live rooms and mentoring, and you can't tell us all of it, of course, in 45 minutes or an hour even. But you're just going to give us a little taste of how you trade and how you teach your communities to trade as well over the Master of the Markets. So I'll hand over to you. I've wasted enough of the time already, so I'll hand over to you and we can get started.
Thank you, Simon, and welcome to everyone. Thanks for having us here. It's always a pleasure actually presenting at round-the-clock trader events. I'll go straight into the topic just to make sure that you guys can see my screen and hear me okay. If you can type into the chat box, that'd be really great. And then I will just zoom away. So today's topic is going to be on 3 price tips for consistent performance. Okay, right. All right. Okay, good. I can see some things already coming in that they can hear me. Okay, that's good. So this is just a disclaimer, just in case. Going ahead, just financial education purely, not for any trading tips or whatsoever. That's me, just to put a face to the picture to the face, to the voice actually. And just a little bit about us, Master of the Markets. Don't want to take too much time. We've hung around some really great traders like John Bollinger, Jim Rogers, co-founder of Quantum Fund. Some of you might know them. Elite Traders Conference. We invited Mark Brown over from the US. That's that over there. We are very well known for statistical quantified trading, which you will see later on. Most of you have been following us will know that too. I'll talk about that later on. Break the Time Money Link, we are founders, Traders Open Day as well, 38 years of cumulative experience, over 20,000 people mentored all over the world, and with live trading workshops where we catch the trades live. If you want to find out more about us, masterthemarkets.net is the place to go. A lot of quality info over there. You can also visit our YouTube channel /masterthemarkets too. Our mission is to spread the truth of trading so that you can live a better lifestyle. We give you all in transparency. That's the hallmark, a unique feature about us. You will see that today as we present as well. In this presentation, 3 things that I would like to do to give you massive value. One is I want to impart to you the 3 price action tips that was taught to us by institutional quant traders. In fact, our mentor, my mentor actually trades for Morgan Stanley Money, okay, and runs his own hedge fund. And that's how we all learned and started this journey about 10 years ago. That's some of the stuff from them that I will impart to you guys. Also show you an elite strategy which made just under 60% return, and how to execute a similar strategy live in real market conditions and make consistent returns as well. We'll go live into the markets too later on. 3 price action tips. So the first tip, what I want to do, this is how we started off our learning journey actually about 8 years ago when we met my mentor who now trades for Morgan Stanley Money. Is the first thing is that he asked us on a piece of paper and he drew us these 2 vertical bars, okay? And he removed the open and closes. Then he asked us this question. If you were to remove the open and close from the old Chelsea bar, how many type of price patterns or variations can you get? So if you guys have a piece of pen and paper, go ahead and type into the chat box. Take about 2 minutes to do this exercise. It'd be good to engage. Get your minds working. When he actually first asked this question, my mind actually froze because I'm always used to having opens and closes. But imagine if you deleted that, if you took that away and you had 2 vertical bars, how many types of price patterns or variations can you get? So I'll give you guys about 2-3 minutes, actually 1-2 minutes to think on that and type into the chat box what the answer would be. I'm getting a few answers, so wait for a few more. before we carry on. And of course, along the way, there'll be some prizes that we'll be giving out as usual in Master the Market events. So for those of you who are very attentive, very engaging, and here to learn more, you will be rewarded. Okay. So there's no right or wrong answer. So just go ahead and just type it all in as well. So I'm getting a variety of answers. That's good that I can see that you guys are attempting this. That's very good. Well done. So let me give you all the answer. What would that be? Okay. So if you actually take a look at that, there will be actually 4 types of price variations that can occur. And it's very interesting, actually. It's a very, very important observation, very simple, but important observation that I'm imparting to you. And once you understand this, you'll be able to see how it keeps repeating. These 4 types keep repeating in the market. Okay, I'll show that to you very shortly, and how that can actually help you in terms of entry and trailing stop loss management. The first type of price variation that you can get with no opens and closes is higher highs and higher lows. This is what we call trending bars. Okay, just trending bars between 2 bars only. All right. Now the second type is lower highs and lower lows. Okay, that is the second type of trending bars that you can get in the market anytime. The third one is what we call the insider bar, and the last one is what we call the outsider bar. So these are the 4 types of price variations you can get without the opens and closes. Now, why is this important to know? Think about this. In fact, one client actually who came to one of our Traders Basecamp workshops, he actually, after I gave him these stats, which I'm just going to give it to you right now, he went home to research it. And the next day he came to the workshop and he said, you know what, the stats that you shared with us is exactly right. And it's very powerful. Let me share the stats with you. What you will observe is that in the market, at any one point of time, this will occur 40% of the time. This will also occur 40% of the time. This will only occur 10%, and this will occur 10% of the time. This part over here on the left-hand side is what we call the trending side of the market, and here is what we call the compression side of the market. Okay, compression side of the market. So that's what it is. 80% of the time will be trending, 20% will be compression, and when you look at the exact price action bars, you will get that too. So if I were to show you that on a chart, you can see over here that if you look at between 2 bars, you see today, yesterday and today, that is a trending bar that you are seeing. Even if you look on a 1 hour time frame, it will always be the same look. Between these 2 bars, there's trending bar. Between these 2 bars is trending bar. Between these 2 bars is trending bar to the downside. This one here, if you look, it's an outsider bar. If you look at these 2 bars alone, okay, that will just be an outsider bar. You got that one there, right? After that, it became a trending bar. Now, you may ask, okay, Thiru, that's good to know, but how can that help me in terms of entry and trailing stop loss management? Think about it, traders, yeah? If I know that the market can only go in 4 ways, that means if this is today's bar and this closes as it is, that means tomorrow you only got 4 different types that can happen. And look at this. This is very interesting. And this is what my mentor, institutional quant trader, actually taught us. If you now were to enter on the high and your stop loss at the bottom, what are your chances, according to the 4 variations I taught you, what are the chances that tomorrow itself you can get stopped out? Go ahead and type into the chat box. Now that you understand the 4 different variations, it can either be a trending bar to the upside or the low side, or it can be inside a bar or outside a bar. If I were to enter on the high as a pending order and a stop loss for the low, what are the chances? What is the percentage probability that I can be stopped out the next day upon entry? Go ahead and type it into the chat box. If you know this, then you have really understood the power of these 4 types of price variations. Let's see what answers are we getting? Okay, I can see different answers coming over here. Okay, good. So let's see, we've got 25, 20, 80, 50, 11.11, 11. You see, if you really think about this and what I've taught you so far, this happens 40% of the time, right? This happens 40, this happens 10, and this happens 10% of the time. Now think about this. If I were to enter now on the high and put my stop loss on the low, entry, and initial stop loss here, the next bar, so this is a pending order. Imagine if it closed here, right? Just like how I showed you on the chart. Imagine the close was there and I put a pending order for entry for the next day. The only way I can get entered the next day, if it does another higher high, isn't it? Yeah, if you understand that, just type in yes. The only way I can get entered in the next day on an entry for the high of the previous day is only when today's bar takes out the high of the previous bar. Okay, that's the only way. So therefore, the only way I can get stopped out is if that bar low comes back all the way to the initial stop loss, which is where? At the low of the previous day. So if it does that, then what am I getting? I'm getting an outsider bar formation. And how much percentage of the time does outsider bar happen? 10% of the time. So when I enter in such a way, there's only a 10% probability that I can get stopped out. Okay? Does everyone understand that? If you all do understand it, just type in yes. For those of you not getting it, it's fine. You can always visit the recordings. I'm sure Simon will be hosting it in his members portal. So that's the power. That's just one way how we can apply it. I'll let you all go and think about how different ways you can apply it. Very, very powerful concepts that keep recurring in the market, and you can apply this across any time frame. 1 hour, 4 hour, daily, weekly, it doesn't matter. The 4 variations will keep recurring. There's no other way that vertical bars can move in the market. Right, now that we understood this, okay, good. Some of you are getting it. That's very good. Any questions as well, just type it in. I'll answer them all at the end. Right, now that we covered this, as we said, momentum strength is 80%, market compression is 20%. Okay, right. Now, 3 price action tips to give you an edge. Now, let's go on to price tip number 2. Now that you got price tip number 1, which is the market can move only in 4 price bar variations, let's go to the price tip number 2. Price tip number 2 begins with a question. What is the 80% open equity that is tradable every day? Now, for those of you intraday traders out there, this will be very, very helpful, very useful stats that I'm going to impart to you. How many of you are intraday traders? In fact, as you're typing in over there, just type in where you're logging in from today, what type of trader you are. That'd be really good, and whether you're a beginner or an intermediate trader. Okay, whether you're a beginner, intermediate trader, or you're intraday or an end of day trader, and where you're logging in from today. Just type it all into the chat box. Now, you see traders, the 80% open equity. What do I mean by open equity? Okay, so let's take a look at that. Okay, what I mean by open equity is, this is very important data that most traders, retail traders, do not know the stats for. In fact, the only time I heard this terminology was from our mentor, who's an institutional quant trader, and from Mark Brown, whom we invited to the UK for the Elite Traders Conference. Okay. Now, what does open equity mean? In fact, our clients who have joined us, I mean, most of our clients who join us stick to us for 8-10 years. They even tell us, Thiru, you know, we searched the web for this and understanding more about open equity, and we're just not able to find any material on this, you know. So what does it mean? Open equity basically means that very important critical information that everybody is after, that any time that you enter the market, let's say you enter on the close over here, or you put a pending order for the high, anytime that you enter the market, at the point of entry, are you able to know how much move is left. How much move is left on a percentage basis, on a percentage probability basis. Anytime that you enter, are you able to say with confidence that, hey, Thiru, you know what, at that point of entry, I know that 80% of the time it will get to 25 pips or 25 points if you're trading the indexes or commodities, whatever that may be, or 25 ounces, whatever that may be, even in gold, commodities, whatever units. Do you know that X distance that it will move 80% of the time? Do you know the X distance that it will move 50% of the time? Do you know the X distance that it will move 20% of the time? This is what we mean by open equity. Now, the only way you're going to know that, you're able to go and quantify that if you have done your research. And most importantly, which we have explained again and again in Round the Clock and other conferences and seminars, even when we speak to doctors and surgeons and all of that, we have mentioned that the first step to doing that and quantifying it is to quantify your tops and bottoms. And that's how our smart money indicator is being designed. As you can see over here, very bespoke. If you see over here, we got our tops and bottoms over here, you see. From this tops and bottoms here that we have quantified, basically we're saying that the dot is where it confirms the bottom. This bar with the dot is the one that confirms the bottom. We have quantified that. What is a bottom? What is a top? That doesn't mean it's right or wrong. It doesn't mean that's the holy grail. But all that does is that it gives you a systematic way to quantify your open equity. So anytime we enter the market, we'll be very confident on how much move is left. Now let me see if I can come up with the open equity tables. As of this point, just type into the chat box if everything is making sense in terms of open equity and what I've talked about so far. I'll build on the principles and I'll finally give you how we construct the strategy. Of course, over here at Master the Markets, you'll be quite familiar. We're quite systematic and methodological, and we quantify everything and we talk in terms of stats, very to point, to precision. Right, so let me see if I can find this thing for you guys and show you an open equity table. Let me just bring that up for you guys. Let me see. Right, it should be here. Let me just get that very quickly. Let me see. There you go. Let me see if I can open that for you guys. There you go. So you all can see that this is just on one instrument. If you just look at the daily time frame over here, I've just indicated there. This is what we call the open equity tables. This will help me identify every time when I enter how much move is left. Okay, how much move is left. So over here, as you can see, according to the table, just for GBP/USD, you can do this across any instrument once you have quantified tops and bottoms, which what we have done and shortcut the journey for you. Also will take just many years to do it, 5-7 years probably. You can see on a daily time frame, every time I enter on a confirmation bar, that's the point of entry on a close, I usually will get 85.71% of the time, I will get 25 pips move left. Okay, I'll show you a very simple strategy later on how we have designed this strategy, and we're up 15% so far this year. Okay, this is how we construct all our strategies. So then you can see over here, 50 pips, to move 50 pips, it will happen 73.56% of the time. I can do this for any time frame. On the 4-hour, you can see that it will move 50 pips 51% of the time. Of course, the higher time frames, the 50% moves more to the right hand side. So 50% of the time, at least you will move 125 pips on the daily. Okay, so that's that. That's how powerful open equity is. Once you know and quantify your tops and bottoms, and you must know your move left. Now, in terms of intraday, how much move is left every single day? What we will do is we will look at the ATR range. Let me explain that to you for intraday traders out there. So over here, what I will do is what we took a trade early on today as well. I'll show you the results on that too. Is that what I will do to get my probability range for today? Today is this bar, right? That is happening. I would look at the ATR of yesterday, which is 111, and I'll do a 70 to 80% ATR range. Okay, 70% of that is 77 pips. So from the high on the 1 hour time frame, from the high, if I'm taking a short, I'll put my target at 77 pips over here, 1.2543. That's how I will take it, because I know that with my research over here, which I've shown you, 70.7 ATR of the previous day, it will get there 74% of the time. If you look at the spreadsheet over here, when we have done all that research before the intraday with our team, our research team over here at Master the Markets, we've seen over here that in terms of range studies, you see, we have got 74% of the time it will get there. Okay, I'll go through the other two stats later on when I give you price action tip number 3. Okay, right. So that's that. That's the stats that you must know as you're doing, especially intraday. That means I know that 74% of the time it will at least do 0.7 ATR. So if I go on to a 1 hour time frame, I know where to put my target to hit it 70% of the time. Okay, right. Is this all making sense? Just type into the chat box if it is. Any questions, just type it in. I'll take all of them later on. Okay, that's good. Everybody's saying where they are from, where they're trading from. This is really good. APR, that's good. I can see. Right, okay, I just typed APR. Okay, great. Right, that's good. Really nice, good audience, engaging audience here. Very good. I can see most of you are getting it. Now let's go on to price tip number 3. I did see some questions, but I will answer them all together later. Now, price tip number 3, quite important. How many of you guys have heard of Toby Crable? How many of you guys have heard of Toby Crable? Toby Crable, if you haven't heard of him, Toby Crable is an institutional hedge fund trader, is a billionaire hedge fund trader. Back in the 1970s, he popularized the concept of stretch, okay? And basically of the strategy called based on stretch, which is called opening range breakout. Those of you who are intraday traders, especially on indexes, on currencies, on commodities, you will see this concept very powerful. Opening range breakout based on the stretch. Okay, let me pass on this concept to you if you haven't heard it yet. If you actually have heard it, type into the chat box. If you haven't, just say no. Then I can see the gauge of the audience where you guys are, and then impart this knowledge to you. Very powerful knowledge. All right, so let me just impart this to you right now. Every day, actually, if you take a look at the bars, in the OHLC bar, you will always have an open and a close. Now, when you have that, you can see that now. Let me just erase the close away before I talk about this, then you'll get it. If you take a look at just the bar without the open and closes, you just got the high and the low. And usually what do we call that? We call that the range of the bar, right? Now, if I introduce now an open, you immediately will start to see that the bar has been segregated into 2 parts. You see, one is this lower part here, right? And the second part is the bigger part here from the open, all in relation to the open, right? So the lower part, which is over here, we call that the smaller range from the open, okay? The other part, of course, which is bigger, logically we'll call it the bigger range from the open. And this will keep happening every single day. The only time this cannot happen when you do not get a smaller range from the open or bigger range from the open, when can you not get that? When the open is where in terms of the range? Type into the chat box. Let's see those guys who said that you have understood, you know about the stretch and heard about Toby Crable. Let's see if you know the answer to that. When is the time when you won't get a smaller range from the open and bigger range from the open? when the open is where in terms of the range? Where would it be? Where in relation to the range should the open be for you not to get a smaller range from the open or bigger range from the open? Yeah, some of you have got it, not most of you. So some of you have got that. The only way that you cannot get a smaller range from the open or bigger range from the open is when the open is right smack in the middle of the bar, right? That's when you have equal proportion from the open. Other than that, most of the time you will get the smaller range from the open and bigger range from the open. The smaller range from the open is what Toby Cramer popularized as the stretch. Okay, so how is this all helpful and useful? Because if you take a look at it, we designed indicators on that. You can find it on publicly as well. If you take a look over here, designed by my trader friend, you can see there's a blue line, dotted line here. Can you see the blue dotted line here on the 1 hour time frame? That is what we call the open. And then the green and the red on top of that, the equal distance to the open is what we call the stretch line, the upper stretch line and the lower stretch line. So how do we get that X distance, the equal distance from the open? What we do is we do a mathematical calculation. So for each of the days, if you take a look over here, so let me just zoom into that one there. If you take a look over there, for each bar, we will take the stretch. So for this bar here, the stretch was almost near to the low. It was almost near to the middle, but I will take it for the low. Let's say that low was open to the low was 63 pips here. But here, the stretch was to the upside. You see, open to the high. It's more smaller, isn't it? So that one there, 35, right? And then here, you see, look, the stretch is so small. It's only 1, 2, right? So here, the stretch was only 2. Here was 35. Here was 69. What do we then do? We get the stretch for 10 bars. We keep doing that for 10 bars. We divide them. And that's when we get the stretch 10 number. And then what we then do in terms of the indicator over there, what we then do is we then would get that average stretch number and make an equidistant upper stretch and lower stretch line. Therefore, when I'm trading intraday, whenever it breaches any of the upper stretch or lower stretch line, I know that in terms of this projection here, that once it crosses the average stretch number, I can say that there's a higher probability for the bigger range from the open to occur there. And then I'll take my trade in that direction. Okay. Over here today, it was a bit more complex in the sense that if you take a look, it took out the upper stretch first, then lower stretch, upper stretch again, then it came back to the lower stretch line. We took a position over here. I'll show you the trade result as well. But then when it's confusing like this, when it's ticking up and down here, then we take a look at the higher time frame and we look to see in terms of open equity where the probability would be. On days like this, it would be better for you to risk a bit lesser as well than normal, okay? Because it's not that straightforward. Okay, good. So that's that one there, nearest extreme to the open, stretch, and the bigger range from the open. Now, from there, we get a stats. The stats, what we are interested in is how many pips is the stretch for 80% of GBP USD daily bars. Okay, what I'm saying is, if you take a look over here on the daily time frame, what is the X number of pips that on GBP USD 80% of the time? What is that X number of pips here, X number of distance that occurs 80% of the time? Why would this information be useful? Type into the chat box. Why would this information be useful? 80% of the time, what is the stretch that forms in terms of number of pips on the GBP USD? Why would that be useful, traders? For you to place what? What would that be useful for? Let's see if those of you who understand the stretch principle can understand. What would that be useful for? What would that be useful for? What would this 80% number, how would this be useful for? Okay, if most of you not getting that, that's fine. I'll explain to you. Why would that be useful for? It'd be useful for two parts. One, when I'm to enter, it can help me to place my initial stop loss a bit more accurately so that I would not be stopped out 81% of the time. This you can also use on daily time frames or weekly time frames too, when you get the stats accordingly. This is just for daily bars for now. It'll also be helpful for you as a second entry point as well. That means when your open is here, when it moves 50 pips from the open, then you know that the opposite side from the open must be your stretch, high probability for it to be the stretch, and the other side, which is 50 pips, which is crossed, must become your bigger range from the open. If for some of you who are not very getting this at the moment, I just want you to only take two principles from today, especially from price tip number 3, is that every day there's going to be one which is a smaller range and the other one which is going to be the bigger range. Your goal as an intraday trader is to capture the bigger range and know which direction the stretch has been formed. If the stretch has been formed to the downside, you trade long and you take that and you ride the move. Okay, right, cool. Now that's the 3 price tips that we have given you so far. First price tip was the 4 bar variations. Okay, price tip number 2 was what was tip number 2? Do you guys remember? And what was tip number 3? What was tip number 2? Tip number 2 was, some of you are saying it, it's the how much move is left, how much open equity is left. Tip number 3 was basically the stretch number. Okay, tip number 3 is a stretch and the BRO, smaller range from open and bigger range from open. These are all power parameters. Okay, these are all power parameters. All I've taught you now is power parameters. They are not what we call an edge, because sometimes people get confused and they think that's an edge. It's not. What do you think is an edge? Go ahead and type into the chat box. Go ahead and type into the chat box. What do you all think is an edge? Okay, cool. So some of you are getting it. I see some answers all coming in over here. Exactly. Some of you are listening very well. That's very good. Okay. So what is an edge? An edge, as we have defined, is what we call one that gives you a strategy that is sustainable, scalable, and reproducible. If you have an edge, you will naturally produce a strategy which is reproducible and eventually which will give you towards a high probability of it becoming a net profit strategy because of these qualities of sustainability, scalability, and reproducibility. That is what an edge really is. But so far, we only got power parameters. You must understand strategy formation and strategy construction is totally different to just learning parameters just individually by themselves. It really is quite sad how much information is being misled over there. And traders who come to our workshops and learn from us is they're not able to really know the fundamentals of even how to construct a robust strategy that will sustain and scale and reproduce over time. And they waste easily about 10, 20 years. So it's very important to know about strategy construction because one nice strategy can save you 10 years. Now, most of these concepts that we have learned from the institutional quant traders, we've compiled our 12 years of research into this Trader Starter Pack video series. It's got beginner material as well as intermediate material as well. Over 12 years of research collated into this, so I would highly recommend you guys to go here and download it. Now let me see if I can find, yeah, I've got the link over here. I'll just put it over here. It just takes you 1-2 minutes. You can just go to the website and just put in your name and email address and you can get it. Let me see. Has everybody got that one? I'm not sure if everybody has got that. Yeah, okay, I guess Simon has done that. Thank you, Simon. Okay, good. So that's that one there in terms of the place where you can get that trader starter pack in beginner intermediate material as well as cross transferable principles towards investment as well. So now there's a bit of time. I give you a question, and if you guys can get that right, we'll be happy to give you this Money Master the Game hard copy or ebook, whichever that you prefer. We'll give that over to you. Are you all ready? Let's go for the questions. What we've covered so far. Let's see who's been attentive, who can get it. These are the two questions. First question is, how many price variations can you get from 2 vertical bars? And what is the stretch number that occurs 80% of the time for GBP USD? Okay, if you guys can put the answers over there, and then I will see later on who's got the right answer. I'll call out the name, and then after that, then you guys can pass us your contact details and we can get our admin back and stuff to send you the price. Okay, cool. I'll let you guys think on that. How many price variations can you get from 2 vertical bars? What's the stretch number that occurs 80% of the time? Okay, right. So now let me show you a strategy that we've put together. Range runners, a practical example. Strategy building. First thing you must always have is the concept of the strategy. Concept is basically a recurring principle that always keeps happening. So that is price moves by a certain range, which I imparted to you guys. You have to find out that X pips, which I also gave to you guys because of the stats and the research that we have done. Then after that, also must know the objective to capture. As I said, 70 or 80% of the range, you must know that number too, which is what I gave you from the parameters. You can see how we are now constructing the strategy. Right, concept and objective. This is the first two things that you must always know. Next, the power parameters. Power parameters, what we look at is we look at price action and time frame correlation. So the price action that we look at, I've taught you just now, is what we are looking at over here in terms of the stretch principle, right? We are looking in terms of the stretch principle here, the price action principle, and time frame correlation as in we're looking between daily, 4 hour and 1 hour. Money management, you can either use a standard position size money management, which is 1 lot per every position you take, or 0.1 lots for every position you take, or 0.5. Whichever number that you take, you must be able to know before very quantitatively your maximum drawdown. If you do not know this, you won't be able to position size accordingly. Okay, so all of that we'll be explaining a little bit all of that on a trader starter pack. Right, now the strategy stats for range runners, usually you take about 283 trades. It was initially called Morning Glory. We then upgraded it to range runners. You can see this was the kind of the profit or the drawdowns that you had. July, September, October is the maximum drawdown. That's the first thing we look at as professionals, not the profit at the end. We look at the maximum drawdown. You can see you can get a maximum drawdown of about 6.87% over here. You must always know that figure because that's the one that usually brings fear in and paralyzes you so that you never get the profitable runs after that. So must always know that. And sometimes you see the profits won't come in the same way. That's why you must be prepared, and that's why you must always know your drawdown numbers. Okay, so that's that one there in terms of the strategy stats. As I said, maximum peak to value drawdown 6.87 R. If R is 1%, risk is 1%. That is 6.87%. You must always know that. This is very, very important. We teach you all of that through Traders Basecamp package and Trader Starter Pack 2. Reliability is only 44% of the time. 56% of the time you're either breaking even or you're losing. Average profit to loss is 2.09. All the stats you must know, which is how we trade over here. And you must have your cumulative equity curves as well. And then the final question then comes, I've shown you how you build a strategy with concept and objective, okay? And I've told you also how you put the parameters together from the price tips that I gave you. Now you may ask yourself, okay, Thiru, in real time, when it's going through its drawdowns, how do I then know if I need to optimize or not optimize? So you see, when you know your strategy is doing accordingly well to you, it should never go down its maximum drawdown of 6.87%. So if your strategy is going up and suddenly you get a peak to valley drawdown of 5%, that is still fine because it's still within your maximum peak to valley drawdown. But if it went up then after that, then it went further down and it did an 8% drawdown, peak to valley drawdown, that's when you should start saying, you know what, let's switch it off a bit. Let me go and take a look at what the market is telling me and whether I need to optimize my strategy or not. Okay, so that's why we first look for market feedback, and you continuously need to do that, just like in any business, just like that. Trading is a business too. And then once we got that, we did this in real time, and in real time what happened is the market feedback that we got is a preferential bias on a direction of the morning trades gave us a significantly better results. That means to say that having a preferential bias that today I'm going to take long based on the time frame correlations gives us a better result. And also an aggressive cover with our stop losses also reduces the losses significantly. Okay, even in this we have market compartmentalized into 3 types of market structures that can be in the market. Market structure 1 to market structure 3. This is very helpful for us in terms of trailing our stop losses as well. Okay, right. As I said, most of these principles you can learn on the Trader Starter Pack. I've given the link over there, and I believe that Simon has pasted it for you guys as well over there. Okay, cool. So now let's see. Let's move on. Now the question number 2, let's see for interactive exercise to see who can win the prize on this. So let's see this one here, what the questions are this time round. Okay, let's see who can get this right. For the Money Master the Game book, what is the concept of the range runner strategy? And what is one way that you can use to optimize your strategy that we have taught you? What's the concept of the range runner strategy? And what is one way that you can use to optimize your strategy? Whoever gets these questions right, then we can give a Money Master the Game book, and either as a hard copy or either as a soft copy, whichever one that you guys prefer. Okay, cool. So let's see.
Through this, I've got all these answers here. I just didn't want to share them, obviously, because then everybody would see them. But I don't know how to share these. I've got the answers. Maybe we can do the first 2 questions. The first, because we've got some answers.
Oh, you mean the questions that are coming through, is it?
They're coming through on the. One of the things about the go-to is that I see all the questions and I repost them into the thing as a reply. It's just a funny quirk of the questions box.
Okay.
So I can see these. I didn't want to repost it, otherwise everybody would see these correct answers. That's why I haven't reposted these. But
I think, yeah, I'm seeing the questions, I think, but they are everything for the day. Is that right? Or I'm not sure.
Well, can we do the answers from the first 2 questions now and then?
Yeah, I think let's do that. Let's do that. I'm just looking to get that. Let me see. Where would it actually? Where would it come? Where would it come?
You can't see it because you're not an organizer. So
I can't see it. Okay, so
you will only see the answers when I repost them. That's what I'm saying. But
okay.
When I repost them, everybody sees them. So
okay, no problems. Yeah. So you want just the answers for the first 2 questions?
If you give me the answer for first two, I can tell you who got them right.
Okay, so that's great. Yeah, so let me just quickly just get that first two questions over
A
there.
bit like pizza, isn't it?
Yeah, price. Yeah, no problems. Price variations is 4 price variations, and the stretch number that occurs 80% of times 50 pips. So 4 and 50. 4 and 50.
So we have two winners there.
So if they can give their name, email address, and number, then our guys can.
Richard and Eric.
Yeah, so Richard and Eric, if you can post your name and email address and number to Simon or in the chat box, our guys can reach out to you. And the answer for this one, Simon, the concept of the range runner strategy, the recurring principle that occurs is to capture X number of pips every day. So to capture the range, basically, capture range every day. That's the answer. And what is one way that you can use to optimize your strategy is basically market feedback or aggressive stop loss cover. Whichever comes quite near, I leave it to you to have your discretion on that.
So Richard again Richard's cleaned up. Fantastic. All the questions correct.
Okay, that's great then. Yeah.
Thank you, everybody else. There was obviously a few more that got in. We had two more at the 4, but they had a 70%.
Okay.
For the pips on the first one.
Yeah, no problem. You can always forward the details off to me later on, Simon.
I will do that.
All right, thank you. So carrying on, guys. So then you see, finally, I just want to impart to you the rules for the strategy in terms of the live trading for you to take away. First is look out for in intraday trading. What you're looking out for is basically you're looking out for a breakout from the upper stretch and a retracement. Okay. When it breaks out from the upper stretch or lower stretch, whichever upper stretch line, whichever stretch line that it breaks out first is where your direction will be. So here today, the direction was first thing that it broke was the upper stretch line. So it will take a long, but we will wait for a retracement first. So for example, if you had a line like this, upper stretch line broke, we won't take the first breakout. We'll wait for it to retrace first and then look for a price pattern to then enter. Okay, for those of you who want to see us trade live, all of these things, you can go onto our YouTube channel. We got a whole playlist over there with 150 videos that will tell you how we are looking at it. The next thing is pattern recognition. Also look at time as well. That's very important. And then after that, then we place the order on this. These are the 3 rules, what I would say that we take a look at. Okay, so I will handle the questions in a bit. In terms of similar strategies, for those of you who are looking at end of day strategies, what we have also done in terms of designing similar strategies in terms of open equity, I'll show you guys a very simple one here. This is the primary runners over here. So what we'll show you over here. So if you look at the different currencies, I'll show it to you. If you look at all the dots over here, right? If you can look at all the dots here, the dots. This is where the confirmation bar is occurring according to the quantification of the tops and bottoms for open equity tables. So whenever we get the dots happening, we on our short-term strategy, very short-term strategy, which looks to get 80% reliability. 80% reliability, that means when I look at my open equity table, I'll be looking to choose the number that it hits 80% of the time, which is 25 pips. So I design a short-term strategy like this, which we then give in terms of our signals that we are looking at from a financial education perspective, and after that it's up to the client's choice how they take it on. When we do that, you can see every time we take it from confirmation bar 25 pips, this one would have hit the trade, the profit, but this one wouldn't have. When we do that across all currencies, as well. You can see over here, this bar here made the 25 pips. That's move left. It was move left. It hit the profits, right? So dollar Swiss is another one here as well. If you take a look, whenever you get the confirmation bar, then there's 25 pip move we would have taken that. Remember, this is just one strategy. Usually most people always ask, oh, why don't you let it run for longer? Yes, we do that on different strategies. So we got 3 types of strategies: short-term, mid-term, and long-term runners. Okay. So the short term is how we design that based on the open equity tables, and we do that across anything. Silver as well, we do it. You see, look over here, that one would have made some cash, that one would have made some cash. This one just nicely hit our small target. This one here, not really, would have taken a small bit of a loss. And all of that, Brent oil, similar as well. So this is what we keep doing in terms of our live trading room and how we capture all these trades in terms of open equity. After that is how then we basically show it to our clients. But before that, this is the research that we have done. Before we publish it and give it to our clients, we take a look in terms of all the instruments from 2010 to 2020. Okay, most important thing what we are looking over here in terms of testing is the drawdowns that it's doing. Okay, this is over 5 currency pairs. What we found out, traders, is that when you just do currency pairs, you see the first year itself was a loss. Okay, we had a loss, but the next year itself picked up about 1,000 pips on an average. What we found out is when you actually start to diversify it and include more instruments like Brent oil, silver, energy, commodities, indexes, and all of that, the peak to valley drawdown reduces and the curve gets a bit more smoother. Okay, and over here is the monetary amount what we would have made, and accordingly about $10 a pip or a point is what we are looking at. But most important thing, I'll reiterate again, what we are looking at is not just the net profit, it's the drawdown. We're analyzing that. You can see in 2021, if we just take currencies alone, and we just did that before we finished the research, we did end up with a small loss of minus 77 pips. The good thing is, when we ended up a small negative for last year, we didn't panic much. Because why? Because you see, from the testing, we see that that is almost very similar to our previous years of drawdown, 58, 10, and 89. So we're not. And look at this year so far, this has not been updated yet. I'll show you the updated one very shortly. As far as we calculated last time, for currencies for Q1 performance, which we released a video as well on our YouTube channel, Master the Markets, we saw that 150 pips just for currencies, but when you total up all the rest, we saw that we ended up with 22,475, which is about 224 points or pips. Okay, so that was the really good part. How do we actually disseminate all these signals and all of that? You see over here in the journal, every professional trader should have a journal, and we are openly transparent about every single trade that we take. Over here, you can see we started in 4th of January with Brent oil. You can see the wins, the losses here, and then the wins and a small loss, wins, quite a big loss. Remember, in this strategy, there's a lot of small winners, but when they lose, maximum you can lose up to is 2%. Okay, but the losses happen very less of the time when it hits a maximum stop loss. That's how short-term strategies are designed. What gives us the conviction is our open equity numbers. You can see over here losses, wins, losses. Then after that, we had a big string of profits then coming through. So overall, if you can see, if I just total all of that up together here, we can see that it's 15.02% up for this year alone. Okay, and the last one that we got was coffee on the 24th of May. We exited on 25th. It's only for one day we hold this trade, and we had 0.5%. The one before that, Dow Jones took a 0.9% hit. Dollar Swiss took a 0.5%, and then the rest accordingly we took a bit of small losses. But it's all fully transparent. That's how we trade. Trade journal performance so far, we're up 23.77%. Up. We need to just review these numbers before we publish them for Q2 performance. But in May, so far on the cash in 4.0 one day exit, we are up 15.02%. The other two strategies are midterm and longer term. That's how we do it over here at Master the Markets, all based on the principles what I've taught you here, based on our open equity tables over here, which I just showed you just for one currency. We got all the stats and all that. That's how we do it here, very systematic and methodological. Okay, right. So as I said, you can always find out more about us and all these principles what I've taught you in our 5-day video course over here. I think Simon has pasted that to you guys over there. That's the link, name and email address. You can see over here. When you go onto here, you can just put your name and email address. When you click on that, name and email address and number if you want live trading updates, and you can click on that, and that will just give you the 5-day video course that you can watch at your own free time and leisure. Okay, right, the last question for the last person to win the prize, running out of time.
Yeah, within the last minute, if we can keep it quick.
That's right. So the last two questions: which time frame do we take the trades for range runners, and where do we place the target? Where do we place the target? Which time frame do we take the trades for range runners, and where do we place the target? I will let Simon see the answers for that. And just to wrap up, now that you've completed this presentation, you should know the 3 price action tips to give you a winning edge, an elite strategy with those tips which made under 60% return. And I showed you a similar one as well, and how to execute a similar strategy live in real market conditions and make consistent returns. I gave you the rules for the intraday one I showed you, and I also showed you an end of day one as well. For those of you, I'll see if I do get any time, probably not, but those of you who still got any questions, specific questions you want to ask us, you can go to this link over here to book a one-to-one coaching session. We usually charge about £250 an hour, but for you round-the-clock traders who have just come in, we won't be charging you that. We can give you a free session. You can just book it over here. The page will look something very similar to this. If you want to ask us any questions on a one-to-one basis, name, email, and number, and then you can book your one-to-one session on the calendar that you will see. Okay, I guess that's pretty much that from me.
Thank you very much, Thiru Nagappan from Master Markets. Really appreciate that. Thank you, and great, we're just on time, so we'll speak to you again shortly. Take care.
Thank you so much, Simon. All the best.
Okay, fantastic. Thank you, Thiru. Just before we go into our next presenter, I'm really pleased to say we've got Bobby Hillier from Metastock joining us in just a few seconds. We did offer everybody that registered for this event access to the Round the Clock Trader Club, the video club. Sounds so old-fashioned now, doesn't it? This is a collection, it's an archive essentially of all the webinars, all these Round the Clock Trader webinars that I've been doing over all the years. You should be able to see my screen now. I'm guessing you're looking at me. I'm scrolling down the website. This is the special link to go to, which gives you free access to that. Side steps the $49 lifetime membership fee. So you are going to see all, not all the recordings. I must say I sifted through and took some of the not so good presentations. There are hundreds. So if you go down here, you can see some of these presentations. Most of them are the ones that stand the test of time. They don't. They're valid lessons for any market strategies. We've broken them down into 4 categories of strategy systems and methodologies: the trading psychology, the mindset talks, technical analysis and indicators, and finally trading tools and platforms. So if you've got rainy days ahead of you, and please go through there. You'll see in total there's some wonderful speakers from all over the world taking part, and these presentations go back to 2015, but they're still as relevant now as they were then. So please make use of that link and sign up to the website if you can. And we'll also keep you in touch with live events as well that happen for Round the Clock Trader on a more frequent basis, if you're in the website, in the club, as it were. Great. Right, we are moving on. We've got our penultimate speaker. I'm really pleased to say we've got Bobby Hillier here. Bobby is the Business Development Director over at Metastock in the US, and he has been very kind in supporting our event and emailing some of the clients. In fact, all the clients, which has been great. And we're seeing a few of you on here today on this webinar. Sorry, I should have the webcam. have the webcam on to say hello. So it's been great to get that support. Let's go over now. I'm going to make Bobby see you there, which is great. I'm going to make you the presenter and share your screen so that we can get started with the presentation. It's maybe not working yet. Great, okay, I can see Bobby logging in and taking the screen. So great, so we've got Bobby Hillier from Metastock joining us for this next 45 minutes. Fantastic, there we go, the Metastock Power Tools.
Hey,
good afternoon.
Great. Thanks, Simon. Yeah, thanks for having me on today.
It's
good
always a pleasure.
Evening, I should say.
It's our evening, yeah. I'm sorry about giving you a fright an hour ago. I'm on the CET of the events based in BST. So yeah, I was working an hour ahead, and I apologize for saying, hey, are you logging in? You must have thought, hang on, what have I done?
Oh, I was spooked there for just a moment, thinking, oh, maybe I didn't realize there was a time change or something. But I'm glad I could be here today on time, and that I can do a quick presentation for you guys and show you some of the power tools and features that we have in Metastock that might be able to benefit everyone in their trading.
Perfect. That's what we're here for. We've got a great group, really active. Obviously, there's some Metastock customers here as well, which is good. So you've got some fans already in the room. If you are a Metastock, just raise your hand or just say yes in the chat box. That would be great, just to get an idea. But to everybody else, if you haven't come across Metastock, I think you'll be interested to find out about it and let Bobby tell you what it can do for your trading. So Bobby, I'll hand over to you and let you get started.
Okay, thanks so much. Hello everyone. Simon's done a great job of introducing me. I am Bobby Hillier. I'm a business development specialist here over at Metastock. And, I'll just come right out and say, I'm definitely not a professional trader myself per se. However, I do have the pleasure and unique opportunity of working with professional traders all over the world every single day, because I am in charge of all of our international business development that we do. So not only do I get to meet with and speak to professionals all day, every day from all over, trading all sorts of different assets and commodities and securities and things of that nature. But I also get to see the insides of what it is that they do and everything. And I get to help incorporate some of their systems into our platform. And so what I want to show you guys is how, someone myself with not a huge trading background, though I have been in the markets for several years now. I've been with Metastock for 5 years, but I was trading well before that. I'll show you guys kind of how anyone, whether they be a professional or not, can kind of utilize many different tools in a very simple manner to help you improve your trades. And with that said, let me actually jump over to my PowerPoint here, because before I get too far, I do have to make sure that I read my quick disclaimer here. So this demonstration, it's designed to instruct you on using Metastock and the accompanying software plugins, and it's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software and any trading strategies or any information provided in connection within the company. I'll go back to that disclaimer. I just want to say, these disclaimers, you probably have seen most of the presenters give them today. This is out here to help you guys. The reason that we all have to do this is because, you know, there's rules and laws, so that we want you to understand there are risks inherent in trading. Granted, you can have tools to kind of help educate you and make you perform better, but everyone really should take this type of stuff seriously and don't, you know, don't gamble in the markets. Make sure you're being smart about it. I just wanted to put that out there. I'm gonna take these headphones off so that I'm not hearing a little bit of an echo. In case you're not aware of Metastock and our heritage, you'll see this floppy disk here. We were founded back in 1982. So we've been in business, you know, for about 40 years now, making technical analysis software. And a lot of people, even in the 90s, you know, weren't using computers or didn't really know too much about them. But yeah, we go back another decade before that. So we've really helped pioneer a lot of technical analysis and things of that nature. We were purchased by Reuters back in 1995. And we released our first real-time data feed based on the Reuters technology for Metastock in 2005. And then we released our Metastock Zenith platform back in 2012. And then shortly after that, we actually divested from Thomson Reuters in 2013. So we're very much still the same company, the same people in the same place. But now that we're no longer owned by, you know, the larger Thomson Reuters, which was bought out, I believe, by BlackRock and then LSEG, London Stock Exchange. So lots of name changes throughout the years, but we're still kind of at the core our same company, and we're able to move a lot faster and make decisions more efficiently now that we don't have to jump through so many hoops. So that happened, yeah, almost 10 years ago now. Also, just to give us a little bit of credibility, you know, we have been rated as the #1 technical analysis software for over 28, I think maybe even 29 years in a row now, according to Stocks and Commodities magazine. And with our Metastock real-time platform, which hasn't been out as long, that's been rated #1 for over 10 years now. So we're not, you know, I'm not the only one up here saying that this platform is great. There's a lot of others out there that think the same thing, and this is kind of proof of that. So for today's presentation, I'm going to show you guys a number of things. So answer some really big main questions for you. First, how do I find securities to trade? When should I get into and out of a trade? What system should I use? How do I test my system before I get into a trade? These are all, you know, kind of basic. They seem like small questions, but they're huge. Like if you know what to trade and when to trade it and how to trade it, that pretty much answers all the trading questions, right? To help you get in and out. And that's exactly what our software is designed to do, is to help you with these different things. And if there's even something, you know, specifically that you really struggle with, like maybe you have a trading system that you really like, but you just don't know what securities to use it against, you know, we have a tool to help you specifically with that. Or maybe it's something else. Maybe you know what you want to trade, but you don't know what trading system to use on it. And we have ways to help you go about that as well. And I'll show you guys some different techniques that you can utilize in a very easy manner to help answer all of these questions. And another thing is this. We're going to spend most of today just kind of inside the software. I'm going to go through the basics. I know we do have a lot of Metastock clients in here with us today. However, I am still going to jump through and kind of just show some of the real basics in the software, show you kind of the outline of how it works and the different tools. And then we'll go through and use just a couple of the semi-advanced features. Actually, I don't even know if I'd call them that advanced. They're actually some pretty simple features that do a lot of advanced things in the background to show you how I think our platform might be able to benefit you regardless of where it is in your trading that you think you need help, or where you might be on the scale of beginner to advanced trader. So with that said, let's go ahead and dive in. All right, so this is just Metastock with nothing really open in it. right here. And what I'm going to do is, click on this feature right here, which is going to pop up my power console. And in here, we have all the main power tools over here on the left. And actually, it's a lot of these different power tools here that are going to be used to answer those questions for you. But just kind of at the basics, or at the core of things, I just want to show you guys our charting engine just for a little bit. It's actually been very recently updated, and just show you what makes Metastock a little bit different compared to, you know, what any other charting platforms you might be using today, or maybe your broker or something of that nature. And one thing I'll say too is we're not broker affiliated. So you can still use any broker of your choice if you're utilizing our platform. That's what all of our other clients do. But that's not to say that, you know, our software can't give you that extra bit of information that you might be lacking in your current platforms. So definitely something worth looking into. And just to keep, normally I'm looking at US securities, just being based in the US myself. But for today, we'll go ahead and just jump into like the London Stock Exchange. And apologies, I don't know which ones here have the most volume or anything like that. So maybe I won't open some of the best charts, but we'll open a few to be safe. And I guess one thing to notice too, before I jump in, you'll see next to this instrument tree that I have dropped down here, we have access to over 314,000 securities. So even though I might be based in the US here, our clients are all over the world, whether you're in London, whether you're in Asia, the US, you know, really anywhere. We cover the entire world. We cover global markets. We have partners established all over the world too. So we have dealers everywhere too, so you can get more localized support. But with all of that said, let's go ahead and jump in here. I'm just going to open up a few charts to make sure we get one, you know, with at least some volume and whatnot. So I'm just clicking on them here. Also, if you know exactly what you want to open up, you can always just type in the instruments up here, or we have an instrument search box. Lots of different ways to go about it. But let's go ahead and open these up. And I'm just opening these in our most basic clean template here. Look, I knew we'd probably have some interesting ones because I'm just clicking on random things here. This one looks pretty sporadic with its data. Let's go ahead and close that one out. This one looks like it might have a little more volume than the others, I'm guessing. So let's go ahead and open it up. And all right, so far you might be thinking, wow, that looks very plain and basic. And you know what this is? This is just, it's called a clean template. It's just empty with the chart here. However, I want to just show you how very quickly you can kind of update this and personalize it so that it looks exactly how you want it to look. So this is just a standard bar chart. I'm actually not sure how many records I opened up initially, but I can very easily zoom out to see how much data I loaded, or I can even go into my x-axis at the bottom to do that for me. However, what I am going to do is just jump in here, and you know, personally, I really like to look at candlestick charts. So I'm going to go ahead and change this to candlesticks, and you'll note that we have several different charting styles to choose from. So whatever it may be that you like to utilize, chances are that we have it. Also, I think we can go ahead and make this really quick. Instead of just having everything be black here, you know, I'm going to go ahead and change this so that I want my up color to be green, and then an up fill. So do I want the candlestick filled? I'm going to say yes, that I do. And I'm changing these to their initial defaults. I think in our last presentation, someone might have changed them away or changed them from that. So now I've gone ahead and did that. I'm going to click OK. I am going to get zoomed in here. I have it set to look into the future because our charts are able to chart and go into the future, like if you're looking at an Ichimoku or something of that nature. So now it's quickly updated to a candlestick, and I can see I have filled and unfilled depending on what it is. And also you can actually select, do I want my candlesticks to be filled or not? Do I want them to be based on the close to close or the open to close? And for my fill mode, do I want them always filled? Some people like to have all the candlesticks filled. Some people prefer to only have it filled if the close is less than the open, to kind of give you another visual cue as to what's happening with your candlesticks. So those are all options there. And and I'm going to go ahead and save that. Also, maybe I don't like the white background. Maybe that's difficult on my eyes. We do have 16 different templates here that you can utilize to change them. I actually really like this black steel one. It matches our Zenith charting style on platform, and Zenith is our version of Thomson Reuters, or now Refinitive's icon platform that we also offer. However, we're going to spend all of our time in Metastock today. So yeah, I can easily go in and change these templates and things, just so that you guys know, hey, however you may like to look at your charts currently, there's probably a way that you can change Metastock very simply. Everything's just meant to be very user friendly. I double click on something, it gives me the option to change everything in here. I can also go in and save these as my defaults if I wanted to, or I can reset it back to the standard defaults, and it's going to remember however you set them, so that the next time when you come back, it has that saved for you. With all that said, there are also other charting styles too, and still, I know this is all really basic, guys, but I just want to show everyone that there is customization that can be done in here, and very quickly I'll be showing you too that it does get more impressive than this. Now I'm gonna also just add on a couple indicators onto my chart, because I know no one really just, well, maybe actually some people do just look at a standard chart like this, but oftentimes you want to look at it a little bit more. So I'm going to go ahead and I put in a volume up down indicator. You'll see all I had to do was grab it from the indicator box and drop it onto my chart down here. And now too, you'll see the volume. Not only can I see the amount of volume that's here, but I also have red and green candlesticks for the volume. I can double click on that and open it up again. And now same thing, this gives me the option to choose, okay, if it's an up bar, meaning this bar is higher than the previous bar, do I want that to be colored in just to be a little more, just to make it a little easier for me to see at a glance? So I have that default set to green is up and red is down. That's pretty standard, but you do have the option of choosing another thing here too. Do I want a green bar to be based off of the close price? So it doesn't have to be off the volume. I can say, hey, if the close is up on the price in the chart above, then I want volume down here, my volume bar to be green, just because I like to quickly look at volume. It's something I care about based on pricing too, though. Or maybe you care more about the actual amount of volume itself, and you want the up and down to be based on volume, not on price. So you have that option here, and that's kind of throughout with all of our different indicators. You can double click on them, change the color style, change the parameters, etc. And now just to make this, just to dive into this a little bit more here, I want to put another indicator on here. And what I'm going to use is the MACD, or as some of you may call it, the MACD, Moving Average Convergence Divergence is what that stands for. And I'm going to go ahead and put this onto my chart too. And so a lot of you may know with the MACD, when you get a cross over, that's indicating a buy signal. And then when you get a cross down on it, that's indicating a sell signal. And so this is pretty common too. This is an indicator you might see on a lot of charts. And so that's one of the reasons I wanted to put it on this one. However, instead of applying all these different indicators and things and having to create this chart on my own like this, I want to show you guys another thing that we have that is different from what you might have with your other charting platforms. So, because so far this is all pretty standard. You have your different indicators, you have your pricing, etc. You can maybe change the colors, okay. But what you're not going to find with a lot of other platforms, or any other platforms I should say, would be some of our more unique Metastock tools. And one of those, my absolute favorites probably, especially for beginners, it's our expert advisor. And there's a few different ways that I can actually put an expert advisor onto my chart here. And what I'm going to do is just one of them here is I can click on this guy. I could have also right clicked onto the chart and selected expert advisor. And what I'm going to do is scroll down. There's a lot of them on here. Metastock on its own comes with a lot, but there's also some add-ons on here from some different presentations we've done. And what I'm going to do with this is click attach with this MACD by Metastock and close this. And now you'll see something else just happened on my chart. So I'm even going to remove the volume I put on here earlier, and the MACD indicator I put on, just so that I can show this expert advisor that I just attached. Well, actually, I take that back. I'm going to put the MACD back on here so I can make it a little easier to follow. So what the expert advisor did is it's an expert advisor based off the MACD system, and automatically what it did is it put this ribbon onto my chart down here that's both a bullish and a bearish ribbon. And now you'll notice this ribbon actually lines up with the indicator that's down below that I charted earlier. So I'm going to go ahead and just grab this line here to make that a little bit easier to see. But within the bearish section is when you have a cross down, then that's notifying that this is in a bearish signal. And then when it crosses back up, it tells me that it's bullish. And you can even see right here, it might be hard to see how far those lines are apart from each other, but right here, it's very obvious that this is bullish. The moving average convergence divergence has crossed over, and it's telling me that that's bullish. Another thing happens when you get these crossovers that I mentioned earlier is a lot of the time it will signal like, hey, this indicator is giving you a buy signal when you get that crossover, and it's actually plotted those right onto my chart. So I'm going to go back here, and you'll see right here, I have a MACD buy signal, and right here, I have a sell signal, and that's from the crosses on the indicator down here. And I'll go ahead and close that out now that I've kind of shown you how that matches up with the indicators. So this makes it far easier to really read your charts. And I'll say again, especially for beginners. And granted, this is one of the easiest to follow or utilize trading systems too. But this also works with more complex systems. When you have a very complex system with that maybe used to blow up your chart before, where you have lines everywhere, you have histograms, averages, trends, et cetera, et cetera, et cetera. Our expert advisors, which we have hundreds of them built in here, they take all of your trading systems and they simplify them and then put it onto your chart for you. And another tool I want to show you guys here, it's part of that expert advisor, is that it also comes with commentary. So I'm going to go ahead and turn that commentary on now. I'm also going to change my theme here, just in case it was hard to see with that darker background for you guys. So now what I have, you'll see this green arrow up here. That's signifying that we're on today's date for this arrow that the commentary is up for. And this commentary is telling me about the MACD by Metastock. And again, it says the MACD can provide buy and sell indicators in 3 ways. Signal line crossovers, which I showed you earlier when the signal line was crossing the moving average. Also, it gives you overbought and oversold conditions. And I guess that's something I didn't 100% touch on earlier, but that is another thing that comes with the MACD, as well as it'll tell you divergences, and you can get signals based on all of those. So these can pop up depending on if it's in a very overbought or oversold, or the divergence or the crossover. So all of that is taken into consideration, all those different ways of reading the MACD into this expert advisor that's on my chart. And then also it just kind of reads it out. It tells me, hey, the MACD is currently bearish, which if I look here at this bar, I can look down here on the ribbon. Okay, it's bearish since it is trading below its signal line. It crossed its signal line 5 periods ago and crossed its moving average as well. So the price has increased 7.22% since then. I can also take this and move the day that it's on. So you can see it's moving that little arrow here. And let's go ahead and just scroll back to this sell signal. So here, if I do that, it changes the commentary over here, telling me what it would say. And it tells me both the overbought and oversold conditions, or sorry, all 3, and the divergence and the crossovers. I can come over to like another example, just to show you how that commentary changes depending on the day that you're on. And this again happens with all of our different trading expert advisors too. So you get this expert commentary to help you as well. So that's one of the very big differences that our software has, is not only can you do your standard applying of your indicators and saving, your own custom templates, but you can also go in and use all of our built-in expert advisors, or even create your own. And then many of these come with this commentary too, to really help give you guidance throughout your trading. So not only are you getting your standard charts, but you're also getting that additional guidance and assistance. And this comes with more complex systems too. Just to show another one, I mentioned earlier, I am a very big fan of candlestick patterns. So I'm going to go ahead and show you guys another template that just comes with Metastock. Let's scroll up towards the top here. Candlesticks. So I'm going to go ahead and turn on the Candlestick Expert Advisor. And now you'll see this removed everything that was on the MACD. And now I have all of these showing up, telling me what these different candle stick patterns are on the chart. You'll see I have a rising window, an engulfing bear, a doji star, an engulfing bull, etc. So maybe you're a fan of the patterns as well, but you just can't always remember every single different candlestick pattern. Well, we have an advisor in Metastock to help you see that and to help identify these for you. Also, I'm going to go ahead and go into this expert advisor too and turn on the commentary again. And so now I will move the commentary to this bar here. This is an engulfing bear. Actually, I have a few that'll show up. So one other thing, I'm getting ahead of myself here. Before I show you guys that, I'm going to go into the expert advisor's properties and show you guys under symbols. So you're going to see a list here. These are all set up on the symbols, and you can also prioritize these. So maybe there's certain candlestick patterns that you think take dominance over others, because you might have some patterns that are a period of multiple days instead of just one candlestick. But maybe if there's one candlestick in there doing something different and you want to take priority, you can come in here and rank these, basically move them up or down so that your commentary will pop up on the one that's most important to you. Maybe you don't like certain candlesticks, maybe you don't like the big white candle or the big black candle, etc. So you can see those are checked off in here. So you can, again, take what we've already built and then easily customize it to meet exactly what it is that you want it to do. You can also set up alerts to go off when you have these different things, and you can set up different color highlights and things of that nature as well. And then you can even go in, and for a lot of our systems, you can see the code. You can see exactly on a more technical level how these formulas are written, so you can maybe even better understand them that way if you want to. You absolutely don't have to know coding or formula language or anything like that to be able to take advantage of this stuff. So these are ways that Metastock is unique versus what you might be utilizing currently with your system. Is we try to help the beginner traders and the more advanced traders too by providing you all this additional information and making it very easy to follow. So again, I can come here. This one says a white body occurred because prices closed higher than they opened. And then it gives me all the different information based on this expert advisor. Now, granted, this isn't necessarily answering all the questions that I first listed in my presentation. And maybe you don't know, okay, which expert advisor do I want to use? Or I still don't know what system or strategies I want to utilize. And now I'm going to kind of shift my focus over into that for you guys. I just wanted you to have a base understanding of our charts and how some of this works. But now I'm going to show you some other unique things about Metastock. And yeah, like I said before, there's a few ways to go around this. Metastock is built in a way where, regardless of your type of trading or the way you want to go about things, there's a different workflow that you can utilize. And I'll show you just some of the more common ones. So to go back to an earlier example, maybe you know that you really like the MACD system, but you don't want to go through 314,000 securities to see what has a buy signal today on the MACD, or maybe a sell signal, etc. So one tool you can utilize that we have here is our Explorer. And what the Explorer will do is basically scan the market for any instruments that you select, utilizing any exploration that you select or that you've built yourself. And let's see what I have. I'm going to deselect this so I don't have anything selected, and just to kind of stay on to my same approach here. And so this is something you can do very quickly each day. So if you like, oftentimes I'll do my trading in like 15 minutes a day, where I'll just come into here and I'll do some of these scans to see what's important today based off the strategies I like to use. And then just within a few minutes, I can have my trades placed on the day and go about other things. So using the example before, I'm going to select the MACD expert. And if I hover over this, this will tell me, this shows the MACD buy sell signals. So whatever has a crossover, or it's below its 9-period EMA with either, and then it says with either a 1 in either column A or column B. That's how I differentiate the answers that'll pop up. So yeah, let's use the MACD expert system, and I'm going to run an exploration. And I think, yeah, so I just have this set on the FTSE 250 right now. And then I'm going to come over here. Actually, I think I still have this opened up in the background. Let me close my results from a different scan I ran earlier. And let's go ahead and hit start exploration. So now what this is doing is answering the question of like, how can I find different securities to trade if you know the trading system that you want to use. So maybe we want to use this MACD. You'll see this is scanning through 250 instruments, and that took just a matter of seconds to give me an answer. And now it's given me a list of results. And so you'll see here, 219 of these securities were rejected, meaning they don't meet my filter requirements. And I got 31 results. And now I can see the instrument name of them all here. And this has a buy and a sell here. So if I sort by the buy, if it has a 1 in this column, that's saying, okay, this has a MACD buy signal today. If I sort by the sell, same thing. These ones have a sell signal today. Or I can look to see what might be overbought or oversold. And so that gives me a list of those 31 securities have results for this trading system today. So I've narrowed down from 250 down to 31, but maybe, I'm only a person that wants to buy, or based on the current market conditions, if you're looking at how things have been trending a little bit over the last few weeks or months or so, maybe I only want to take sells, depending on your time frame, of course, or when things are bouncing. Obviously we have a lot more buys popping up today, so that's something to look at as well. And now that I have these results too, I can show you, I can simply double click on one and it's going to open it up here. And I don't have it set as my default right now. I could have done that earlier, but I can turn on to have it like open whatever scan I might have just ran. So like the MACD, I can have it open all my charts with that. I just hadn't turned that on before. I'm going to apply this template, and we'll come here to the very last day, and you'll see the MACD has a buy signal today. So now I was able to go in, and because I knew the trading system that I wanted to utilize, I was able to find, that list of securities that all have a signal today. And now I'm saving myself a ton of time by just going in to look at the ones that gave me that buy signal for today, so I can make sure that they might meet my other criteria. Or maybe I wanted to come in here and attach my template that has the MACD and maybe some other systems too, to take a better look at it. With that said, there's some other things I can do to help filter this down even more, utilizing the Explorer. So not only does it search for buy and sell signals, but you can also look up pretty much any other criteria that can be, formulated based off of, like the open, high, low, close, and volume. Maybe I want to look at, I want to find everything that has the average number of shares traded over the last 5 days. So I just want to look at the average volume for a list of securities. I could even take those results that I just had, and I could click here, and I can, I scroll to the bottom here, I can use the last exploration results. So those 31 securities that met my filters from the MACD, I can come here and now I want to say, okay, I want to see the 5-day average trading volume for all of these. And I could run this exploration based off those last results to maybe filter things down further for things that are only meeting the right amount of volume that I wanted. Or there's many other filters you can apply. You can even choose, okay, I want an MACD. I also the MACD, I also want to have, you know, bullish candles for these securities too. And I can turn on both of those explorations and then come over to here, and I can use the results from the preceding exploration. So after I've scanned and I got my 31 results, if I had this selected, it would, for the next scan that I have selected, it'll only take those 31 results and work from there. Because I know sometimes people, you know, you might be looking at like the London Stock Exchange as a whole or something of that nature, or, you know, then like the New York Stock Exchange, whatever it may be, and you might need additional filters or there's other things, you can combine them. You don't have to stick to just one strategy here. You can combine multiple different explorations, and when I just hover over these, it'll tell you too what most of these mean. So that's going to help you identify things that you can trade right now or in a live environment. Also, something I didn't touch on before, so I have only been looking at daily charts and daily timeframes, but we can change this into intraday or any custom interval as well. So maybe I only care about looking at 5-minute charts, and I want my scan results to be for the MACD to be on intraday, you know, or on 5-minute bars. You can select that here to do that as well. And now I know some of you might be saying, okay, well, that's great. However, I don't know what trading system I want to use. I've been using this MACD example, but maybe you don't like it. Maybe you'd rather use something else. And there's another way to go about that. Some people might prefer to do the second method first. And so what I'm going into now is our system tester. And this system tester, it allows you to test different strategies to see how they would have performed historically. And not only that, not only does it utilize specific trading strategies for that, you can also go into the trade options here and you can personalize this. So you can go in and you can enter your account size. Maybe you have an account balance of $10,000, which is what this is set to now. And maybe you're only ever willing to have up to, just for the sake of this example, 25% in trades at one time. Probably your amount's lower than that, I don't know. Or maybe you like to just say how much you're trading at a time and change that, but you can choose the percent of available equity, your transaction cost, the number of units, lots of different options here. You can put in your broker settings. So if you have you know, specific fees or commissions that you might have to pay, nowadays those aren't as common, but there's still a lot of them that do have things like this to take into consideration. So you can put all of that in, all your own account details and things of that nature to really personalize this. And now you'll see we have quite a few in here. What I actually did, I even have a filter turned on. So we have tons of systems just built right into Metastock. You can also very easily create your own, or if you search the forums or even our website, I mean, you can find other strategies too that other people have created that they might let you utilize, or we're partnered with a lot of professional traders and we've put their proven trading systems into Metastock, and you can get their third-party add-ons or trading systems and utilize those. One thing that we recently did is we added in what's called, it was a $400 add-on we used to have called Performance Systems Plus, and it's now included for free in our software, and it comes with, as you'll see, about 80 different trading strategies that all went through a lot of specific criteria. They were tested over a period of 10 years to all have proven successful. They weren't traded on penny stocks or anything like that. They had to have a set amount of volume, a set amount of proper or of winning trades, and etc. And yeah, that used to be a $400 add-on, like I said, but it's now included for free, plus tons of other strategies that were included for free before that too. But just to give you an example, maybe you're interested in these different performance systems. You could even select everything in here. There's nothing to stop you from doing that. But for time's sake, I want to make things a little bit faster here. So maybe I want to test all these performance systems to see what trades the best on my market. And so for you guys, you know, I think I went in here and maybe I just want to test them across the FTSE 100, or maybe you want to test everything in here. You can do that. That's going to take quite a bit longer. Again, for time's sake, I'm just going to show you guys an example. Well, actually, let's not do the FTSE 100. when I'm selecting 80 of them. Maybe that's more something like if you wanted to test that MACD across the FTSE 100 to see what in there performs the best with the MACD. That's a really good option. For this, because we're doing it in the reverse, we're going to test 80 different trading systems. I'm going to just say that maybe you already know some securities that you do want to trade. So I'll click a handful here. And I'm going to, you already saw earlier the trade options here that we had, where you can put in your account size and everything. There's also this called trade execution, where you can put in if you're buying on like the open, high, low, or close, etc. if for some reason you wanted to change those. But I just have realistic market prices checked here. And what this will do is, like, if I'm on a daily time frame and I get a signal at the end of the day's bar from my trading strategy, well, I'm not buying likely at the end of that day. I'm probably buying it at the morning of the next day. That's what realistic market prices does. It's buying on the next bar. So it doesn't have to be a day, but just the next bar. But maybe too, like I often will at the very end of the day, right before the markets close, go in and do a lot of my scans and just consider whatever that price is 10 minutes before the close to be my close, just if I want to get in or out of my trades at the end of the day instead of the start of the day. That's an option too, but we'll just leave that selected. And I'm going to hit start system test. So this will be testing 80 strategies against 5 different instruments, again, just for time's sake here. On a daily time frame. I'm going to go ahead and click start. And now you'll see the system tester is going through these pretty quickly. So it's testing all these different strategies that are selected up here to see, okay, if I utilized on this, and just to give examples, a lot of these, not all of them, but a lot of them will give you the description if I hover over it. So if I wanted to look at the 80-day Bollinger Band and run a test of that, this will highlight strong persistent trends, which show the potential for dramatic price movement over relatively short periods of time, 2 to 4 weeks. Often they'll explain the entry and exit conditions within these system tests here. So just something to keep in mind when you are actually going through these and selecting them. But you'll see that's already done. So we've already tested 80 trading strategies on these securities that I randomly selected, but that maybe they were securities you knew that you wanted to trade or that are in your portfolio right now. And you want to see, hey, I'm holding these now, but maybe I want to start using a different trading system on them. This is a good way to go about that. And also, so you know, I loaded 1,250 records, oops, and that is normally about 5 years because there's on average about 250 days in the trading year. And I just closed that down. I'm going to go ahead and open my report back up from today right here. All right. And obviously you all saw I selected random systems here and random securities. And this could even tell me, hey, a lot of these securities did not, or trading strategies didn't perform well across this basket in the time period that I chose, but a lot of them did perform well here. And so just for an example, I'm going to, oops. Oh, I wasn't scrolled up to the top. That's why I was getting confused. Just for an example, I'm going to click into a random one here. Oops, did that again. Oh, sorry, I know what I did here. I accidentally selected just one of the reports and not the entire report that I had just ran. Let me try that again. It says canceled on that one. So I think that's actually the most current time. Here we go. This is the one I just ran with you guys. Sorry. Sorry about that. All right, so let's go in. This is listing all the different systems. So here's the like 80 different systems that I ran over here on the left. And then if I click into them, it'll tell me that specific system. And then here's the 5 different securities I traded and how that system worked for each one. Sorry guys, I'm getting myself a little thrown off here, but that's how that works. Let's go back into all of my results here, and I can sort this by the percentage gain. This is what I was looking for. So it looks like honestly about half of those trading systems on those 5 randomly selected securities performed well and about half of them didn't. And okay, that's totally understandable. What this is data, and this data tells me, hey, these trading strategies down at the bottom of this list, these do not meet the personality of these red strategies. So I know, okay, I probably don't want to trade this trading system on that. It's okay to see red and green here because this is designed exactly for that purpose to tell you which one of these perform well with these securities and which ones don't. Because some securities are traded differently than others. There might be, you know, certain, it could be due to the sector. It could be due to, you know, just how other people are looking at that security at that time, etc. So this is data. And this is exactly the type of stuff that we want to see. What I do now know is that the performance system bull power, bear power 4 strategy had the best performance out of these 80 that I selected when looking at all 5 of those securities. And then if I double click on it, let's actually go back one. Okay, this is fine. Yes, now if I double click into it, I can see the summary where it's telling me where I ran the date and it tells me the amount of profit. So on my $10,000 account, I made $3,542 with this specific system. It'll tell me the number, my initial equity, my trade profit here, the trade loss, how much I paid in commissions or interest credited, etc. And then also the final equity afterwards. You can also see the total number of trades. So this one had 78 trades. That was 38 long and 40 short. You can also filter this to maybe only take longs or only take shorts if you wanted to. It tells you the average amount of profit, the highest profit, the lowest profit, and then same with the unprofitable trades as well. So you get all of this information right here kind of at a glance. You can even take it a step further and go into the orders, and I can see every single trade that it executed here and the position and the position size that it took, because over time, that $10,000 I initially started with, you know, is going to go up or down, whatever it may be. And then my new trades are based on a percentage of that because that's what I selected for it to do. One thing I really like to jump into is this equity curve here. And this shows me exactly that, the equity over time of that. And one thing I like to look at with my equity curve is I like to see it over time be going up. Maybe one of these most profitable systems, and I'll open up the equity over time, and it's up and down and up and down and up and down because maybe it's taking really big wins and then really big losses all over the place, and it might just be ending on a really big win. This one's actually, I would say, pretty decent considering it definitely has been up and down over time, but lately it's been consistently more up. I might like to see this continuing to go up. It did kind of flatten out here for a period of time, but that's one feature that I really like to go into and look at. I keep closing this down. And I can jump into another one too. So the PS relative system. So if I look at this one, it tells me, okay, based on the 5 securities with that trading system, 3 of them were profitable, 3 of the securities, and maybe I should have used a larger basket of securities too and selected them. This was just an example to show you guys, okay, this is how I can identify the trading system I want to use, is by testing all of them, all the trading systems that we might have or that you acquire elsewhere and put into our software, and seeing how they perform on the securities I know I want to trade. Or this also works in the reverse. You can select all the securities that you like. So I could select like the entire FTSE 100 and then say, hey, I know that I only want to trade the LCI SNR bounces or something of that nature, and then do a system test with just that one trading strategy across a basket of securities to see where that performed best. And just very, very quickly, I could do that with like my MACD, and we'll do just the MACD system across the entire FTSE 350 here. Same thing, 1250 records. Do you want, maybe I only want to take long trades with the MACD though. So that's what I've done there. I'm going to hit start system test. And this will get jumping. Sometimes when I'm presenting, it goes a little bit slower over the internet here. But any moment, this will probably just jump up to being completed. There it goes. I don't know why we had a bit of a delay there. So this is the reverse way of kind of looking at it. And again, just for time's sake, I've selected a smaller amount of securities and things, but you can really do this to get an overlook. You know, a few times a year, I might kind of create my own trading universe. Like I'll select securities that are just with a scan, sorry, that's just within a certain price level and has a certain amount of volume and et cetera, and that's maybe had a certain percentage gain over a section of time. And I can run a scan to get a list of, like, say, 1,000 securities that meet all these basic criteria. And then I save that as a custom list and I run my daily scans across that custom list every day, or maybe I just run them across my portfolio. Lots of different ways to do this is just kind of what I'm trying to cover here. But let's go ahead and look at the results. So this is the other way of doing it. I already know my trading strategy, the MACD. Now this time instead, I want to see, hey, what does the MACD work the best on? And this will, again, shows me that data. So the MACD had the best performance over the last 5 years on the Kano's group and on Premier Foods and et cetera, these here. And then same thing, I can double click into it to see the report. Again, I can click into my equity. See, this is one of those equity ones I was giving an example of that, all right, that showed really well here. It had really good performance, but it looks like there were just a couple of really good trades here that kind of brought it up, and then it hasn't really been doing much of anything since then. So actually, this additional information that I'm getting right here would tell me maybe this isn't, maybe that MACD isn't something I'd want to trade on this. So there's a lot of ways of going about this. I'm just showing the real basic here for you guys, so that you know these tools are here. And not only do we have the Explorer and the System Tester for things like that, we also have like our Forecaster, which I haven't touched on at all, where you can go in and see where the price of a security is most likely going based on trading strategies, based on how, you know, what's happened when a buy or sell signal has occurred in the past around the same types of conditions. And this will give you a visual kind of heat map of that. We also have tools for just like looking at your securities, looking at the performance changes over time, looking at options. I know we're Metastock, but we do also cover options, futures, forex, all of that. And just because I don't want to go over on my time today, I think that's kind of where I'll end being inside of the software. And just really quick before I sign off for the day too, in case you guys are curious about how much Metastock costs or how you can sign up, Metastock daily chart. So if you're just looking at the daily and above time frames, you still get access to all the different power tools and everything I went over today. It starts as low as $59 a month, and as part of this summit, we are doing a buy 1 month, get 2 months for free. So you can have a 90-day trial of our platform. And this also comes with not only training materials and ebook videos to help you get started, but we give everyone a free one-on-one session where we do a full hands-on demonstration in the software with you. We help show you how all these different power tools work, and this is at no cost. A lot of other places will charge, you know, well over $100 an hour. We do this for free with all of our clients that want it, to help you understand the platform, because once you understand it, it's very likely it can help you to perform better. So yeah, that starts as low as $59 a month. We also have Metastock Real Time, which gives you intraday time frames, plus a whole nother platform we didn't even touch on today, where you can get live news, fundamentals, financial reports, look at you know, so much more data. We stayed on the technical analysis side. We also have all the fundamentals for you too. That actually starts at about $210 a month for Metastock Real Time with Zenith, or for our forex package, or $265 a month, just because there is so much more involved with that. Same thing, you can get a buy 1 month, get 2 months for free at metastock.com/round-the-clock 3-for-1. And kind of like I mentioned before, you'll get help with your installation if you want it. You'll get free unlimited support. You'll get access to hundreds of our videos where people that are far more experienced than me in Metastock and trading can also give you tutorials as well. And yeah, go ahead and just check out our website, metastock.com, or to get the offer /round-the-clock 3-for-1. And I think that's going to wrap it up for me today. Unless there are any questions, I'd be happy to answer those for you guys.
Bobby, thank you for that great presentation. I definitely would have started with the forecasting. Is that? I mean, I guess that must be the bit that the tool that everybody gravitates towards.
Oh, the forecaster as well. Yeah, so it is very popular. For time's sake, I didn't get too much into it today, but maybe next time I'll showcase that. Yeah, no, the future's always interesting for traders, isn't it? Really? So yeah, of course. Look, listen, it's a big package. I know I've worked with some companies over the years that offer similar approaches to analyzing, being able to understand your analysis, and it offers you that. I also noticed that the package is not a browser-based package. It's a package of software that you can. I mean, that was very quick, the way you're downloading and filtering these hundreds of stocks. So yeah, it's something that's robust. It definitely is. It's very robust, and there's a lot of ways to utilize it. And having been around for 40 years, we've definitely found ways where it can help pretty much any trader. Fabulous. Well, there's that link is in the chat box, guys. Anybody that's not used Metastock, here's the chance to get the 3-for-1 offer, and hopefully we can invite Bobby back as well and have a look at some of the other. There's so many parts to it that's there. You could always spend a whole webinar just on one particular part of it. I get that, so it's difficult to focus on it all at once. Listen, thank you for joining us, Bobby, and again, thank you for the support of the event. I know quite a few of your people have come through onto the event, so we really appreciate that. It's great. Well, hopefully we can do it again sometime. Of course, sounds good. Have a good rest of your night, Simon, and everyone else. Thank you very much. Thank you. Take care. Bye. Fantastic. Okay, Bobby Hillier there from Metastock. Metastock is just the best, says Dan. Clearly, it's been working for you, which is great to hear. And we are moving into our final session of the day. Just again, a quick reminder to those of you didn't get the link before. Round the Clock Trader has been going for some years, and all or a majority of the good presentations have been recorded and edited and put into an archived website at roundtheclocktrader.com. And we have a special link where you can bypass the $49 lifetime membership. It gets you in and you can access all these videos. I think there's about 150 there at the moment. You'll find all sorts of speakers, some of them that spoke today, lots of other different ones. In total, I think there's about 80 or 90 different speakers. So please use the coupon, just click that link, and that'll sign you up into the Round the Clock Trader website, and you'll have access to the video club part of that. So great, we are moving on. Dan said I'm still here, which is great. We're all still here, and quite a lot of us are still here actually, which is great. Last presenter is my friend Charlie Burton, formerly one half of EasyTrader, now 100% of Charlie Burton Trading. So really delighted that Charlie's spending an hour with us to round off this Round the Clock Trader. Let me go ahead and make Charlie the presenter, and we will share screens and hopefully be able to hear and see Charlie's screen. Okay, I'm looking at a chart. That's good news. Great.
Okay, you should be able to hear me.
Charlie, great. Yes, good evening.
Good evening. Yeah, so graveyard shift again today.
Saving the best till last, I like to say.
I doubt it very much. But,
great you're here. We actually still have a good room full of quite engaged people who have above average experience in the markets, I would say. So we've got some people from the US, we've got some people from Scandinavia, obviously some of us Brits are in here as well, but it's been a really good day. We've had a look at some of the stock markets, the forex markets. One thing that's come out is that the skill level, I think, is fairly high. People have got good systems that they enjoy using. So we will be interested to hear a little bit more about Charlie Burton trading, which is why I invited you here to tell us a little bit more about what you're doing. I sort of gave you a title. One of our previous presentations was more or less how and why you trade, because it's part of a presentation that you've talked about before, which was just really to try to transmit to people why you got into trading, why it works for you, and why it can work for other people as well. And just through that, we can tell people a little bit more about what you do and how you help other traders, because you've been working with traders for 20 years. I don't want to age us both because we've known each other almost that long as well. But perhaps we can maybe start. We're going to have a look at the live markets at the moment, just to get started.
Yeah, we can do. I mean, I'm fluid as to whatever we do, so it's fine. I haven't got a. There's my presentation. Just so you know, there's my beautiful presentation for this evening. Sometimes I do a PowerPoint presentation, but I elected not to tonight because I'm going to tell some stories, and so hopefully you're all sitting comfortably for some stories there, because I'm sure through the course of today, many people have had a lot of technical, as you say, presentations, and so so I thought, when I saw the title, Simon, Simon's disappeared now, but when I saw the title, I thought, oh, how and why I trade. Oh, okay. Yeah. So, okay, I can do that. And you're right, I've done a presentation along those lines in the past, but I thought, actually, I'm not going to pull that presentation out because there's some stuff that I want to say, and we'll just go with that.
Sounds great.
Simon's like, oh no, what's he gonna say? I'll tell you what I'm gonna say. I'm gonna say I'm gonna give some home truths. It's quite nice hearing that there's some very experienced traders here tonight, because I am going to share some home truths here this evening, and which I'm quite looking forward to. Don't worry, Simon. Don't panic. It'll be fine.
This is an opportunity as well to ask people here to ask some questions, maybe over the next sort of 15 or 20 minutes. If you have any questions that perhaps you feel haven't been touched on today, if by any chance, Charlie is so experienced that he would be able to maybe help advise you on any of these things as well. So in addition to what Charlie's going to talk about tonight, use this time as an opportunity to ask any questions or any thoughts on the markets, and that will make this into a more interactive session, if that's okay with you, Charlie. Great. Yeah. Okay, I'll hand over to you. And
shall I turn my camera off now? I don't know how it works on here, or will it just appear in the corner of people's screens? Should I just?
Well, we can see your screen mainly. We can see your chart.
Okay, so you can't see me anymore. No,
small
a little bit. Okay. So yeah, how and why I trade, plus some home truths as well. And okay, let's turn that off. Right, okay, the webcam's off. So yes, I have. The reason I brought up this chart here tonight, this dollar-yen chart, is because that is going to form part of tonight's talk. And so, but before I get into that, the how and why I trade, I'm not going to give you a long resume on who I am. By all means, Google me if you want to do that. All I'll say is that I've been trading 24 years. I do run Charlie Burton Trading, which is a community of traders, a community of members. We've been running for a grand 3 months now, and I'm absolutely loving it, being able to really engage with people in a way I've never been able to do before. So And I also manage money as well professionally. So I have had a fund now for 3 years, a fully regulated, FCA regulated fund there, and I manage money for investors on there as well. So, and it's very different, as some of you will know, the difference between managing your own money and then there's the responsibility of managing investors' money as well. So they're very different approaches that you have, and then obviously working with individual traders and investors as well, which is different as well. So I'm going to explain a little bit about that. About Simon asked, the how and the why I trade. So so we'll go through that. So what I'm going to start off with is why I trade. Then I'm going to go give some home truths, and I've got a great story to tell you here this evening, which I only got told today, and this is what made me change my tact on what I was going to talk about tonight. And then I'm going to go through the how element of how I trade. Okay, so sounds like we've got some systematic traders here, and so that'll be interesting just presenting to you here this evening. Okay, so let's do the why first. Well, when, like everybody else in trading, I started, I'm sure you can see my little cursor wiggling around. I started trading like everybody else, and my writing here is going to be horrible, but this is the way it's going to be. Like all of us, I started for the money. Why else do you start? Why else do you get into trading? We all get into trading because we see it as something that we can either make money on the side, or that we ultimately would like to become. We're not happy in our careers perhaps, and so we have this ambition of maybe working from home, trading from home as a full-time profession. I never foresaw becoming a full-time trader, although I did become a full-time trader. That wasn't why I got into it. I got into it because I was offered a ticket to go on a trading course way back when, and with an American company. Simon says there's Americans here today, learning how to trade stocks and pretty much just buying stocks, writing call options against them in the late 90s there. So that was my first foray into it. I'm not going to give you I was in financial services anyway and stuff like that, but and of course, I thought this will be good. I could make money on the side with the cash that I have in the bank. I might as well get that working for me and invest myself. And so that was why I got into it in the first place. So, but then what happens if I just get rid of that? Then what tends to happen is you transition over time, or certainly I did. That trading for me had to be deeper, and I'm skipping now several years forwards. I've been through all the trials and tribulations that every trader goes through, and so I've been trading, like I said, over 20 years now. And so skipping forwards, where I'm at now with trading is, and I know this is different I'm on a different path to a lot of people. We're all on our own journey, and I do think that trading is very much a personal journey. We've all have different aspirations as to what we want to achieve from trading, whether it's a full-time job or whatever, or making money on the side. Not everybody wants to be a multi-millionaire from trading. Most people that I come across want to make money from trading, but they all have entirely different goals. I have met traders who just want to make money from trading to pay for their holidays, their vacations each year, to having traders who want to be super aggressive and do want to get their accounts right up into the 7 figures. So it really does vary, and other people are just happy to be making a reasonable amount of money from the markets at the end of the year. So it's really, really different. For me now, and I'm in a privileged position that I trade my pension money, and I do trading challenges for my trading community as well, and I obviously manage money as well. For me, it's deep. It's a deeper level than that. It's the mental challenge of trading. I often talk about this. For me, it's that stimulus that I get. So it's a mental thing for me nowadays. That I love the challenge of trading, mental challenge. It's not just about finding a setup, buying or selling, and do you make money or not. That to me is the crude, very shallow part of it. The money to me is the end result. I enjoy the process of what I do. I enjoy the mental stimulation from the analysis to the psychology of it, the fact that we all go through periods where we make money, we go through periods where we're flat, we go through periods where we lose money. I'm no different to anybody else like that, and I enjoy and I relish the mental challenge of when you're going through a losing phase. But it's also a mental challenge when you're in a winning phase as well. It's a mental challenge when you're in an individual trade that might actually be running for you and being nicely profitable, and you have to fight that urge not to bank the profit. So there's mental challenges at all stages of trading, and that's what I find the most important thing to me nowadays. Now, many years ago, I used to compete internationally in martial arts, karate, and I used to do a bit of competition karate. And again, a bit like what I'm just saying here, the competition element to me was the shallow bit. It was like the equivalent of the money part in trading. The learning the historical elements of the martial arts, to me, that was the equivalent of this mental challenge that I'm talking about within trading. So it's that depth that I like from trading. I understand that not everybody is going to want that, but I think that one thing you have to have when it comes to trading, you have to be passionate about it. I have yet to meet a single individual who has been trading for, let's say, 10 years plus, who does not have a certain amount of passion for the markets. Because if you don't have passion and you go through a losing phase, you're going to give up. You're going to be one of those majority of people who quit within the first couple of years of trading, because the going gets tough, and you're either losing money or you're flat and you just get bored and you quit. Oh, I can't do this. No one can do this. I'm out, sort of thing. Well, that's those people, isn't it? And so you have to have that passion and that tenacity to keep going when the times aren't so easy, because in trading, a large majority of the time, it's not easy. And other people might say the opposite, but I'm just going to tell you the truths here tonight. I'm going to tell you some home truths in a minute. So that's the reality. So the reality is we're in a dogfight, to use an expression from Top Gun, which I just saw yesterday, actually. So we're in this dogfight, and there's bogeys all over the place, to quote some Top Gun quotes, and we're having to fight that off. But the fight is actually an internal fight. The fight is within ourselves, isn't it? Yes, we are competing in the market itself. We're trading in the market, and that is a battle itself. But really, the battle is within us. And so if we don't have that passion and we don't embrace the mental side of it, and we're only thinking about the money, well, we've got no chance. So for me, coming back to that first statement, why do I trade? Well, firstly, yes, like everybody else, I traded for the money, but actually it's that passion, it's that mental challenge that I get from trading. I think that many years ago, I discovered that I was reasonably good at my overall approach to trading. So again, the why aspect of why I trade, I felt that from a trader mindset, trader psychology perspective, I felt that I had that that robustness. I developed the robustness to dust myself down every time I had a drawdown or a flat period, which would put a lot of other people off. I found that I could embrace that. And so, and that is something you have to be good at as well. We can all be good when a market is going up. Yeah. So everybody's a hero when the stock markets are going up and we're all making money, so to speak. But the emperor shows his lack of clothes when the stock market starts coming down, like at the moment, or when the crypto market is going down, like it has been, or whatever market is going down. That's the reality. Anyone can make money when the markets are going up. I was around at the end of the late 90s, and I saw, or I certainly heard about the amount of people who got into day trading stocks in America at that time. It was such a huge thing, people quitting their jobs. Funnily enough, nothing ever changes. The psychology of what people do in relation to the market never changes. It's just time that changes. So I found something that I felt that I was quite good at, and I felt that it was something that I had something to offer. So why do I train others? This is all comes under the remit of the title of why. So why am I even here tonight? And why have I not quit and just manage money and just have an easy life, so to speak? The reason is this, and again, this is a real truth here, because this is quite an exposure of myself. Oops, if I can actually write there. It's significance. I get significance from what I do. We all get significance from various different things that we do in life. So some people get significance from being the life and soul of the party, for example. Some people get significance from not being the life and soul of the party, and actually, for example, draw significance from having people feel sorry for them. Other people get significance from being the best at something, and so on and so forth. For me, I get significance from the fact that I do think I have something to offer, and I enjoy showing what I do, and I enjoy showing off a little bit here and there. So yes, I do get significance from it. It satisfies that need. When I went full-time trading in 2001, I left my full-time career in financial services, and that first 6 months was really, really tough, because I'd gone from a really busy career as a regional sales manager in financial services, constantly out in meetings, 4 days a week, and when not in meetings, either in the office or working from home, and making calls, and being on the phone all day. So then I went from all of that busyness to nothing. And trading is boring, and it should be boring. It should not be, as most of you know, because it sounds like you're all quite experienced here tonight. Trading should not be an exciting venture. That's not what it should be. If you get excited by the markets, I understand if anyone here this evening is relatively new, I totally get that, but you should strive to work towards not being excited by the markets. So I'd gone from a full-time career to nothing apart from sitting and staring at some charts with no interaction with people. So coming back to this, my natural desire is to interact with people, and I wasn't having it way back in 2001, but I found it by doing what I do. So it's funny, isn't it, how I managed to reintroduce significance back into my life, where people, there was a demand for me, and so that's what I did. There was a demand for me in my career, doing what I was doing then. People needed my my knowledge in that, and then as it's transpired, it's come through again over this last best part of 20 years. I've been coaching traders. So I've been coaching traders since latter 2002. But I also now, as I said at the beginning of tonight's presentation, I also get significance. So I don't just get significance, and it's been great getting significance in working with traders and feeling, basically it satisfies my need to feel wanted. Let's be honest here, that's all it is. Maybe my parents neglected me too much when I was young. I don't know, but that's what I get. But I do feel like I said, I genuinely have something to offer. But I now get, over the last few years, significance from managing money as well. So for managing investors' money, from managing money. So that's another way that I now get significance. But if I gave all of this stuff up, like I'm doing tonight, and my company, to just manage money, I would be back at square one in 2001 with no significance in my life again. All right, yes, I get significance from managed money, but I don't get interaction, should I say. I don't get interaction from managing money. So it's just the same. It's just trading. It's just trading. It's great. I love the, like I said, the significance and the responsibility of managing other people's money. And I love that challenge of making investors money. So again, it's that significance thing again, that I know that if I do a good job, which touch wood so far, I've made money every year that I've been managing other people's money, but I get that enjoyment from knowing that I'm making my investors money. So again, it satisfies me at my core, and so I get that from the various aspects. So that was when I saw the title. Yeah, why do you trade? Well, of course I trade to make money. Of course, that's at the superficial level. But for me, trading is full immersion. I live and breathe trading. Very often, I might wake up in the middle of the night and place a trade. Actually, see, look, I said very often. No, it's not that often. But I do wake up at times in the middle of the night and trade. And I certainly wake up very often and check the markets in the middle of the night. And you could say, oh, I disagree with that, Charlie. Yeah, I disagree. I think if you can sleep through the night and get a good 8 hours, that's far healthier. But there are times when that doesn't happen for me, and I'll be wide awake and I will go and check the markets because I live and breathe it. This is my life, and I'm sure it's very similar for many of you. When I used this example before, I'll be in the car with my wife driving somewhere, let's say at the weekend, and we're having a conversation, but in my mind, I'm also thinking about, right, what's that euro dollar up to at the moment? And I'm processing what might be going on in the markets. I'm doing it all of the time because I feel that I know that repetition is key to what I do. Repeating the analysis that I have, going through it in my mind's eye regularly, if I'm in positions, what I'm going to do with them, why I need to hold on to them, or whether I need to hedge, and do all these different decisions that we have. And so it's a full immersion thing. Now, I appreciate that for a lot of traders, they haven't got the time to be fully immersed. They've got maybe young families, they've got full-time jobs. Trading is something they can only do part-time. And that is fine as well, because my job is to take some of that, all of my immersion, all of me living and breathing it, and then passing that on to other traders, and so that they don't have to necessarily. That's my job. Whether it's an investor, the investors don't have to worry about it, or even if it's traders within my community, that's my job, is to pass on that and help them on their journey. So anyway, so there you go. So there's a little bit on the why I trade. Now, I'm now going to go through some home truths, okay? But I'm going to start off with a story. And this story, as I just alluded to, actually I got told today. I'm in like probably some of you, I'm in a fortunate position that I have good relationships with several brokers, but also I have good relationships with my regulators as well. So I'm in this privileged position that I do get to hear about things that go on, whether it's just what retail traders do and what retail traders get up to. And brokers they're not going to tell me names. I'm not getting told things like that, nothing personal, but brokers will share stories with me about what their customers do. But I also do get told about sometimes what other money managers do as well. Now, we know what retail traders do. If we take this chart here of the dollar yen, so I'm on the dollar yen here, I can look at any chart like this, and if you see a run like this, a straight run like that, I can tell you right now that there will be thousands of traders all around the world who will have blown up accounts in a run like that, because what traders tend to do is the opposite of what the market does. Yes, most of us are aware of that. Anyone who is experienced is well aware of that, because the natural tendency of the masses who get into trading is that when they see a market going up, they think that it can't possibly go much further and it must turn over. And so then they start shorting. Maybe they've got a stochastic indicator which has got overbought, whatever it is. That's if they are technical. They may not even be technical. Remember, a lot of traders out there, they're not looking at a lot of stuff. And so maybe not even that technical. Maybe they are. Maybe they're using moon cycles and their moon cycle has told them that the market has topped out. And I'm not joking on that. Traders do use moon cycles. So whatever the reason is, but people do it all around the world every single day. And you get a move like this in dollar yen, like I said, and I can guarantee that there's people all around the world that are doing that. However, what about the money managers? Well, they're the professionals, aren't they? The money managers are the pros. They're the ones who are long through this. And of course, there will be plenty of money managers who will be long through that. And there will be plenty of good retail traders, independent traders, who will also be long through this. However, there's a dark side because there are money managers who don't do that. And so what I'm going to do is I'm going to share some information with you right now, like I said, home truths. And this applies to this money manager that I'm about to tell you about, but this is what goes on with your average retail trader all of the time. So the story is that this money manager blew up back in April. Okay, that's the short part of this story that I was told today. Trying to short dollar yen from March. Started shorting in March and no stop losses using martingale. And so martingale is just getting into a position. If it goes against you, just adding to it and adding to it and adding to it. And as this dollar yen just carried on going higher, he carried on adding to his positions until his investors all hit their 50% automatic stop out. So his investors lost anywhere up to 50%. He had prior gains, so but certainly 50% from whatever their peaks were. But in the words of the broker that told me this story today, actually I can't use the words because he swore when he told me the story, but he said yes, the investors lost a lot of money. So why do they do it? Why do these money managers do this? Why do they go against the grain like that? There's nothing wrong with shorting dollar yen. If I just move my pen a little bit here, there's nothing wrong with shorting dollar yen here. There's nothing wrong with shorting dollar yen here. Nothing wrong with shorting it anywhere up here. If you use a stop loss and you have a trading plan with a stop loss and a target, or a trade management technique, whether it's a target based or whether you use trailing stops or whatever it is you use, that is a given. But why do these money managers do this? Well, how does a money manager go about making their money? Okay, so let's get to the nitty gritty. So they will I know this because I'm a money manager myself. So I manage investors' money. So performance fees. Oops, if I can actually type this or write this out. Performance fees. So so a money manager will make money if they're making their clients money. So normally they'll charge a percentage of the profit. Okay, so they are incentivized to make money as regularly as they can, because a lot of these money managers, they are charging these performance fees based on monthly performance. Okay, so there's an incentive there. It's a bit like your average retail trader who quits their job and says, right, I'm going to just trade the markets, and then with no other source of income coming in, all of a sudden the pressure is on them to perform and to make money. Now, once that pressure comes in, that will affect that average retail trader's ability to have rational decision making in the markets. Do you not think that the same thing happens to money managers? I'll explain why I'm different in a minute in that regard, because people can say, well, surely you're the same then, Charlie. Well, I am the same, but I'm not reliant on my money management to make an income. And that's the difference. You have these money management firms whose sole purpose of that is what they do. And so they are geared up to have to make performance fees, which means they have to generate alpha. One of the easiest ways of making money on a monthly basis is to use a martingale based systems. Okay, a martingale based system of trading. So like I've just said, selling when the market goes up, adding into the position it goes up several times. Most of the time the market will retrace. When it retraces back down, the latter entries are nicely into profit. Money manager closes out and makes a little bit of profit, moves on to the next trade, and they can get away with that for long periods of time. There's a book by John Coates called The Hour Between Dog and Wolf. The Hour Between Dog and Wolf. And in that book, they did a lot of studies on bank traders. And they found that bank traders who used techniques like this and over leverage, without fail, even if they had great 2-year performance, 3-year performance, 5-year performance even, they ultimately all blew up. Because if they're trading with too high a gearing or using martingale techniques, there's always going to be that time when there's what we call a black swan event. A black swan event. And a black swan event is an event that happens which is outside of the historical norms of your system, let's say, of your back-tested system, your whatever system. But the thing is with black swan events is they actually happen more regularly than people think. And a black swan event might be just something like this move here in the dollar yen, which was a pretty fierce run, going from what, 116, let's call it 116 at the breakout down here to 132. That's a 1,600 pip run. That's a huge run in the space of sort of 6 weeks. So, but these things do happen. So you've got your motivated money manager, motivated to make money, to get his performance fee. And he's going to go and do things like that, which most of the time he'll get away with. And he'll be making these investors their money. They'll be making 2% a month, 1 month, and 5% another month, and 8% another month. And the investors are in this are thinking, this is amazing. But ultimately, there's an elephant in the room. And the elephant in the room is that the money manager is trading with a completely flawed system that will ultimately come back and bite him. The problem is that the money managers out there, they're in it for themselves. They're in it to make their money, that generate their profits. When they go and lose at the end of this, so when the system blows up, like this money manager just happened to this money manager just in April, what's he going to do? Okay, so his fund is here. So the fund is now blown up, and I know what I'm going to explain why this happens and what's happened here. Give him 6 months, he'll rebrand himself, create a new fund, and off he goes again, attracting new client money into the fund. And this is what goes on all of the time, attracting new client money into the fund, and away he goes again. If he gets lucky, he'll get 9 months performance, maybe 18 months performance before he has a big blow up. In the meantime, he's collected all of his charges, his performance fees and everything else until that one blows up, and then he'll jump again. And I can tell you that that's what happens because I know this money manager, and I'm not obviously going to disclose any names. When I say I know him, I just know his name, because funny enough, one of my own customers invested into this very money manager 2 years ago and lost money in a very quick period of time in exactly this type of move in the market. My client was fortunate that he managed to get some compensation and he moved on, but so did the money manager. And then he just moved on to his current fund, or the fund that he's just blown up, and so he's now done it again. And no doubt this same money manager was probably doing it 2 years before that as well, and so on and so forth. It's an ugly world that we live in within the trading community. And as most of you know, there's a lot of charlatans out there in all aspects. Whenever it comes to money in the world, there are. And that's just the way the world is, whether it's stocks, trading, property, crypto, whatever. We know that because the market attracts greed. So why do people go into that money manager's funds? Because his performance very good over the period that he discloses, and of course that attracts new investors in thinking, oh, this is fantastic, I can make all this money. And if they're lucky, they make a bit of money for a while, but at some point he's always going to blow up, and that's what happened there. If they're lucky, they got in down here, they made a bit of money before he blew up, and all he ends up doing is giving back all of the gains and maybe a little bit more. So and that's the reality of what goes on. And this money manager, like I said, I was told this story. Well, I say this story. I was told about this money manager literally today and what had happened and what he'd done. But because I know this person, I know this name of this person, I know exactly what he did 2 years ago. What's he in it for? He's in it for himself. And so I guess what we all have to look at is, well, you know, when we are looking out there and we're ascertaining, you know, whether we're going to invest or whatever we're going to do, we got to make sure, well, what is this person's agenda? So when it comes to my, as I've already said about my funds, I did it because I get significance from it. I enjoy the challenge. I don't even charge much. And I'm not even trying to, I genuinely am not pitching to you my own fund here tonight. I'm just explaining what makes me different. I do not have to make money on my funds in order to pay myself. And that is a different setup to what this company, for example, and others out there, and I've heard so many stories about them. I've heard these money managers as well who just do lots and lots of trading to generate commissions, and they don't even care if they make any outright performance because they're making loads of money on the commissions. I just plod along. I just plod along on my fund. And my broker said to me today, he said, yeah, Charlie, said, you're quite unique. And they said that you're not in it to try and make loads of money. And because of that, I don't care if I go through periods in my fund where I don't make any money for 6 months or whatever. I don't care. I'm in it for the long run, and I'm in it for genuine trading, and genuine real trading will include periods, sustained periods, where you don't make any money. But I don't care about that. Or what I do care about is coming back to earlier on, following my processes, like I said earlier, and enjoying the mental challenge of those periods. But it doesn't matter that I haven't made money during those periods. If that's the case within my fund, fine. I'm not going to blow up by going and betting big on black. Unfortunately, that's what we see. We see it with big hedge funds as well. We've all heard stories this year about some of these big hedge fund blow-ups as well. So it happens all over the place. So maybe within the industry, there needs to be a way of managing this sort of stuff. But we see it in retail level, of course, as well. Retail traders will be doing this type of thing as well. But you'd think that that money managers would would be better, but no, of course not. When it comes to money, some of them are in it just for the greed. So there you go. So some the reality of trading, as we know, is what 70–80% of traders lose money, and the lower percentage of traders actually do make money. Most traders do not sit there making 5% every month like an income. It doesn't work that way in my experience. Don't get me wrong, you can have some really nice runs where you do seem to make regular returns. But again, in my experience over the years, it doesn't work that way. You'll have some hot periods, you'll have some pullback periods, you'll have some squiggly sideways periods, then you'll make some hot money again, pull back, and overall you end up, your equity curve is going higher, but it's not a smooth process. That's the reality. And we have to put up with the squiggly periods. We have to put up with the drawdown periods. And that's where it gets people. That's where the market wins a lot of the time, because people do end up throwing in the towel. But those are the realities, in my view, of trading. All I can do is work with traders and explain this and help them with that, because in my view, coming to the hows of trading, trader mindset is more important than any strategy out there. I don't care about strategies. I have strategies, and we'll move on now to the hows. Yes, I have strategies. Of course, we all have to have strategies in the market, and a methodology, whatever you want to call it. And I'll talk to you a little bit about the hows right now. But and again, with some of you experienced traders that are here tonight, you'll all contest to the fact that doesn't matter what your strategy is, if you don't develop your trader mindset, you've got no chance of making money in the markets. I can tell you that right, no chance. Let other people tell you that, oh, just follow this strategy for 20 minutes a day or 20 minutes a week or whatever. No, you won't. You've got no chance. You have to develop the trader mind, because it's the trader mind that can put up with those flat periods that you're going to have in the market. I don't care what other people tell you. Whatever they tell you, if they tell you you're just going to make money like that, they're lying. They're not traders. So the mindset element is putting up with the sideways, putting up with the drawdowns, and even putting up with the nice purple patches, because purple patches are quite often engulfed in uncertainty as well. Is this my new norm? Is this going to last? How long is it going to last? When am I going to have my next losing trade or period of losing trades? I don't want this to end. See what I mean? Even when you're having a good spell, the demons are still there. So without the trader mindset and being fully immersed in that, it doesn't matter what your strategy is, it will come to get you. As I said, the demons will come to get you. The uncertainty will prey on you once you do have a bit of a sideways period or a bit of a down period. All of that uncertainty will manifest itself unless you can completely be at one with the mindset side of things, which is not easy. And that's why I say that trading, for a large majority of people, it's the road less traveled. It's not an easy path. But anyway, we'll come on to that. So how do I go about my my approach to the markets? And I'm conscious of course, of time here. And like I said at the beginning tonight, I'm not going to be here, unfortunately, tonight to show you a strategy. I'm sure you've been, for those of you who've been around today on many of the other presentations, I'm sure you will have been given all sorts of technical strategies or approaches or techniques throughout the day. So I don't need to do that. What's the point of me doing that and just doing another strategy? But what I will say is that one of the biggest things that helps me in my trading outside of mindset, and of course there are all sorts of tricks that I use with regards to money management, adding into trades when they're going in my favor, all that sort of stuff. But it's multiple time frame analysis. It's as simple as that. It's taking a chart out to a quarterly time frame or a, oh, that's no good because I've got to change the feed here. So let's just change it to the euro dollar. Actually, I've got it on a different feed. So whether you're going out to, or what I will do is go out to a quarterly time frame, I will then work my way down to a monthly chart and then to a weekly chart and then back down to the dailies or whatever that the time frame that I want to execute off. So, and it's not that everybody has to go out to a quarterly and monthly chart. I'm taking this back to a daily now. Even if you're an intraday trader, when I used to do a lot more intraday trading, I still used to do time frame analysis. I'd still do a top-down approach. I'd still go out to the daily, then come down to the likes of the 4-hour charts and the hourly charts, and then work my way down. And so one of the biggest things that that I use in my trading is multiple time frame analysis. That helps me identify areas of support, resistance, and all of that stuff that you need to do, I need to do within my analysis in order to then use the appropriate strategy, so to speak, that I'm going to use. So I have a range of tools. So it's like having a toolbox, and I'll get what I believe to be the appropriate tool out for the market condition that I'm trading, or for the market behavior, what's going on, whatever the market is I'm looking at. Then I'll get what I believe to be, as a result of the analysis, the multiple time frame analysis, then I'll take the tool out of the toolbox that I have, and then apply that tool. And that is in essence what I do. Very, very high level. I know I'm not giving anything away here this evening, because I wanted to talk about what I believe to be more important things that go on in the market. Like I said, some home truths. Most people fail at trading. That's a home truth. Most people do. But the few do make it, and it's those few. What is it that makes it with them? Most of the time, it comes back down to that stubbornness to succeed, because it's that sees people through all the dark times, and they continue and continue and continue. And so, finding the latest hot strategy, I just think, is pointless. It's just, the holy grail is within you 100%. It's not the next strategy. So what I do is analysis, and my analysis is not just technical analysis. I'm aware of the fundamentals. Of course, we have to have a fundamental awareness of what's going on in any particular market and globally what's going on, and also from a sentiment perspective as well. So if I can combine what I'm seeing from a sentiment perspective and from what I'm seeing from my technical analysis perspective as well, in conjunction with a bit of money management and trade management, away you go, and you make, I'm not saying I was about to say, and then you're making money. Well, you are over enough time. But even within all of that, I still, because of things like risk and reward, I'm still only going to be right a certain percentage of the time. I don't trade with high win rate strategies. I trade with an approach which tends to have a success rate of less than 50%. But I'm comfortable with that, because when I do win, when I do make money, I make more than on the trades that I lose. So to finish off here, before if there are any questions, it's not the easy path, as I've said, what I do. But then again, I don't want to sell you anything here tonight. I'm not here to pitch anything to you. I'm just here to talk to you. So it's not the easy path, but if you're honest with yourself, there is no easy path when it comes to trading. Let's all be honest here. The reality of trading is we have to roll up our sleeves and we have to work a bit at it. We can't just do it like some people say, 20 minutes a week or whatever. We've got to immerse ourselves, whether it's mentally or even, you know, to an extent, obviously the technicals are important, but it's more than just the technicals of looking at a chart. Same with investment, you know, it's no different. The reality is investing money as well. You know, we get suckered in, like I said earlier on, with that money manager and other money managers out there. But the reality is, you know, if they're promising to make you a fortune, you're better off walking away. Okay, so that's my little presentation here for you tonight. Hopefully it's not too pessimistic. I don't mean to be, but it was just, I wanted to do something a little bit different because that's what I tried to do at the end of what is probably a long day for many of you.
I think it was very good, Charlie. And yeah, already a couple of people have been saying how much they've enjoyed that talk. Very thought-provoking. Indeed. Very thought. The answer lies within us, not, you know, the chasing the holy grail of different strategy. I think there's a lot of sense in that. And you have been in and around the markets long enough to know more than most what constitutes someone that's going to win or not in the markets. Yeah, just getting a little warning sign coming up. So thank you very much for that. I think you have rented us. You've left us with a lot to think about, and I guess it does wrap up what we have been doing today, because we've been very excited looking at different aspects of business. But the answer is none of these things will really make you a successful trader unless you yourself have the right mindset and the determination, is what you were saying, just not to give up. Make sure you don't risk too much, put in the hard work, do the analysis, balance it with other things in your life, I guess, as well. Putting it all in, both feet in, can make it tougher, can stack the odds against you as well on that sort of mental side. So thank you very much indeed. We'll do more soon. We'll do more soon. I'm going to let you go, and I'm going to let everybody else go here, because we've been here since 10 o'clock this morning, so it's been a long day. So thank you for finishing off our event. Thank you everybody here that's joined us today. There will be some emails coming out with links. It is all recorded. It will be one big unedited 10-hour recording that you can access through the same registration link as you came onto this live event. I think it normally takes about an hour or two to crunch away and be ready as a recording as it processes. But after that, you can go in and you can just scroll to every sort of hour. Every hour we had another speaker starting, so you can find who you want to replay. So thank you very much. We'll keep you in touch with a couple of emails, let you know when we do our next event. Obviously, Charlie will keep in touch as well with any other events that we've got happening with Charlie and the other speakers as well. So thank you very much. Hope you enjoyed it. Thanks, Charlie.
Thanks, Simon.
Speak to you. Good night, everybody.